Hello, Peter.
Franklin, my friend, how are you?
I'm pretty I'm
I'm
pretty
hearing a
good.
little echo. You okay?
Oh yeah, I'm good. What you're hearing an echo from me. This is Pete's working from home, and so this is our first remote and in studio setup. Is it sounding okay? Is it looking okay to you, Pete?
Yeah, you look stunning. I
Wow.
mean, the Vineyard Vines thing, it's, it's elegant but sporty.
It's very
I, li-
worn. It's very worn for sure. There's like
oh,
tassels coming off of it.
that's the way you treat a free gift.
Pete
I
gifted
would
me
find
that.
that very.
Pete gifted me
Oh,
his
no, no, no,
old
no.
quarter
There was
zip.
no gifting.
Oh.
It just was all of a sudden one day he was wearing it. He looks over and he goes, "It's mine now," and that was the end of the discussion.
It was
So.
cold, and you weren't in the office as a day like today, you know. And so, when the cat's away, the mice will play. And I took
Yeah.
the quarter zip, and I think I wear it. I think I wear it better than you, so I'll just keep it. Plus, you have like a
Okay, so
million of these.
So that changed dramatically from it was a gift. We saw see this guys, this is the pathology of my daily life from it was a gift to I stole it, you weren't here, and now it's mine. This is a very constructive yet tragic pathology of
There's no truth. There's no truth, Pete. But yeah, I do have the quarter zip. Pete's working from home because he's about to jet off to L.A.
big show in LA. Looking forward to doing that portfolio construction with Tom and the team. So Jamal, Katie, me, Nikki, and Mike Butler will be out there, and Julia will be there too.
Oh,
So
cool.
it should
Nice.
be really, really exciting. It's a great Saturday morning. Cover a lot of ground around products and construction and opportunities, and you get a really interesting take from everybody. And of course, the creator comes in at the end and does a fantastic putting it all together, making it
He's
actionable.
the headliner.
Um, yeah, it's exciting. It's a lot of fun. We have a great game at the end. I don't want to spoil it, but it's a lot of fun. If you're in LA, you get a chance. I I think we're sold out, but
Just
drop in
email. Just
and
email Pete. Just email Pete, and he'll
email
get
me.
you
I'll
in.
find a way. Yeah, I'll find you a way to get you in. Yeah,
What's going on in
very
LA
good.
tonight? Maybe nothing. The Dodgers, they just beat the
Oh,
Mets again.
I got a whole thing planned.
You got a whole.
Glenn has given me a Glenn has put together a whole rave treasure map for me of I'm going from
Oh.
rave to rave to rave.
Oh,
So
okay.
I'll land Friday this morning or Friday afternoon around noon, and I guess there's a rave at a McDonald's at 1 o'clock, and from that on, all the way until the show starts at 8 in the morning tomorrow, I will be working the rave.
That's your
So
one move. You do that one move.
that's all I got. That's all I got.
Yeah, you couldn't write this stuff. The Spy Kids, what they went to a rave at a Portillo's last weekend.
The Spy Kids are amazing. They really are something special. But speaking of Spy Kids, now how was wine and art night? Again, the I left early to get some organization done, and basically I was told, "Why are you here so late? You're working too hard," which is basically we want you to go. So
Well, the
the
other
jailer,
a couple
the
pieces of
jailer's free.
context. The other cats, the other CEOs of different businesses here were off for different business reasons in different places of the country or whatever the heck's going on. And Pete was like the last authority in the room. And it was like the market had closed. It's like 3:15, 3:30. And yeah, we're all kind of looking around like, when when is this guy going to get out of here so we can relax for a second? And then you did leave. We had the art party, but yeah, the Spy Kids. One of them is wise beyond her years. Bridget, she at like right at 3:45, 4 o'clock, as the people they're opening a bottle of wine to have this little Thursday after work shindig. She is like, "Oh, I gotta go," and she doesn't even say goodbye. She just walks straight out the door before anyone can say like, "Oh, there goes Bridget." And so she is smart. I dawdled, and so I got kind of stuck in the. Glenn is explaining how the theme for this one is autumn, and Van Gogh has some autumnal works of art, and so I got stuck there for a second. But then I think they had a good time. They had some wine, and they went over to the annual whiskey event here in the West Loop.
Oh, that's right.
Yeah.
They had Jeff's Whiskey A Go-Go.
Yeah,
very nice.
That's exactly right. It looks and sounded like it was a ball. I texted Glenn as I was laying down for bed at like 8:30, 9 o'clock, and I said, "Hey man, I'm not feeling good. Gonna need you to run the show tomorrow morning."
Oh,
and
nice.
He replied, "Ha ha," and then an hour later said, "You don't actually need me to come in and do the show." So he was, as the whiskey set in, I'm sure he got more and more worried. But yeah, how was it having the Spy Kids on this week? Glenn talked to you about some gold correlations, right? Which would be interesting because gold is up 20 and U.S. dollar is down slightly.
Yeah, we are so clear of 2,700, which I thought, again, that's been an inflection point in gold. We've tried it, given back $100. Tried it, given back $30, $40. We're well clear of the inflection point.
Yeah.
So, we look at markets that are trading out of range now. 27, 23 is a pretty sizable, and the fact it's not there for, when I look at again, this doesn't make me become a momentum trader, but when I look at something hold a new range for more than a day, I got to put a little credence against that, maybe there is a new range. And where's challenge right now? The shorts. They're being challenged right now as to, whether the next leg up is 2,800 plus or not. But a little surprised to see that play through. Certainly giving Aussie a little bit of a boost. Glenn ran a great series of correlations. And again, we want to start thinking about causality and currency prices. And, one of the things you and I have talked about, what we want to do with this show is make product adoption easier. And FX is really easy to adopt. And what I mean by that is it's a binary outcome. If you buy it, it goes up, you make money. If it goes down, you lose money. There's leverage, so capital efficiency, and that means you can risk more than you put up. But the idea that Euro USD, I want people to start thinking about everything else you're trading, whether that be gold or Tesla or Amazon. It's Amazon USD. It's Tesla USD. Just don't worry about the fact there's two quotes within the pairs. It's just another tradable opportunity, and it's one that's scalable. So you can start small and you can scale into it. So because often I hear, the world of Forex is, I don't know if I'm ready to learn that. Everybody's ready to learn this. If it provides a different set of opportunities, it's easy to construct, and it's easy to engage with. We shouldn't be adverse to adding this when we look at next level diversification. And I think that understanding, if it's the fact that somebody trades Apple because they feel vested in, I love this iPhone, this iPad's really cool, and what they have on the roadmap is interesting. That gets you interested in trading product. That's great. Does that make you a better Apple stock trader? I think that's the hard part. But if you're excited about the product and you feel you've got a connection to it, that's great. We want to give you the same kind of connection to these products so you can start to employ them a little bit and start to be able to find some opportunity in them. And it's really straightforward to do. So looking at the correlations, hanging my hat in that I know correlation doesn't mean nothing's perfectly correlated. But strong positive correlations, 40, 50, 60% are interesting. It means that if gold's up, Aussie's up, not every day, but there's a play to be had there. It is another way to represent that kind of exposure. So that's kind of our goal here. And we're seeing,
what was the correlation between gold and Aussie? I honestly, I am at the edge of my seat wondering what it's been recently.
You know what? This one's interesting because it is consistently pretty strong. It was in the 40s, and Glenn ran 6-month and 3-year correlations, which I thought were great because, you can't have a divergence of correlations. In other words, you can't see a divergence. The correlation breaks down. So you've got to accept the fact that you don't get a tradable opportunity to trade one against the other. based on divergence, because when divergence happens, correlations break down. You accept that, and you look at the longer term. The one that was really light, and I think you probably would guess this one, Canada crude.
Yeah, I
Really
definitely.
old 3-year correlation, much more robust than the last 6 months. But Aussie Canada, Aussie to gold, Kiwi to gold,
Really,
Kiwi Aussie to copper.
Those were still strong.
They were within 3 years. Were within 3 months.
Really?
Yeah.
I'm actually surprised to see that because, okay, yeah, we have the USD CAD chart up here, and you can see all this US dollar strength over the course of really the last few weeks, even with the crude run up and the crude sell off. And so hard to really make a case for correlation, even just anecdotally in that. And you said the number didn't also confirmed that the crude Canada correlation isn't really there right now. This piece I am a little surprised by because what's really funny, Pete, is and correct me if I'm wrong, US dollar and gold tend to have a negative correlation historically.
Right.
Now it might differ between the pair. Maybe the Euro USD correlation to gold is more close to zero, but it's still probably positive, which means negative for US dollar to gold. But to your point, Australian dollar, US dollar correlation to gold is usually one of the more positive ones, which means negative for US dollar to gold. And so what's really funny to me though, Pete, is that if you were to look at the last several months of gold price action, and sure, you and I are watching it every single day, and we're saying, "Oh man, it's having trouble breaking 2,400. It's having trouble breaking 2,500. It's having trouble here recently breaking, 2,700." Now, to your point, that we're clear of. In the grand scheme of things, it's actually had pretty much no trouble shooting from 2,100 to 2,700. You and I remember going back to the pandemic. Gold hit 2,100, which was kind of the all-time high to beat.
Right.
We
cleared the old high by about $100.
Yeah,
enough to shake out everybody on the short side, and it turned around vicious.
Yeah, exactly. We broke through 2,100 around the pandemic, and then a couple of times since. But each time came back to at least 1,800, if not 1,600, at certain points in the last couple of years. In the last handful of months, gold has had relatively no problem going from 2,100, 2,200, 2,300, now 2,700 and up $20 today through those all-time highs. And what's funny is if the correlation between Aussie and gold was so strong, this Aussie chart should be ripping through a $1.20. And in the grand scheme of things, the US dollar has been able to remain relatively strong. It's not at its strongest point that we've seen in certain pairs around the pandemic, but then really when the Fed started to hike, the US dollar, broke through parity with the euro, got down to a $1.05, $1.10 against the pound. Super strong US dollar market. Now we're not there, but Pete, we're nowhere near dollar lows given gold all-time highs, not just gold all-time highs, blowing out gold all-time highs.
Absolutely. And this is why we talk about correlations aren't perfect. They're again, fighting that and saying, well, this is one of these markets is wrong. Gold's wrong or Aussie's wrong because the correlation, it's not performing that. We take that context. Does this provide a tradable opportunity if you're a reversion trader? Absolutely. Aussie dramatically underperforming something that's correlated to it. It's funny, on the portion of the show I'm doing tomorrow, we're talking about a little bit of how you can substitute outperforming correlated products with underperforming ones and kind of create a synthetic bearish trade. So same situation here. The markets, neither of these markets are being priced wrong. What we're looking at from a statistical standpoint, there may be an interesting tradable opportunity here. From a statistical correlative standpoint, Aussie is cheap, gold's a little bit rich right now. Do with that what you want. It is context around, and that's why the correlation is not 100%. It's 42 and 38. So it's positive, which we're interested in. But you're right. And in this instance, this is a case where an overall dollar move is consuming any of the correlative, the knock-on correlative aspects to any of these currencies. This is the dollar exhibiting strength as we move forward. That's sometimes the theme.
And correct me if I'm wrong, because so around the pandemic here in this spot, and this is a monthly chart of Aussie, we saw gold, climb up to that 2100, Pete, and then it came off, like you said, viciously all the way down to, I think it might have broke through 1600 and been even trading in the 1500. Yeah, exactly. But I remember you and I looking at that historical data at the time and saying, okay, gold here at 2100, this is right around the all-time highs. Going back to, I can't remember if it was 2008, 2009, or it was 2010, 2011 range. But again, it's just interesting that Aussie was able to trade in the 90 cent, even above parity level when gold had its previous run up. And now it can't break 70 cents. But what's so funny is, the correlation is still positive. And it does go to show correlation. Every single statistic, technical analysis, everything. That's why you and I don't really depend on them to trade. We use them in certain ways, but don't depend on them. Is because they're all imperfect. And correlation.
Important nuanced difference. Yeah.
Correlation is a measure of same direction, not magnitude. And so it's just funny to me that, like, you'll see, I would imagine that in these months where Aussie was able to, bounce off of the lows, gold probably also had good months. And maybe gold pulled back a little bit when Aussie was mining through its lows here of, 63, 64 cents. Just funny that it's able to hold that positive correlation, even though neither of these markets aren't in the same stratosphere in terms of historical price action, with Aussie still 300, 400 pips away from really lows for the last couple decades. And gold is, it might be, at this pace, gold could be $1,000 through its previous highs. I mean, Pete, we traded gold between 1,200 and 1,600 forever, and it might be knocking on the door of 3,000. It's just funny how these markets can hold these relationships, but really shift in terms of their dynamics. And maybe it presents an opportunity. I don't know. It depends on your portfolio, what you're trying to get out of stuff. If you were long gold, you want to take profits. Is Aussie interesting? I don't know. Or if there's a pairs trade. It depends on your portfolio and your strategy. But it's interesting to see such strong correlation, but a huge divergence in price.
Right. Yeah. Absolutely. And again, the ebb and flow of what drives product is, it doesn't make either of these mispriced. It presents an opportunity statistically that may be of interest to some people. So looking at, as you said, if I'm long gold, do I want to neutralize that gold exposure, substitute something that's underperforming, and use that as a gold proxy? It's another way to look at a tradable opportunity here, if you're looking at it. We got a little bit of flicker above 150 in dollar yen. Took that out last night. And then somebody from the BOJ came out and gave a little bit of chat as to that down spike you saw there at, what time was that?
It's
about 5 o'clock this morning. They're not ruling out future rate hikes. And again, this is the inflection point. 150, they're going to start to talk a little bit. It doesn't mean anything. And you saw the market, the algos reacted. They drove the price of dollar yen down a little bit, yen up a little bit. Didn't have much long last to it. So interesting. We're starting to see. It's interesting to go out the end of the week. Gold establishing a new range. Dollar yen starting to get comfortable above 150. Not, again, 150.03. How comfortable are we? this is not like sitting at 151 and we've been there for 3 days. So, but we are at the end of the week challenging that whole box of sub 150 levels that we ran through on August 4th and 5th in such a quick fashion with the supposed unwinding of the carry trade.
It is.
This will be an interesting one playing through not only today, but it'll be interesting to see the action Sunday night when the markets open early. Mm-hmm. And remember, FX opens early. It opens up at 4 o'clock. So if you're looking to trade and you're dying to get in, Spot FX gives you an hour before you get a future. So it's a interesting way to start taking and at least take a look at where the markets are starting to open. So it'll be interesting to see if this strength in dollar yen continues through. And it feels it's dollar yen, it's yen weakness, but it's as much dollar strength. And I know that sounds confusing, but it's kind of a nuanced. What's driving this? Is this yen specific or is it dollar specific? I think it's more dollar specific right now.
I would tend to agree with you wholeheartedly because it seems like every one of these jumps in US dollar here is not only in the dollar yen pair, but we've seen it. I'll pull up pound, for example. We've seen pound get slammed on those same days. I think it is US dollar strength, which makes the whole gold thing even more interesting because if I were to say, of course, I have no clue what's going to happen in the future, but historically speaking, dollar versus gold, one has been right and the other has been wrong. And we're seeing, of course, gold blown out 2,700 is different than US dollar getting back to 150 versus yen, but this is still a historic, high watermark for dollar here. And so they're closer to the same stratosphere, but gold's maybe a little bit stronger than dollar given recent historical price action. But yeah, Pete, this is super interesting to me because gold a lot of times is seen as getting demand because currencies are, weaker, interest rates are weaker. People want a harder asset because their cash is becoming worth less. And that story made sense when gold was running up through 2,400, 2,500, and this dollar started to get its butt kicked because it was like, oh, the Fed is going to cut rates all the way down to zero again. My dollars aren't going to be worth that much, so I should be buying gold, a harder asset here, something that has relatively less supply than the Fed turning on the cash printing machine once again. And you have a pretty strong dollar market. You had a strong retail sales number last week. You had a strong non-farm number again here in October. And you have the Fed saying, we probably aren't going to hike 50 basis points in November like you guys thought last month, and we might not cut 50 basis points, and we might not even cut 25 basis points.
Right.
And so
wait till for December.
This is something to watch more than that Aussie gold correlation, which I definitely will be watching that, and maybe that's a good trade. But it does seem to me that like at some point, either dollar or gold have to give way, or is it just the U.S. will have the strongest economy, the strongest interest rates, and the demand from gold is every other country because they have to cut rates to zero. I don't know, but man, it's an interesting setup for what'll be a fun story the rest of this year, but especially into next year when the election and everything is over with.
Absolutely. And you mentioned the election. We'll check in Monday on the peso trade because peso tariffs, all the talk, really interesting trade. The big thing now is every firm is talking about it. We've got our Harris election bucket of stocks, our Trump election bucket of stocks. And sure, the elections is that every part of the news cycle. Firms are presenting, and everybody's got an opinion on it, and here's your way to express an opinion with a tradable product. Peso's one way to look at that. This ebbs and flows with that. You'll see as the polls shift, this market, again, not the only thing that drives it, but certainly a push and pull. We've had quite a run up to $20, 20 peso per dollar here.
Yeah, crazy.
So this will be an interesting one. Watch in the next 18 days. I think we have until the election. We'll see that play through a little bit here. So interesting pair to trade. We'll talk a little bit about the carry on this pair too and start breaking that down a little bit next week. It's the first time we'll do it. It's a good discussion, good pair to do because of the interest rate differentials.
Cool, man. Well, let's get out of here. Let's get you on your flight and get everybody on to the main Tasty Live crew in just a few minutes. Pete, I will talk to you soon. Everybody else have fun at the LA show or whatever you're doing this weekend, and we'll be back on Monday. Peace.
The amount of time I spend interacting with our customers via email or anything else is pretty much my entire life.
To be so powerful and so valuable, and then to be that approachable, just amazing.
Where else are you going to be able to email a CEO, get response back?
But you know what? Before he even knew who I was just some idiot trying to learn how to trade. And he still would email and help me learn and everything like that.
Some people say it's nuts, some people say it's insane. That's what I do.
This is Chicago. We invented the skyscraper, the Italian beef, and the standardized options market. SIBO is not only the birthplace of options, it's also where Liz and Jenny got their start. In an industry first, two female former floor traders broadcast live from the floor. Hear the sounds of live market action and feel the electricity as they present real-time trade ideas and research-backed market studies live from the SIBO's SPX pit. Watch Liz and Jenny live from the SIBO, only on Tasty Live.
The Liz and Jenny Show is probably my favorite hour of the day. It's somewhere where I get to be with one of my best friends that I've known since I was 14 years old and do something that I love.
Liz and I always say to get a trading buddy, and we are each other's trading buddies, and I wouldn't know what I would do without her.
People get to take a look at how our minds work as ex-floor traders now transitioned into self-directed investors. What is wonderful about being on this show is that you see the good, the bad, and the ugly, because not every trade is a winner. If it were, the game would be rigged. So you get to watch us manage our winners, and you get to see how we look to get out of a trade that might not be going our way.
My biggest piece of advice to beginners is to jump in, but stay small.
Putting it out there and doing it in small increments, you will learn more than ever reading anything in any book.
So stay small, but jump in.
Top kid. Are you on a quest for trading enlightenment? Driven by an unquenchable need to find the twin flame to your chosen strategy?
Our Where's Bat live event is the search for trading's ultimate holy grail.
Do you have what it takes to find the elusive bat as we visit 3 cities?
Join 6 Tasty Live speakers
as they present 6 unique strategies
and 6 unique clues using games and probability
to lead to the ultimate prize. Sign up for this free event today at tastylive.com/events.
It feels good to get smart. Get even smarter with the ultimate how-to guide. Learn 31 different option strategies. Cover calls, tastylive.com/guide.
Get tasty, pre-market. Come on, you know it, can you feel it? We got some things to talk about. Pre-market, it's early, but not too early. Come on, wake up now. Pour that coffee down your throat hole. It's hot. Now you got a hole in your throat. Oh no, just call your boss. Take the crust from out your eyes. So tasty, not a coffee.
Good morning, you knuckleheads! It is a fabulous Friday because I am locked, sealed into a booth with 2 beautiful brunettes, 1 Vanetta, 1 Jenny Andrews.
Good morning, everybody. Good morning.
Yes, I love a ladies takeover. We haven't done this in a long time.
It's been a while.
Yeah.
Okay, number 1, we got to say thank you from the bottom of our hearts for hauling your butt down in the city, in the dark, come down here to be with us. So thank you, Vanetta. We appreciate it.
I normally don't wear pants on Friday shows because I'm normally at home, but I put like tights on.
You're looking amazing.
Put
Love
boots
that
on. Thank you.
Love those boots, Vanetta.
Thank you. How are you guys?
Well, we're doing good. Yeah, I mean, we're doing good.
Yeah, it's Friday.
It's Friday.
We're going through the week. The rest of the crew is on the road on the way to LA.
Yeah.
Usually when Tom's in a plane, the market goes down.
Not today. I mean, spoons are up 12.
And he's leaving today, but he's leaving later. He's leaving around 10.
Oh.
So just wait.
Just wait and buckle up, maybe.
This is super fun because I am sitting at his desk. I believe his schedule just popped up over here. So if you guys would like anything.
I know. I got to sit at his desk on Thursday, and it was my first time sitting over there. And it's really nice.
Oh, Vanetta? I mean, compared to what our setups are, let's just be honest. You're standing.
I'm standing.
You don't even get a chair.
There's storage under here. Yeah, there.
It's like the old days when we had to stand in the old studio when we started.
I remember.
They had us standing with a monitor in between us.
They did.
Yeah.
Like weather girls.
Okay, so talking about setups, this is Tony's desk. This was a major fire hazard. His cup still has some coffee in it, charred to the bottom, and his cup warmer was
it's on.
It was
Oh,
on.
no.
When I came in here, it was hot. This was hot. The coffee was burning. This was on. We're lucky this place didn't burn down.
To be fair, I wouldn't be that upset. I would be okay. No, I don't want the place to burn down, but good catch by you, Bat.
Yeah, it could have been on all weekend. We might have had nothing to come back to on Monday.
Yikes. So what are you guys up to? What are the kids up to? What are they getting into? It's fall shenanigans. I don't know.
Fall shenanigans. They are, I mean, we have a segment on our show. And actually, you know what, Vanetta? I appreciate you for this. I believe yours is called Why Women Live Longer.
Yes.
Ours is called Teenage Boys Are Dumbasses.
That's a good segment. Why are teenage boys dumbasses?
Because their frontal cortex is not fully formed.
Not even formed.
It's still like this far apart until they're 24 years old. Just shenanigans.
Liz has a very busy weekend. She has a fancy wedding tomorrow at the Ritz.
Fancy wedding at the Ritz tomorrow. On top of
You're going to the Ritz for a wedding,
Ritz, baby. Yes.
What are you wearing?
I have 2 outfits right now, but I think I'm going to go with my hunter green jumpsuit.
Ooh, that looks stunning on you.
I've never worn it. It's new, but I do thoroughly enjoy jumpsuits because then I can dance.
R.I.P. to that bride. You would not upstage her. No, I'm just kidding.
Seriously, at my wedding, Liz was the best looking person at my wedding. My father-in-law the whole time was like, "Who's that girl? Who's that girl?"
I mean, to be fair, your best friend's a 6-foot-tall blonde. Like, I mean, both of you, if I ever get married, you're not coming to my wedding.
Especially than your father-in-law.
My father-in-law.
So you're going to the Ritz, though. That's
going to the Ritz. And I'm so mad though because so on the same day on Saturday we have a massive family reunion. Like my mom's cousins.
Oh no!
So I have to miss that, but I am happy I'm going to the
And it's you said it's your mom's birthday.
It's my mom's birthday. So and my mom passed away last year. So they're having like huge celebrations. Everybody's
that's nice.
And I was like, can't make it. I'll be at the Ritz.
I will say in honor of Bev's birthday, her biggest long was Walgreens Boots Alliance. This week, Walgreens Boots Alliance had a massive rally.
Hey!
In honor of Bev's birthday.
Yes, it did. Thank the Lord I sold out of that before. She would have been so mad.
That's nice. Oh, that's wonderful.
Yeah.
Aw. How about you? What are you up to this weekend?
Well, I'm going to take a nap when I get home.
Yeah.
Nothing really. Honestly.
This is, I can't do this anymore. I got to take this off.
I told you it gets hot in here. Like it's hot. Yeah.
So my son's way to college and Lily is 16. She drives. So I have nothing but time on my hands.
Sure.
What
you got the dogs.
You ride your motorcycle to Frankfurt?
I might.
It's beautiful this weekend.
I like to ride down to Starved Rock to the state park there. Take the.
Be careful. Last week someone fell off. One of the
Yeah. Well,
That
happens.
You got to be careful. That's a shame.
Starved Rock. The hikes are tall, and if you're trying to get a better picture, like let me try to get a better picture.
I don't normally even go into the park. I like to just ride through the park because it's hard to hike and motorcycle.
I don't think she's like Houdini, like right on the side.
Many people have fallen off the cliffs at Starved Rock. They had like a 90-foot rope trying to get this guy up last week.
Really?
Mm-hmm.
That's bonkers.
So you be careful.
I will be careful. I respect the outdoors. Yeah.
Send me your route because I'd be happy to meet you for a drink on your way.
I don't drink when I'm on the bike. Yeah, I don't drink when I'm on the bike.
You've already got her on like the edge of Starved Rock. Now you want to feed her with booze?
Hey, you're Sober October. I'm trying to do Sober October.
No, I don't drink when I'm on the bike, but I'll watch you get drunk. That's fun for me.
All I could offer you would be a CBD strawberry cocktail. They're selling these at a store by my house, these little CBD drinks. Have you ever seen those? I
have. Does it make you sleepy or just like calms you down or?
Put me right to sleep.
Yeah. You got to be careful with that.
What about you, Vanetta? Besides driving to Starved Rock?
Well, my emotional support pop star, Taylor Swift, is back with the Eras Tour back in America. So she's in Miami the next 3 nights. So I will be watching the Grainy live stream and making bracelets because I like to do that. I like to watch her show and like make bracelets.
So I do think I thought about this long and hard, Vanetta. I think the way that we would lose you if Taylor Swift calls you. Do anything for her. Like you are the Taylor Swift correspondent here.
Yes, I am the Taylor Swift financial correspondent. Yes, that is true. No, but it's all in good fun. Nothing too crazy. But it's going to be like in the 70s this weekend, which is. Yeah.
So, do you believe those ads? I see them on Facebook. Like.
Okay, Mom. Wait, I know this is going to veer into like mom territory.
No, any ads on Facebook of like. Win Taylor Swift tickets. Are those all a scam?
It's a scam, Jenny. I'm so sorry, sweetie.
Jenny's yet to see a concert, Vanetta.
I've never been.
I love how Jenny's the only person I know who still uses Facebook.
She's got a Hotmail account.
Yeah, I still have a Hotmail account. I like to use it for when I sign up for like when a website's like, we need your email.
It was my very first one, and we were juniors in college when email was created. Juniors in college when Al Gore created
Al Gore created the internet. Yes.
And I was going away to Spain, and they said, there's this amazing new thing, email. So when you're in Spain.
So Jenny types hot mails into the. She's like, oh, wow, I like this.
That's why you're a comedian.
Yeah. But
ironically, we listened to you. I listen to you every morning, and usually the kids are leaving at the same time. Now, granted, they're cranky but Annabelle was asking me the other day. She goes, "What is Vanetta's job title?"
Cat wrangler.
And I said she's a comedian. And
no, I'm just a writer. I'm just a.
Don't you find it odd when people ask you what you do for a living? I never know what to say.
Yeah, it's just hard. I just normally just tell people I work in marketing.
You do?
Yeah. Because I don't want to get it, because it's just like, it becomes like this whole thing. You're trying to explain what you do, and you're just, But if you just tell people you work in marketing, they're like, oh, okay.
I got Will Ferrell groomed the other day, and I couldn't get out because I accidentally opened my mouth and said that we host a live financial show.
Right, because then they're going to ask you for financial advice. They're going to ask you about
also. Buy.
Right, yeah. So you're just like, I work in marketing for a bank.
I just say
for a bank,
marketing for a
financial services. I say financial services company.
Okay.
Yeah.
I just say I'm a trader.
I did that at the Apple Store once. I was at the Genius Bar, and he goes, "What do you do for a living?" I go, "I'm a trader." And he leans in and he goes, "I don't think you're supposed to say it out loud." And I was like, "I mean, options trader, not."
You're like, not that I hate America.
Not a trader to my country. I'm a trader, not a trade-tor.
Well, your Daily Dose segment is my only source of news. I say this
again. That's wrong, but thank you. I do sincerely appreciate that.
My only source of news is listening to your news, and we appreciate it.
You should get outside sources of news, but that's just me. My favorite segment is Scott Sheridan, but Scott will be in with you ladies today, so that will be nice. You can.
So I love that segment too, but we typically miss it. I do like Scott.
You're getting ready for your show, right?
So we always miss what they say, but we've got Taiwanese sources that tell us when they make fun of us as well.
Right. Yeah.
I feel like they're mostly talking about restaurants, sports, golf.
Right. Yeah.
So I
Boomer spring break. They're going this year.
Are they?
Well, in like next year.
He's good. Like he goes to all the concerts that we go.
Oh yeah, Scott knows like the trends. Scott knows like current music and restaurants, and he's the best rich guy. He brought me back some rugula from Russ and Daughters in New York.
Russ and Daughters in New
York. Oh my God.
Scott is a man about town. He knows, he takes full advantage of the city.
Yeah.
He really does.
Yeah, Scott doesn't hate his family. He believes in vacation. That's why he's my favorite.
His wife is so much fun. I love her too.
Oh, Tommy got Katie and her fiance like restaurant reservation to like Katie needed help getting a reservation because it was her fiance's birthday, and Tommy was like, "Oh, I got you, girl," and like got Katie into this like really nice restaurant.
Okay, can we talk about how cute Katie and her fiance are?
Adorbs. I ship so hard.
I know, they're so cute.
Yeah.
He kind of is her. I think we set up.
He's a teacher, which is wonderful.
Oh yes.
Yeah, he
high
teaches.
school.
He teaches kids. Yeah, I'd smack those kids. I wouldn't last.
Can we get back to restaurants? So Sunday, I am dropping people off. I'm driving people to the city who don't usually drive to the city, and I'm dropping them off. My sister-in-law and my daughter. Okay. I'm dropping them off at the Harry Potter on Broadway in Chicago.
Oh yeah, Harry Potter and the Cursed Child. Yes, supposed to be really good.
Yes, so I'm dropping them off. So while they're there, I'm looking for a fabulous restaurant to go to while they're watching the show.
A fabulous restaurant.
Looking for a restaurant because I don't go out to eat into the city that often. Only around here. We're always here. So where should I go while they're at the play?
So you're telling me that you're going to drive them, go to a restaurant,
and you're going to stay for 3 hours?
Stay for 3 hours.
That's why I need a restaurant where I can stay for 3 hours.
Restaurant? Why don't you just go to the show?
I only bought 2 tickets and I gave mine to my sister-in-law.
Why don't you just go to Macy's?
She drive.
She doesn't know how to drive in the city.
Yeah.
Very nice of you.
So I need a restaurant that's going to take a long time and be amazing. Maybe I'll ask Scott.
Are you going to let Lily drive?
Yeah, I would ask Scott. And I would just go to Macy's.
I would shop.
Yeah. All right.
I don't know. I want to try something new. I think I saw some French restaurant advertised that I wasn't familiar with.
Oh, okay.
I'll have to look.
Yeah, Scott's a good person for that. But you guys got one more show, I think, on the road?
One more.
Not until December. We're going to Phoenix, which is where we were.
Yes.
Our last tour.
When the world shut down.
And we still went, by the way.
Yeah, but you're doing Where's Bat. Yes.
Where's Bat?
Yes.
That is, for those of you who don't know, that one night, we were the only, remember how they broke us off into teams?
Yes.
Everybody had to do a show.
Right.
And we are the only ones that ever did it.
Yeah.
So we went on ours.
I think Tom
was in New York.
Tom's was like a money show.
Yes.
Yes, Tom was like a money show. Yeah, ours was different. Yeah, ours was called That's What She Said.
And it was awesome.
It was right. It was in March 2020, right when COVID was starting.
Yeah.
And everyone was asking us, "Are you sure you are comfortable going? Are you sure you're comfortable?"
Yeah, I brought my parents.
Did, yeah.
Yeah, my parents came and it was one night only, one night only, and then never again. And we caused a global pandemic.
Now, would you want to go on the road and tour?
No, not really. Sort of. I don't know. I do like to see all the people, which is nice because we're sort of just insulated if you're just staying here in Chicago. So it is fun to do the road. I do like to do social content stuff when I'm on the road, like behind the scenes.
You do really good
stuff. So yeah, that stuff is like fun for me. But I couldn't do what you guys do. You know, like 10 shows a year, different presentations. But you guys are just so good at it.
I'm seeing people today.
Yes.
We have two of our favorites coming to visit. 2 of our favorite tasty traders. They've been watching since we started.
There's an interview, and hopefully we can play the clip again because there's an interview that Vanetta did with Mikey.
Okay, so yeah,
it was before the show.
Mikey, the Polish warrior,
yes,
is coming in.
Yes.
Bob from Texas is coming in. They're both coming in this morning to visit. Mikey's been baking all day. He's bringing cheesecakes.
Okay, I will stay.
Excellent. He was baking all day yesterday.
You had me at cheesecake.
You've met Mikey a bunch of times.
I have.
You met Bob? I've only met Bob once.
I think so. Maybe at. I can't remember which. I'm better with faces than with names, but
Mikey had made us these amazing T-shirts, and it had Mikey's picture on it with wearing the T-shirt that says "I'm only happy when I'm unhappy." Wearing one of the Tom's.
It's like a picture of a picture in a picture. Like
and I was gonna wear it today. I went to put it on. It was just a little tight. Either the shirt.
I'm sure our viewers wouldn't have minded.
But can't wait to see them.
I'm sure they'll be okay. Hey, we got a great show for you today. It is just all lady powered today. So thankful that Liz and Jenny are live here in studio. Tom is on the road, headed to LA. We hope you're able to join Tom and the Tasty Live crew in LA for that show. Bat is headed to Ann Arbor. But for you today, Tasty Nation, at the top of the 8 o'clock hour, we got a tasty extra. Dr. Data is going to come in with his back testing demo. And the numbers on this have been phenomenal. People are signing up. People are engaged. They're very interested. This is Data's wheelhouse. He's so happy.
They're all Jenny. Jenny's been using this back testing stuff.
Yeah.
All the numbers are Jenny.
Yeah.
Hey, are you putting trades in?
No.
Something just popped up into my platform.
Is it, you sure it's yours? It's not Bat's?
I actually know what's happening.
What's happening?
So I learned this the other day because of something we said, and then Scott had to correct us. So all of our GTC orders get canceled and put back in the mornings.
Oh, so.
Yes. So they
That's
do not rest
helpful.
overnight. I learned this, and I learned this because of something we said, because Frank the Great, who's wonderful on YouTube, said that options are FIFO, first in, first out. So if you put a GTC in and it stays, you'll be the first one to get filled. And Scott corrected us by saying, no, unfortunately, we cancel and put them in every morning if you have a GTC.
Really?
Yes. So you will see them fire off like this. I can't believe I know this.
Good for that's it. 'Cause I wouldn't have been able to figure that out.
So you
I see orders, and I'm thinking while we're trying to talk to Liz, she's secretly trading over there.
It's a ghost. It's a ghost.
Yeah, no, they're coming back in. So every night the GTCs get canceled and then put back in.
So Data will be in at 8 o'clock. He's going to do his data thing with the back testing demo. Then it's Fast Market. I love when you guys are in because it's a different perspective. I love when you are in or when Mike and Nikki are in. But these are viewer submitted trades and you're using Tom's money.
Here's the unfortunate part. I don't think
money,
but money.
No, we don't get it today.
Damn it.
We have our account with our money, and it's unfortunate because we're working with about $30,000 instead of $30 million.
Instead of
$30 million. Yeah.
You know what, though? I think we should take this Fast Market, and we'll all put our hands in an agreement on this. I think we should say what we would do if we had Tom's money.
Okay.
Okay, that's fun.
Then
That's
what we really have to do.
And then what we really have
And you really have to do.
And then womp womp.
And then 9 o'clock, Jacob's going to be in for market measures. The importance of managing jade lizards. Everything's all coming together in the Tasty Live cinematic universe. 'Cause you guys invented the jade lizard.
That is correct, Vanetta. Thank
Which is, you guys, I think you have a Wikipedia entry.
I know.
That's amazing.
No.
You know, one time we went in to Christy's office and asked if we could get royalties or how we put our name on the lizard.
We want to patent it.
Yeah, we were like, we want to patent. And she's like, oh, don't worry, we already own it.
Yeah, everything we create here, Tom owns.
Yeah.
And then, like I said, my personal favorite around 9:30, live from the trade desk, big boy Scotty S. Scott Sheridan coming in, going to talk to you ladies. Also, I think might answer some questions. We've got questions on the brokerage side of things. Scott will be in with the lovely Liz and Jenny.
And we are taking calls, 855-238-2789 or 855-BE-TASTY. I can't believe I remember that.
Yeah.
How
And
could we forget? One time I had locked myself out of my car. My phone was in my car. I went into the store, and the only number I knew was 855-BE-TASTY. Remember that?
That's to call me.
That's funny. Like the only numbers I know, like my parents' phone number, like my best friend in 6th grade,
Correct.
and then
That's it.
And then 5 and like the Empire, 588-2300 Empire. Anyway, let's get this show on the road. You want your daily dose?
Yeah.
Yeah. Hit me with my theme music. Let's go.
Our leading story, breaking news, coming across the wire.
Leading story.
Top story. This just in.
In today's headline,
This just in.
Breaking news.
I was trying to be smooth and take a drink of water, but then a piece of ice went down the wrong way. All right, everybody. Today, it's a fantastic Friday. It's October the 18th. This is the part of the show we like to call the Daily Dose, where we talk about today's financial news and headlines. My name's Vanetta. Are you ready for the news?
We are ready.
I wanted to talk to you guys about this. S&P 500 looks solid here, but the VIX is sending mixed signals. How are you guys operating in this? Every day we hit new highs. New highs. But also volatility is kind of a little juicy. How are you guys taking action with that?
It's interesting because these are the two things that we look at, obviously on a daily basis. And so we have been up. So we've been talking about this for the last week. There was the one day where we went down, the VIX was kind of signaling it before the market turned.
It is strange because we did go back in history and go to previous elections and go, back 4 years, back 4 years, back 4 years, and it was not elevated like this far before the
election. Yeah,
usually it elevates a week or two before.
Sure,
but we've had a high VIX for the last couple of weeks.
Yeah,
it's really interesting. What is it telling us? Usually the markets don't lie.
Yeah, the markets don't lie, but it is sending mixed signals. That's what we're seeing because all-time highs, VIX should be lower.
I'm a little bit cautious. I've scaled back my positions just in case we have a down move.
Have you started being like a prepper? Like what? That's what I'm doing. No,
What, you mean buying toilet paper and paper towels?
Yeah, I don't know what's going to happen. My dirt bike's all loaded up. I can head for the hills, head for the mountains. I'm ready. No, I'm just kidding.
I was in Costco the day, what day was it? The day the ports.
Oh, the ports shut down. Yeah.
Costco, you would have thought, I was like, wait, what
are you doing, people?
Are we not going to be able to drink water? Cases of water were being taken out by the pallet.
Yeah, I know. That was.
Do you have one of those straws that you could put it in a lake?
A life straw? I do have a water filtration system. Yes.
Do you have a life straw?
I have a life straw.
Yeah. All right. Hey, the U.S. government fund that backstops nearly $10 trillion in insured bank deposits is recovering ahead of schedule. Good news from declines and losses in recent years because regional banks kept blowing up. But it's important because the FDIC is the key guarantor. I'm just mentioning this. I don't know if you guys are trading, if you traded any of the financial stocks, if you trade like KRE at all, if you're sort of rotated out of financial, because they're the first to report.
We get super excited because you see the banks and we're like, earnings season, it's
yay!
And then you get so excited, you open it up, there's never anything to do in them.
Well, it used to just be Alcoa, and then you're like, what do I do with this?
Yes. And it looks like, they're all still, even though some of them had a little bit of a pullback, they're all still near the top of their range.
Yeah.
So it's tough. It's always hard to trade something when it's at the top of its range.
Speaking of in a range, want to talk about bonds. They are at the bottom of theirs. The bonds continue to sell off as traders reprice Fed rate cuts. The Treasury yields continue to climb, and it's been kind of a wonky environment for bonds. I don't know if you guys trade Treasuries a lot.
We do, and it was a kind of a fun week because they really rallied early on in the week, and then yesterday they were down. They're down again today. But at least we're getting two-way action, which I think is nice for a trader to have that two-way action.
How do you guys like to trade bonds? What instruments?
We're small fries. Keep in mind, especially because we do it on the show,
right?
So we typically will stick in TLT.
Okay.
So, it's the ETF, it's a proxy, it's good.
No, that's relatable.
I know
that's
I'm zinging ZBs.
Right. No, that's why I always like to ask because, that's
TLT.
Yeah. We trade it using TLT. And it's a great proxy. It's a smaller fry. You can't get hurt too much.
Hey, Chinese GDP came out overnight, and anyone hoping for a quiet end to the trading week in Asia is going to be disappointed. Chinese economy continues to sort of struggle, especially the property sector, which kind of got blowed up. China is trying to infuse a massive amount of stimulus. Some things are working, most things are not. They're also being sanctioned by a bunch of nations. That's neither here nor there. But what are you guys doing?
It's all up today.
Yes, yeah, that's Chinese GDP. That's because Chinese GDP did what it needed to do.
Yeah, you know me. They did it.
What do you think of the only Chinese stock I'm in right now is a PDD. What do you think of Temu? Do you ever order on Temu?
I do not. I have ordered from Alibaba, from AliExpress, like some motorcycle parts, and it was super cheap and they were fine. Like I didn't die, so.
How do you feel about JD.com?
I've never ordered on JD.com, but it's your son's name. So.
That's why I decided to close all of my Chinese stocks and put all of my Chinese capital into JD.com.
That's a prudent policy.
So JD is up $2 today.
Yeah.
They're all up today. Now, did I pronounce it? How do you pronounce Temu? Temu?
I think it's we're all just Midwestern middle-aged women. I don't know.
We're not middle-aged yet.
I was like, I don't know.
You know what I said yesterday?
Ni hao.
Yesterday said, everyone from Indiana is nicer. Everyone, I know we're in the
nicer and cheaper. Didn't you say nicer?
Everything in Indiana is nicer and half the price, and everyone's nice and everything's half the price.
Yeah, that's true. Yeah.
I was in Indiana this week.
Especially if you need cigarettes, come on over. No.
I had to do some repairs. All the contractors that come in, everyone is nice, and out there, it's way cheaper than we're getting work done here.
Nice and half the price. I like it.
Yeah.
So,
no,
do you ever think you'll move back to Indiana?
No. No, it's not for me. But all right. But you guys don't have any extra more Chinese exposure. You just noticed that the Chinese stocks are up.
They're all up today.
So what do we
I'm
have?
only PDD.
We don't have Baba. We don't have
No,
Biden.
I don't know if we're in any.
Or FXI even.
FXI.
There you go.
We do have FXI?
Yeah, we have FXI. We've got a Jade Lizard-esque position.
Okay. Sure.
And what's that doing this morning?
It's up $1.60.
Yeah.
Okay, yeah, that's nice. That's a good move. All right, good job, China. Hey, I want to talk about gold because gold touched a new high because we always have new highs. It's above $2,700 an ounce. What are you guys doing in metals?
So I have said this before. I'm a gold bull.
Oh, you are? Okay.
I'm a perma bull in gold.
Okay.
I consider it just asset gathering. I tell you why. I'm always just kind of putting little bits in. So it's been a good day. It's been good.
She has been
good for you though.
For years, always just acquiring gold.
Okay.
Acquiring gold. Your dad started.
Yes.
Yeah, her dad was
like physical gold.
My dad wanted physical gold. I was super excited when we had physical gold on the platform because you could buy like the physical gold.
Right.
Now my brother does acquire physical gold and silver.
And where does he live?
I'm just kidding. Gold and silver. It's to the point where like he's got this massive safe. He's like, look what I got. Remember what Dad taught us? I was like, oh, good God. Okay.
That's crazy, but that's cool.
Yeah.
But it's just, I mean, honestly, I look at it as I do trade it a little bit. I will scalp in and out of it.
Sure.
It's just more. I trade it differently.
What instruments are you guys using to trade gold? GLD? Are you doing the miners at all? Are you doing gold futures?
I've got
rattle them off, Liz. Rattle them off.
Yeah, I've got it all. Like any kind of gold thing, I kind of like put a little bit in.
There's like I am gold. You've got a whole list of things.
Yeah, I do.
Now it's tricky because we talked about this maybe 2 weeks ago. I went to get my hair done. My hairdresser asked me, "Oh, I hear gold's the hot thing to buy. Should I buy gold?" And I said, "Well, it's at the very top of its range.
Sure.
So it's hard to get in now. It's hard to get in now.
Sure.
Tim Knight's still bullish on it.
Yeah. Are you guys trading any other metals like silver or copper?
Silver. Oh, I should say yes. I'm knee deep in silver as well.
Okay.
I try to dabble a little bit in copper, but I mean, when I say this, Vanetta, I mean, I am selling premium kind of. I'm using options to make a better play in all of this stuff, but I still have a bullish assumption on both of them.
That's good.
And silver's up today too.
Yeah.
Hey, in a crazy story, I don't know if you remember this, but as everyone was waiting for the SEC to give the green light on these Bitcoin ETFs, I don't know if you remember, but there seems to be a tweet that emerged from the SEC that said the Bitcoin ETF had been approved, and it sent the price of Bitcoin skyrocketing.
It was an error, right?
It was a man in Alabama, and he's now been arrested.
Oh, really?
Yeah. So the January 9th hack of the Twitter or X account belonging to the SEC, they arrested a man named Eric Council Jr. He's charged with conspiracy to commit aggravated identity theft and access device fraud. Big yikes when the DOJ comes to your house.
I mean, I think
goes yoink.
Say this because it's all out there. That's pretty funny. I mean,
it is funny.
He's just like sitting in his basement, being like, "I'm gonna get in."
It's like I'm gonna hack the SEC's Twitter, and it spikes the price of Bitcoin by more than $1,000. He was 25 years old. Again, that prefrontal cortex.
It's not there yet.
Yeah, he's 25. But what have you guys been doing? Bitcoin hitting new recent highs this week.
Yeah, it's nice to see it getting back up near 70, so 67,000, almost 68,000. And Ethereum's back up to 2,600.
Now, and to use like a place out of Tom's, because he said this before, so I have to give him credit. It is dead money because you don't. Most people that are buying it are just buying it.
Sure, yeah.
No one's really like you're not. It's not a. Not a lot of people are trading in and out of it.
Well, we both started this way where we had some and then tried to buy some to scalp, but then it fell quite a bit, especially.
So then we just got long more.
Now then we didn't have our extra scalping vehicle, then we just have it. So, because Ethereum was as high as what, 4,000 or something?
Yeah, I think so. Yeah, 4,400 maybe.
Down to 2,200.
Yeah.
So now that scalping vehicle is just another.
Do you guys trade Coinbase at all? Like that's something that you can get in and out of, maybe.
That had a crazy run this week.
It did.
It's up $3 today too. It's trading.
Well, I'm out of it now because it ran up through everything. We both had some diagonals, some bullish diagonals in coin, but it blew through everything.
Oh wow!
So
okay.
Now we have nothing.
I mean, we have a downside. We had the downside
but
ratio
that's
spread. We
really
butterflied it off, so we're sitting on it.
Want to get to a hot topic from last night. That's Netflix's earnings. It was the big matzo ball of the week in terms of having earnings. Netflix did beat Wall Street forecasts on every major metric. They added more than 5 million customers in the third quarter. Things are slowing down a little, but sales for the period grew 15%, and shares of Netflix rose as much as 5.4%.
Did you see too? I was listening to the news story on it, and they were saying that it was growing because they have that $6.99 where
they have that ad tier, that lowest ad tier, right? And Wall Street wants them to raise the price of that. But they're like, hey, we're getting good traction.
Yeah, they got a lot of traction from their $6.99 with ads because I don't pay $6.99 for Netflix.
No, I paid like $25 for Netflix.
I feel like,
and I am mad about it because I was on my dad's account. Love you, Dad. And then they did their password sharing.
You got busted?
Yeah. Yeah, they turned.
I think
They turned my shit off, and I had to pay for it. No, we're family. We're like, we literally have the same last name. Yeah. But it's fine. I'll give you money, Netflix. You win this round.
It's so funny because my mom was on all my accounts. I mean, she was always why not?
Can you have two houses though? Because we use Netflix in our house here in the house in Indiana, and we don't.
No, that's fine. They were saying it was the simultaneous use of it because my parents would use it in Indiana and I'd be here in Chicago, watching sexy realtors, and then Netflix was like,
So you're telling me that when my kid goes to college next year, I have to get a new Netflix account?
That I don't know. Again, I'm not Netflix. I think because he signs into your Wi-Fi regularly, and I don't know.
You could have it.
I don't know how it works.
A certain amount of devices, because I know just the other day, Lily wanted to sign into it from like the basement, and my husband said no because we're maxed out on devices.
Yeah, I'm not sure how it works, but what did you guys do with Netflix for earnings?
We saw an iron condor, which is okay. Netflix had about a $50 expected move.
Okay.
Our short call is the 7:45. It's trading 7:30, up about $43.
Okay.
So our iron condor's okay.
Nice.
Good. It was a baby iron condor.
Nice. Okay.
Yeah, I mean, it was a 250 wide. We collected $1.20. I think. But hey, I'll take the $1.20.
Yeah.
Better than a sharp stick in the eye.
Better than a sharp stick in the eye.
Would you start over, Vanetta? What would you say is your participation rate for earnings? Like, are you trading 50% of the earnings? Are you trading 70%? Like how?
There's a lot of earnings.
Yeah.
So of the liquid earnings,
right?
Come to us on Bob's list every day. I would say we're about 40%.
So
throughout the whole season.
If you're looking at of the liquid earnings.
Of the liquid earnings. Yeah. That's fair.
Then we don't want to.
Right.
We have learned from past earnings trades not to risk too much on earnings. We don't want to, one earnings trade to wipe out $1,000. So all of our earnings trades, I would say, are maybe $600 in risk or less.
Okay.
Or less. So we're just conservative. We have no naked strangles. Typically, unless it's like a small product.
Well, and I also argue too, Vanetta, like we will trade earnings more when the volatility in the actual market isn't as high because you're struggling to find trades, right? Sure. So like right now you can look, everything's got an IV rank over 50. So a lot of times you don't need to jam an earnings trade in. You don't need to push the envelope.
That's an important distinction. That's
yeah. So if it depends at a different time, we'd be like maybe 80% of all the earnings because we have nothing else to do.
Hey, I didn't know this. Fun fact, Apple Pay turned 10 yesterday. I love Apple Pay. Like, as a millennial who never carries cash, sometimes I forget my wallet, but as long as I have my phone or my watch, I can pay for stuff. But the company added Klarna as an option at checkout, and that sent shares of Affirm down yesterday. So if you want to look at Apple and look at Affirm, I know Tom trades Affirm every now and then, but everyone trades Apple. So
yeah, I always have an Apple position in.
So Affirm was down quite a bit from about 48 down to 43. It's up a little today.
Yeah.
Apple's up 460 on this news.
But Apple Pay is so easy. You can buy anything. Like my daughter came home, she said, I need new dance shoes and tights. Went right to the website, Apple Pay. You never even need to pull out your credit card.
Yeah, it's so easy. It's nice. I love it. Thank you.
Anything I'm on Facebook, Vanetta, you made fun of me. Everything on Facebook, oh, I'll get these jeans. Oh, I'll get this. Everything on Facebook, I get it. Apple Pay.
It's dangerous because
I love that for you.
Then things come to the house.
Yeah, that's true. No, I like that. Hey, this is interesting. Google is going to block election ads across all of its platforms platforms. That includes YouTube, YouTube Shorts, Google. After the polls close on November 5th, because they don't want misinformation about voting or candidates claiming victory before a race is called. I love that we've made it to this point. So, but Google's like, hey, for everybody, they're like, after the polls close, no election ads, no election posting. What are your
But this
thoughts?
is just Google. It's going to be everywhere.
Right. Right, but Google's the main
Once the polls
search.
close,
Yeah.
I think that's fair.
Yeah.
Because right? It's over.
Yeah, yeah. I don't know.
Aren't you? Didn't you say like there's someone boots on the ground doing election coverage?
Nope, not anymore.
Nope.
We're gonna talk about that. Hey, are you guys trading Google? Hey, look at this pivot. Are you guys trading Google?
Google is one of those that doesn't look like everything else. It's not at the top of its range.
Okay.
So I'm keeping an eye on the YouTube chat. Somebody said huge rally in bonds. Let's take a look at bonds.
Huge rally.
Pause the news for 30 seconds, Vanessa.
Yep.
Pause.
Chicks dig the long bond.
I don't.
Okay, I'm pulling up ZB, and it doesn't
appear to be.
What are you looking at, sir?
It doesn't look super. I mean, it was down, so they're up now. They were down.
Sure.
Now they're up. So turned around.
Yes.
News come out. Was there? What time is it? 7:30.
7:30.
At 7:30. Did a number come out at 7:30?
Probably. I'm not allowed to
Frank's
report on
calendar.
numbers that come out.
Oh, you're not?
No, I'm just kidding.
We don't mind that.
No, I know.
numbers.
Tom hates it. No numbers. No numbers.
So, yeah, 7:36. The bonds did turn around from being down to up. So maybe some number came out at 7:30.
Sure.
That's possible.
Hey, but speaking of the election, Amazon is making its first foray into live news. They're going to have an election night special hosted by Brian Williams. Yes, NBC's Brian Williams.
Oh.
Amazon plans to host a one-night special with live election results and analysis on its Prime Video streaming service.
You know this is
I say crap to that, to the election unspecial. Yes, that will be here, Tasty Live.
Yeah, we're going to be watching the.
Yeah, Tom, Bat, Dylan, Chris
filming.
Vecchio, Victor. Yeah.
Yeah.
You guys are going to be on. I can disclose this. We are doing a game show. Tom's going to give away $2,024 over.
Me?
Really?
No, over a course of games. But we are doing a tasty version of Hollywood Squares.
Oh,
and you two are sharing a square.
Can you spare a square?
Yeah. So
Can
you
you spare a
guys,
square? Can
you
I get-
guys might. We'll see if we'll put you in the center. Even we'll see.
Watch Hollywood Squares.
Yes. So,
Nice.
what are you guys doing in Amazon?
Amazon.
Was this your idea?
Hollywood Squares.
Yes. Well, it was a team project.
I love it.
Team project.
So right now we do not have anything in Amazon, probably because they have earnings coming up.
Sure.
On Halloween.
That makes sense. That makes sense.
Earnings. On
8:30 was housing starts, building permits. Yeah, so it's all about housing.
Okay.
Oh.
Well, it turned the bonds around. Spoos didn't change much. They're up 14, but the bonds are green instead of red.
The European Union is considering levying fines against Elon Musk over his unwillingness to cooperate with an investigation into Twitter's moderation and advertising policies. What the EU is doing, they're like, look, we normally are going to take 6% of like whatever this business makes, but the EU is looking at taking 6% of all of Musk's private businesses. So that includes the Boring Company, that includes SpaceX, that the robot XAI, and Tesla would be exempt because Tesla's a publicly traded company. This changes the calculus of the risk, because if the EU is like, we're going to take 6% of every business entity, that would, I think, make him more compliant. But again,
Can they do that?
the EU, they're the EU. I don't know, but they can levy fine. Like they fined Apple. Apple's facing huge fines also, and Google. And so, I mean, if you want to fight the entire European Union,
surrender.
yeah. But I did want to check in on Tesla because it's had sort of an up and down week.
Tesla. Okay, right now, earnings are coming out the 23rd, so next week.
Yes.
Tesla earnings. Tesla had a big drop end of last week.
Yeah.
And then it's just kind of
After their robo-taxi event, yeah.
Yeah.
You think you guys will trade them for earnings?
For sure.
Yeah.
I have a position on already.
Oh, okay.
Remember, I put on like a downside.
Do we have a position?
Position where I was hoping my short put would roll off this week out of the money, and then I'm left with a long next week for earnings, and I don't know what I'm going to do with it yet.
Okay.
High class problem.
I don't know what I'm going to do with it yet, but it may have gone through it. I don't know. I haven't looked at it.
It's a high class problem.
We have nothing on in Tesla, but
No, we don't have anything.
Okay.
it's about a $16 expected move between now and the end of next week. So between now and after earnings.
Okay.
Which is not that big of a move.
No.
Yeah.
No.
Sometimes it moves that in a
day.
clip. Yeah.
Yeah.
Hey, getting real fast, I got a chip news story for you. Qualcomm is canceling their Snapdragon X Elite Mini PC dev kit, if that means something to you. Great.
I don't understand the words that are coming out of your mouth.
I just wanted to talk about Qualcomm. I don't either, but I don't know if you guys trade Qualcomm. And then a bigger discussion into NVIDIA, Intel, and AMD, because they had decent moves this week.
I'm in everything that you just mentioned except for Qualcomm.
Okay.
Yeah.
Qualcomm is one of those. Also, the chart looks similar to Google, where it's unlike the others, not near the top of its range.
Sure.
NVIDIA. We don't have anything on an NVIDIA.
It just keeps going to new highs.
New.
Yeah.
New.
Yeah.
Crazy. Well, we are in Intel. In that thing.
Oh, Intel. Yes, we're in
That
Intel.
can't catch a break.
I know, poor Intel.
We're hopeful. It's up 16 cents today.
Do you guys trade SMH ever at all?
Smash. So we've every time I trade it, I swear it off. I swear it off for life every time I trade it because it's like an oil tanker. It just.
I think Julia's the same way.
We have time we've ever traded SMH, it's usually just a Jade Lizard because we look at it and we say like, oh gosh, look how far we can get that put.
Yes.
In SMH, but then you're just sitting on it forever.
You're just holding the capital for as long as that trade is on because it never moves.
So we have not lost in SMH to the upside, but we're usually in a Jade Lizard and then deciding when it takes too long to make $50 and not worth it.
John, I'm skipping a story here. I wanted to get your insights because Tom and Bat, they're not going to relate to the story, but as, being females and carrying that role in the household, you guys mostly do the grocery shopping, I'm assuming. Yes?
No.
50-50? No, you order?
I do.
You do the grocery shopping? You don't do your grocery. You're like, no. You're like,
everything delivered.
Yeah, that is nice.
My husband cooks a lot. He likes to grocery shop. He likes to do a lot of that stuff.
That's nice. Yeah. That's nice. But Democratic Congressman Rashida Tlaib recently sent a letter to Kroger over the grocery giant's purported plan to introduce digital price tags that have dynamic pricing. But also, Kroger said they were also going to use facial recognition technology. So any hypothetical scenario, they could maybe look on your face to see how maybe desperate you are for that ice cream because you've been broken up with again. And then they could raise the price of the ice cream because they know that you really need it.
Where do you shop in?
This is an abomination.
I think that's bonkers.
I go to Mariano's.
I think that's bonkers. So they're going to be like, I know this woman comes in and she just buys whatever, so let's raise the prices. When she went the facial recognition, that's
I recognize her.
For you and a different price than for me if we're both there at the same time buying the same thing.
Or they recognize you and then they can target ads to you specifically because you're buying dog food and you're buying, stuff for teenagers.
I do like the targeted ads.
I this whole thing is just like, I just want to get in and get out, man.
I wish they knew if I could go in and they know me and they know what I like, then it could pop up on a screen like, oh, Jenny, we know you like to buy avocados, strawberries, this of this list, these are on sale today.
Yeah,
that's what happens.
I get those paper coupons. I get those paper coupons.
Yes, at Myers, Myers or Jewel, whatever I've been buying, then they send me a coupon in the mail.
Yes.
Oh yeah. Yeah. But walk in the store and it's kind of like, okay, this is.
What do you
just put them on your app and then they're.
What do you think about dynamic pricing for grocery items?
Yes.
Yeah, I do too.
I would just like to have the prices be the prices and not have to use.
I mean, I'm okay with the prices going down.
I hate so at Jewel, there's a Jewel right by my house. My corner is Jewel or Mariano's. And when I go to Jewel, all the sales now, you have to go into the app and clip the deal to get the sale price.
Right.
Tax on.
It's going to be the same. It's going to be the same company now.
Right.
Yeah. It's just a mess. Yeah. I don't know if you ever trade Kroger, KR.
You have to go in your phone and say clip deal in order to get that price. You don't get the sale price unless you go in and clip the deal.
No, that's crap.
It's crap.
Burn it to the ground.
I second that.
Burn it to the ground. Hey, I pull this for you guys because you guys are my Disney experts. Universal announced they're opening their 4th Orlando theme park.
I know.
Next May, just in time for Memorial Day next year, upping the competition in the theme park capital of America. Are you Team Disney or are you Team Universal?
I'm Team Disney, but I do love Universal too.
Yeah, we like them both. We're both going. We're both going to be there in a few weeks, couple weeks. We're both going.
I am taking 6 teenage girls to Disney.
Nope.
I'm taking.
Well, look, it gets better. Theater kids to Disney.
Oh, yeah, just so many show tunes.
I'm staying in Disney Springs where there's the big shopping center. I'm taking 2 empty suitcases and I'm going to do all my Christmas shopping.
Oh, that's fun. I want some ears. I want some mini ears.
I have a ton of ears that I'm actually picking up from that closet. I'm going to bring some for you.
Yeah, all right, cool. Thank you. What are you guys doing in Disney, the stock?
Oh, I'm always long.
it.
Well,
Okay.
right now, down at this level, I'm long it. And we heard you talk about it the other day.
I was going to say the lightning paths. What do you guys think about that? $370 for, but you
She was
only
saying
get
it's only 100.
Okay, it ranges. It's based on how busy they are, what day.
Surge pricing.
Surge pricing, like spring break. So when we go in a couple weeks, I can go into Animal Kingdom and pay $129 and go on every ride once. It depends on the time of the year.
I would double check that because I think
I would double check that
like.
too.
I have all the prices right here.
Sure, yeah.
I've been at Disney.
But you need like a PhD to figure out Disney.
So
like
they
it's
It's a science.
it's complicated. Yeah.
This is smart what they did because they had to compete. They're outside apps now. They're outside apps, and we've used them where you pay for this outside app, and the outside app will book your rides.
Yeah.
And so Disney's losing money to these outside apps, and I think by doing this, they're trying to shut down those outside apps.
I just saw a TikTok that is like, why is everyone at Disney wearing a knee brace? But it's because they could like get in their lines like that, but you'll get in trouble like if you don't actually like it. But it was a funny video because it was like 20 people and they're all like wearing knee braces.
It is a pretty funny video.
So I don't think it's bad. It's way better than the VIP tour. Those VIP tours, which Tony has paid for. And have you gone on any?
I've gone on a VIP tour.
So they're super expensive, but it's to avoid waiting in line. So it's way cheaper to pay for this pass than the VIP tour.
So, and like I said, I'm very curious to see how yours goes because I think it's going to be a lot more expensive than $100.
The prices are all written down from this to this to this based on time of year, weekends.
We'll see.
Yeah.
I hope that works out.
And
But
they're different by park. Too.
it's so crazy and it's so expensive. Like now, I don't know how a family with kids.
I have no idea how a family goes to Disney World anymore. I really don't.
So I'll tell you, it's our cheapest vacation because we bought the Disney timeshare 20 years ago. We have that every year.
Sure.
And then we buy annual passes. So annual pass is $800 for each person. So we buy the annual pass.
It's bonkers. You could like ski the premier ski resorts for the season for like less than that money.
Yeah, that's the price of an epic pass.
Yeah.
We can go 5 weekends a year for a weekend trip, 5 weekends a year, and it doesn't cost us anything other than buying the annual pass once. So
Sure.
we'll take the kids 5 long weekends, 5 holiday weekends in 1 year, and it costs us $800.
All right. Well, can I be one of your kids? Because I want to go to Disney.
Not like if you know how to do it.
No,
it's just so hard. It's complicated. There's
I think
a
you
barrier
have to be able to
entry.
be down there a couple times a year to get the annual pass.
Yeah.
Like you have to be able to be like, I'm going to commit to Disney 3 or 4 times a year.
Right. That's bonkers. Hey, just real fast to get out of here. Popeyes is bringing back a holiday special, a Cajun turkey.
Oh my gosh.
For Thanksgiving, if you guys don't want to be slaving away, you give Popeyes $99, free shipping, and a Cajun marinated, infused, injected turkey will get delivered to your door in 1 to 3 business days. It feeds 8 to 12 people.
I do love that chicken from Popeyes.
Yeah.
My son goes to school in Ohio. There's no Popeyes near him. And when he comes home, the first place he goes every time, Popeyes, straight from...
You know who loves Popeyes? Linda.
Does she?
Oh, I'm going to go with Linda. I love Popeyes.
I love Popeyes.
Popeyes is pretty good.
Popeyes is, Popeyes.
I'm hosting Thanksgiving. Maybe I'll try the Popeyes turkey.
There you go.
Hey, finally today, every Friday I like to play a little video, a little segment I like to call Will Tom Eat It. I scour the internet for food for fat traders. But because we had ladies in, because you guys were ladies, we like a brunch.
We have brunched. We got to brunch again. Yes, we have to.
Let's brunch again. Well, I found this restaurant. It's actually in LA. I'll send it to Tom because Tom and the Tasty crew are in LA this weekend. But look at the size of this cinnamon roll and this Bloody Mary flight at this brunch in LA.
Oh, I'm in. Sign me up.
I found a brunch that's doing a cinnamon roll cart, where you get an enormous cinnamon roll frosted tableside. But
That
there's a
looks
small
nice.
catch which you have to know. The spot is Baltair in LA, which is an upscale steakhouse. And for brunch, they have this outrageous Bloody Mary cart, which they're sticking candied bacon, an entire garden, and much more in your Bloody
lobster
Mary.
tail?
The Sunday-only brunch is $85 per person and includes a bunch of starters. But my favorite was this Bellini smoked salmon tray. And included in the meal is one main entree to choose from. I got the filet eggs Benedict, which was solid. But I can't lie, it feels like everyone comes to brunch partly for the cinnamon roll cart. There's a few things that you have to know. It's only available at the Sunday brunch. It's not included in the cost of the meal. And the important pro tip is to reserve it in advance because it sells out. The waiter tops the warm roll with frosting, grates some fresh cinnamon on top, and cuts it up for each member of the table. Is it the best cinnamon roll ever? No, but it's still a super fun experience. And every meal should include a full cinnamon roll.
I love it.
And as always, follow for more food adventures.
That looks amazing.
Oh my God.
That whole place looks
I know. It's like,
That looks great. I would
you
eat.
would have to roll me out of there.
That much food comes? Starters.
Yeah, $85. The cinnamon roll's extra.
Yeah.
But yeah, $85 a person.
That looks really nice.
Yeah.
That's what I'm looking for. Something like that for Sunday while Lily's at Harry Potter.
You're going to eat all that. She eats like a bird.
I know. Anyway, this has been super fun.
Thank you, Vanessa.
An honor. Let's do this again. What's coming up next?
We have Confirm and Send.
We have Confirm and Send coming up. You're right. I was going to say Dr. Data, but he'll be in at 8 o'clock.
Yeah, you're watching.
Thank you so much, Vanetta. Have
Thank
a
you.
wonderful day.
Thanks, Vanetta.
Watching Tasty Live. We'll be right back.
You can get up to $4,000 when you open and fund a new account with Tasty Trade. That's 4,000 buckaroos, 4,000 bills, or clams, 4,000 in dough or cheddar, not the cheesy kind. 4 large, 4K, 4 grand, which is no small thing. Open and fund a new Tasty Trade account and get on the platform for traders who just want to trade. And did we mention a bonus of up to 4,000 smackaroos? Tasty Trade. Make your move.
Shake it up, stop when the clock hits 13. Sing 1, 2, 3, 4. Cause no one can do it like we do it, like we do it, like we do it. Cause no one can do it like we do it, like we do it, like we do it.
Life goes by fast, really fast. One day we're 25 and living large, and the next day we're 65 and hopefully still living large. It's the 40 years in between that are mostly a blur. When asked what they would do differently, most people confidently say, nothing. I have no regrets. As much as I want to believe them, I know better. I believe there's one common regret virtually everyone chooses not to remember. It's the taboo topic of not taking as much risk as possible every chance you get. Remember, the genesis behind Tasty Live was to encourage risk-taking. What were we thinking? Imagine the risk of building a business designed to encourage people to take risks. One of the things I've learned about taking risk, it's not personal. You can't let your ego dictate your decision-making. Unless, of course, you're the richest person in the world, then it's a death trade. Another thing about taking risks is that it's never obvious. There are no easy decisions. Risk-taking should be fun, engaging, and challenging. But if it ever seems apparent, success will not be easy. The great thing about the world of finance is that success does not require genius. In my opinion, the model for success, without a lot of complex math, is relatively straightforward. It's risk times longevity. Between academia and financial media, we have overly complicated embracing the paradox of risk. It's finally time to simplify the model behind success to risk-taking times duration. This definition should give everyone hope and a reason to hang in there.
Be
the opening bell. Get trade ideas and market insights before the open. From the creator, Tom Sosnoff, and our chief market strategist, Tom Preston. Every weekday. Sign up at tastylive.com/newsletters.
90% goes to S&P index funds.
You got to double your
10%
initial
straight to
investment.
Is 20th Century Advice driving your 21st century portfolio? tastylive has joined forces with the CME and SIBO to offer the industry's first multi-exchange trading collaboration. Our new live event, Building a Complex Portfolio, puts active traders on the path to modern portfolio creation. Tom Sosnoff and other tastylive personalities will cover strategies that'll help you integrate futures and options into your portfolio. Sign up at tastylive.com/events and see where we're headed next.
The delta of paper is equal to the partial derivative of rock with respect to rock, paper, scissors. If you think like a trader, we've got your back. Tasty Trade. Join the club, genius.
Welcome back, everybody. This is the Liz and Jenny takeover of the morning show, and we have now confirm and send, which we have, I think there's 6 that we have to go through.
Viewer emails. We're happy to answer.
Yep.
It's so nice doing the morning show. Everything is planned.
I know. It's awesome. Let's fire up number 1 because we've got a jam-packed show today.
All right, let's see. What do we have?
Number 1. Okay. How about?
I know it's far for you.
No, I can do this because it's huge. I think, Tom. What is the best way to defend an out-of-the-money short put spread that gets tested with more than 21 days left in the trade? Jenny Andrews, what say you?
$2.50 wide, $5 wide, $10 wide, even $15 wide. I'm probably doing nothing. $50 wide. If you have a very wide one where it's almost a synthetic naked put, then maybe I'd look at
still out of the money.
Oh, it's still out of the money?
What's the best way to defend an out-of-the-money short put spread? It's tested, so it means it's coming. It's like a piece in your sister. What's it from? Madagascar. Yeah.
Nothing. We do nothing.
Yes, you do nothing.
We don't need to defend it. It's out of the money.
It's still out of the money. So hold.
Yeah.
Okay. Number 2.
Great question. All right, next one. What are your thoughts on underlyings like NVDY? It's a covered call ETF in NVIDIA, but yields 54%. If I want some positions that just generate dividends, is there anything wrong with something like this? So
I just typed it in because I've never seen it before. There's a lot of things like that just generate dividends. Here, hi, my name is Liz. I have a couple products that are sitting in my IRA that are just generating dividends that I don't trade in and out of. I find nothing wrong with that because I think it's part of building a portfolio, right? I take a little bit of it and put it into products. Now, I don't have anything in ND.
It's a covered call fund, right?
Yeah.
So it's like if you had it and we're selling calls against it. But if you can't afford to buy 100 shares and sell a call against it, then this is a less expensive way to get in a covered call.
There are lots of those ETFs that are out there. I find I have nothing wrong with doing it. It's not something that I put a lot of time or money into, but sometimes like I said, I was at my groomer's the other day and she's like, oh, check out this. So it was just a dividend stock.
I don't know if there are fees associated with it.
I don't either.
No.
I don't either. But I have no problem, like I said. But you're right. You can create the covered calls yourself or you can take a portion of it and do it that way.
Okay. All right. Next up.
Okay, Tom talks a lot about the need to take risk and learning how to take risk, but I don't hear anyone else on the network talk about it that much. Do you guys think it's important to learn to take risk in order to trade? If so, what ways would you suggest aside from trading?
Oh, that's a great question. We have one of our risk experts here. I've been on the road with you for many years, many cities, and I have heard 1 year every talk all about taking risk.
Yes. So we do. I think we all kind of talk about it here. I think risk is extraordinarily important. It's funny because I think you're one of the most risk-averse people I know in life.
In life, yeah.
In life, but not in trading. And I think it's pretty interesting. Do you remember the one show I even tell my kids, it's okay to take risks. You want to take risks when you're younger because that's how you learn. You learn by things will either work or they don't work out. Do you remember the first talk we ever went on? Because I needed you in the audience. And I used to say this to my kids all the time. I would say, what's rule number 1? And they'd have to respond.
Never be afraid.
Don't be afraid. Yes, because that's true. Don't be afraid. Do it. Try it. Take the risk. it's hard with kids because I want to be like, but not drugs and not like.
So if what ways aside from trading, just trying something new, like you said.
I think it's saying yes. I know that sounds crazy, but that really changes everything. Things that you're afraid to do, be like, yes. Do you want to go there? Yes. Will you get up on stage and say this? Yes. Do it.
Right.
Will you sing karaoke?
Everything seems scary at first, but once you've done it a few times, it's not scary anymore.
Yes. See? I think that would be what I would say outside of trading. Just say yes to everything. Just do it. Learn something new.
Trading, I know it seems scary at first, but the more you do it, it's so hard to remember back to the first time we placed a trade, how scary that was. I mean, we've placed 1 million trades since then, but you don't remember how it is in the beginning.
And you don't have to, we don't analyze anything now. It's just like you click, 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 click. I can do my 79 positions in 2 minutes.
But to start baby small, like order something different off the menu that you wouldn't normally try.
Talk to somebody. Walk up and say something to somebody. I mean, that's kind of stuff that people don't do.
Yeah, say hi to everybody.
Yeah.
I don't know. I don't know.
Okay, moving on. Next. Okay.
All right. You don't like putting on strangles or iron condors in stocks that have earnings coming up because you don't want to get caught in the volatility expansion. But would you consider buying them for that same reason? So that's a really good question because we avoid strangles or iron condors when earnings are coming up because we just feel like we're not going to get paid. We're not going to get paid, and earnings will be coming, and then we'll say, oh, we're in this, never came off for a win. Now we have to take it off and figure out what we want to do for earnings.
So I think, and I say this all the time, you can get there. You can make money doing it. It's just harder. Like, why would I want to make something harder when there's something else out there? Unless it's something that I'm dying to get into. But it's like, and I say this all the time, it's like walking on the beach. You can get from point A to point B, but running in sand is harder than running on the sidewalk. Yeah. So you can get there. It's just going to be a harder way.
So when they ask, would we consider buying them? It's why we do the earnings setup calendars. It's if we don't want to sell that vol that's in earnings, we'll buy it, but buy it with a calendar or a diagonal where we're still getting those options at a discount and looking for that boost in vol. So we're not just going out and buying the iron condor or buying the strangle, but we will go out and buy options in the earnings cycle and sell something before it just to reduce the cost of it.
It's true.
That's kind of the whole point behind the earnings setup calendar.
I'm glad you brought that up because iron condors and calendars have the same principles. So that's true.
Yeah. Okay. Next, we're flying through these,
which is good because
we're a little behind schedule.
We're keeping it. We're behind schedule. I am long a bunch of stocks that thanks to you guys and selling covered calls, I now own at a cost basis of 0.
Way to go.
There should be an exclamation point. Would you keep selling covered calls in this case, or does it no longer make sense?
I'd still keep selling covered calls. Yeah.
Get it to positive where you can't lose money. Keep selling calls.
Or I might sometimes I'll sell strangles around it. So then if it drops back down, maybe you're in again and then you start over on a new set of 100 shares. Yeah.
So what stock was this? It was Apple.
Yeah. How long was it going to take to own Apple for free? We started that a long time ago, but at some point, if a stock blows through your call, you can end up out of it.
Yeah, and we as traders have a tendency to tap out when we make money. So it was hard. We wanted to own it for free, but we had made money because if a product goes up, it's a high-class problem. You're selling calls against it. But a lot of times you got to be like, I'm out.
I mean, at this point, there are plenty of stocks that I could look at and say, oh, yeah, I own X amount of shares of this for free, but do I just leave those shares? No, I'm still actively trading them.
Oh, for sure. You don't just hold the shares then.
Yeah.
You still actively trade them.
Right.
I like what you said about strangles because then you can jump back in again.
And you can jump back in on a pullback. All right, was that it, or is there one more?
I don't know.
Do you ever just take a big swing? Maybe it's buying options or buying futures or even stock. I'm just curious if you ever just allow yourself to take a swing from time to time just to get it out of your system.
Yes.
Everybody does. Everyone does. It's kind of like, going to play the slot machine or buying a lotto ticket. People do it just... If they have a strong directional assumption on something.
And if somebody says they don't, then they're a robot. Or is the kids like to say it, like a low-key bot. I was like, what the heck does that mean? Because you do. I mean, you take swings, I take swings. Now, I will tell you what Jenny and I don't do is because, and I do kind of like having this, the show account has checks and balances where it's you and me. We typically don't take swings in this account.
Hey, my recent swings have been TLT, have been a lot of TLT options. The weekly options are so cheap in TLT.
The weeklies make it so fun.
If you want to take a directional shot in there, those and not even the weeklies. They have even Wednesdays and Fridays. That you can get those for paying very, very little.
And they make it so much fun, don't they? So much fun.
easy.
I mean, everybody does. And if they don't, they're probably lying.
All right, I think that's the end of the confirm and send. So we did it. We are only 4 minutes behind schedule.
Yes. Well, we wanted to kind of go through these, and I want to say thank you to everybody who sent these in, because we have a special guest coming in.
Yeah, special guest. I think the cat's out of the bag. We have Dr. Data coming in to go over the new back testing feature. Everybody stay tuned.
Rock, paper, scissors? He just played paper. He'll do it again. No, rock. Men statistically play rock, but he played paper and lost, and the mind works in patterns. He's going scissors. He knows I know he'll go scissors, but knowing I know he knows.
Scissors, shoot. Thought we were doing rock, paper, scissors, shoot.
It's always rock, paper, scissors. If you think like a trader, we've got your back. Tasty Trade. Join the club, genius.
I think I've always been interested in finance. I have a degree in management and I took a lot of heavy finance classes, and I've always loved it, but I've always done passive investing. And so as I went through life, I decided that I needed to have a bit more control over my finances. I started to dabble in the options world when I opened up a brokerage account in probably 4 different companies, and none of them worked really well in terms of education until I got to Tasty. And Tasty Live in particular, because of the educational background that they tie in every single day on how to learn how to trade options. It started with the Where Do I Start series. It's outstanding. Tasty Bites, market measures from theory to practice. I don't think there's a show that I don't like, to be honest. That education piece is highly important. I found that Tasty offered that.
People are always asking, where can they find my podcast? There it is, son. Look at that. Option Trades Today. You can listen here.
And everybody's waiting for my podcast tomorrow. Option Trades Today, every Tuesday and Thursday around noon. If you want to learn, sir, every Tuesdays and Thursday, Option Trades Today. You can find me on YouTube or wherever you find your podcast.
Option Trades Today. You listening to me? Option Trades Today comes out every day around noon, every Tuesday and Thursday. You too can stick with the bat.
If you missed the live show, here's our cherry on top weekly recap.
First of all, I'm sitting in the captain's seat. I've never been invited to come sit in the new captain's seat. But what I'm concerned with is the size of these screens. And then he's still doing this.
Snow, let's take a look.
They did not hold that rally at all.
Phil, you got a partial.
973.75.
I'm looking at this like I have to move my head to get through the top, the top symbols. I thought he had like a little computer and he was getting down.
He hasn't learned that he could like swivel his head. He has to see the screen. He has to go like this.
To me. And then, you know what? Money goes to money. You did it. Good job out of you.
Yeah.
I just drove with him twice. Now I'm really concerned that I was just in the car with him for 2.5 hours.
Got trader's block? We've got the cure. Get data-driven trade ideas with Cherry Picks, our weekly newsletter that gives you insights into the market. Sign up at tastylive.com/newsletters.
We built Tasty Trade's web platform for today's traders. See it, click it, trade it. Drill into data, find opportunity, and track the action with hundreds of indicators. Track your options profit and loss history over time per symbol. Note your progress and plan your tactics with a trading journal. Fund your account and start trading right in the app. The tools, the data, the knowledge. See it, click it, trade it. Join the club. Tasty Trade.
What's up, everybody? Check out my new series, Life Cycle of a Trade, where I show you my real-time trades with insights into strategy selection, adjustment mechanics, all the way to the closing order for all of the Tasty Live core strategies.
Hello, everybody, and welcome back. We have a very special guest who I am very excited to see because you are the man, the myth, the legend behind this.
Oh,
Thank you,
welcome,
thank you.
Dr. Data. And
Hello.
everyone has been talking about this backtesting feature. You've been working tirelessly on it for a long time.
Yeah, working as part of a group. So.
Well,
Don't be modest.
Oh, come on.
It's just us in here. No one can hear us.
We're very happy to get this to get on the platform. Yeah.
Well, I mean, everybody really wanted to see it, which is great.
Mm-hmm.
So you are going to talk us through how to get there, what to look for, tricks and tips.
So let's start with showing everyone how they get to it.
Okay, absolutely. Let's do it. So first thing you're going to do is you can find out more about the backtesting application, some of the features that are available going to tastytrade.com/backtest.
Okay.
Singular, backtest. And you can see some of the, how you can learn from it and what you need for this. This is free for everybody. Usually you'd pay like $50, $150 a month to get backtesting.
That's what I'm shocked by, is that it's all free.
This is free. Yeah.
I mean, you see ads about, hey, you can test your strategy. Like, people have to pay for it.
T4 and stuff.
Yeah.
Absolutely. But this is 100% free as long as you have an account with us. So it's my.tasty. Now, this is only the web version. Okay, so you're going to go to the web. It will be out on the desktop application.
Okay. It will.
Yes, it will be, but that's still going to that's a little ways off.
Okay.
But we want to just kind of show it to you right now on the web version. Web version, you're going to use the same username, same password as you would on the mobile app, desktop. Web version, all same user. You're going to use your same username, your same password to log in. But you're going to go to my.tastytrade.com.
Okay.
Log in. So, when you get there, you usually start off at just the home page. Okay, the dashboard. But here, I'm going to go to the left column and click this little replay, this little backtest logo here. Now it might be like this when you start up. You can click this little top left widget, and you can bring up the sidebar there.
Oh, there it is. Okay.
You can see backtest. Now the first thing that you're going to see is a disclosure, and the disclosure just kind of walks you through and tells you that backtesting is using historical information, and past results are not
indicative of future results. Yes,
yeah.
We've heard.
As long as you've been around the industry a little bit, you know that slogan, right? So what you have here is we have about 50 stocks. Okay, right now we're going to get up to hundreds, within no time at all.
So you have 50 stocks. For some odd reason, in my mind, I thought you would only be backtesting something like SPY. That's a lot.
No.
I'm telling you, this is amazing.
That's a big universe of products.
She laughs at me. I can sit down with a glass of wine in the backtesting and have a nice evening.
She does.
That sounds like a great evening.
She does, Dr. Data. And then she'll call me and be like, you're not going to believe this.
Background.
No, I don't like any distractions. I just like to run my backtesting.
She does. I'll vouch for it.
Okay, every Friday night, backtesting at your house. Party.
It's a party.
So here I'm going to choose them. Well, what do you want to do?
Just stay in.
Here, I see SoFi, which just seems silly, but SoFi, you could say sell, just sell a put in SoFi, sell like a 40 delta put in SoFi and see how that worked the last few years.
Okay, well, let's do that. Here.
Just looking at something different than SPY.
Yeah, sure. SPY is so 2023.
Well, every study we have is SPY, and I saw it there.
You're right.
It's nothing I've ever backtested before, so and it's something I trade.
I haven't backtested it either. We go here and we look at the intervals.
Or even 50, even 50 delta put. I think
TLT's on there. Did you see that, Jenny?
We look at the intervals here and we get to choose what we want. So the idea is, so people ask, what should I choose?
If you go the past 2 years, does it take out 2020?
Yeah, well, the past 2 years, yeah.
Well, yeah, because we're in 2024.
I know, but that's true. Yeah, you can go back. I was told there'd be no math today. So then you can say 3 years too. So the 5 years, 5 years is the only thing that's going to throw in 2020.
Let's just make it look a little better. Let's
go 3 years
for the data.
Okay.
Right. You can also look at different scenarios too. So
please keep in mind, I cannot see that or this.
Sell-off, the pandemic sell-off. You can look at the post-pandemic surge, the tech sector mania, the trade war roller coaster. Yeah, we got kind of
the trade war roller coaster.
We had a glass of wine looking at when we were coming up with these.
This is what I'm telling you. How
she's going to be hammered.
When we came up with these. So, and we went over here, and so you choose
You got
your
to make
scenario.
the delta pretty hefty because it's a low price product. But
Okay.
I always say that my favorite thing are selling puts in low price products, and this SoFi is one of my
I like
on my
that.
list. SoFi, DraftKings.
I agree with that.
We got all these.
Yeah.
So here, okay, so you're going to have a lot of entry conditions. So let me just kind of run it over here, what you're looking at here. This is selling a put. Now, I have on here one contract, 30 deltas, 45 days
I think you have to
expiration.
make it a higher delta because
Okay.
it's too low price. So
Go 50 delta.
Yeah, put a 50 delta.
And this is the cool thing about it is you can change your expirations. And let's just, because we always talk about 45 days, let's just make it, 30 days? Is that cool?
Oh, sure. For 30
Am I
days
throwing
out?
you off? Am I throwing you off?
And we're 3 years. No, you're good. You're good.
Well, so
and we're going
45
3 years.
days, we probably need 45 days.
Okay, let's do that then. I'll put it
Because
back.
when these low price products, you need 45 days to get enough credit.
This is interesting because SoFi was invented
can
or
change
started
it.
trading in 2021. Okay, go on.
You can change it if you want to. So you can make it 75 days. You can make it 100 days. You can change this expiration here. The next you're going to look at here is you say, what are my entry conditions? So this is the first one here is just when you put on the trade, you're going to use the one that is closest to 45 days till expiration.
Okay.
Like if we look at the market right now, and let's look at SoFi right now in the
I can't believe we're in SoFi.
I mean, it was next
If
to
we-
SPY, and I didn't want to do SPY again.
If we look at SoFi, right, right now it's 42 days and 63 days, okay? So if this were to get back tested, we would choose the one at 42 days.
Yeah.
If you have in here, choose exact DTE, it's not going to do it until it gets to 45 days.
Got it.
Exactly.
Got it. I mean, it's a computer, so you
It's a
have to give
computer.
it exact parameters.
You have to give it exact parameters.
Number 5.
You can also say, okay, I only have a day off on Friday, and I have to work on all the other days, so I only want to check on Friday.
Well, I mean, and I think it's realistic to say once a week instead of every day because nobody's going to put this in every day.
Well, here's my question.
Here's the cool thing here is you can limit the number of active trades. So because you only have a certain amount of money available, right?
I have unlimited
You don't
funds,
have that
but go ahead.
Daddy Tom money.
So let's say you limit your trades to 10.
You can definitely do that. Yeah.
Oh, so I have a question.
Or one active trade, meaning like if you just want this on, then take it off. I want it on,
Well,
take it
let's
off.
say
You
you
can
don't want to do a 10 you don't mind having at least 10 on because it's over the course. Because
so
it's
fine.
So my question with if you say put it on exactly 45 days, but you check every day, you're not going to really get
You're
filled
not
every
really
day.
doing it every day.
You're not doing it every day.
Maybe we should. Maybe this one should be called, approximate days or something like that. Maybe this is could be reworded.
I'm only
here on
asking
every
because
day.
a study that I have done that I have in a presentation, I checked every day, but only 40 on the 45 days because I didn't want to have it on every day. So then you might have it.
You probably would have to limit the number of trades
Limit the
that
number.
you're looking at here. So
may need
like
to
let's just do
redo
it right
my,
here, just so we can look at the numbers. We're going to say, let's just do it on the one that's closest to 45 days. So it doesn't have to exactly reach 45 days. So it's just going to do it where you only have. So it's going to do it on day one. It's going to put on a trade. You're not going to create a new trade until that trade has been taken off.
Okay.
And then you're only doing one trade.
Oh, but
Okay?
we
So
need more
it's not
money
really
than
doing
just
it every
one.
single day. It's just
So
let's just see.
okay, so this is only one at a time.
one at a time. But we're going to go back and we're going to adjust it.
Okay.
So here, I'm not going to say any exit conditions, and so let's run this. Okay. So here it is. Okay, that's the 50.
The puts won. It was like a race watching through the whole
It
thing.
didn't really perform very well. The buy and hold approach lost $383.
Because SoFi went down. That's what I was going to say. I looked at this. SoFi went down. So puts are going to lose and stock is going to lose, but puts beat stock.
Both of these strategies did not look very good.
No.
Realistically. Now,
It's interesting because it's
but we can make adjustments.
You can put.
Let's make adjustments to it. Okay. So let's say, like you said, let's put on 10 at a time. Okay.
so you
We
have
can
10
run it.
trades on it.
We can put 10 trades on at any given time. That just means probably we're going to lose 10 times as much as
Yes, because
And then
before.
manage them at 21 days.
We're going to manage it 21 days. Yeah.
I mean, this should look identical if it's just 10 times, right?
Well, yeah, this would look
You're gonna lose
10
10.
bigger.
Yeah. Yeah.
Yeah. So stock wins a little bit. It's so funny how slow it goes.
Yeah, this is a little
Well,
bit
it's a
slow the
lot
first
of
time around because
information.
I know.
And once it's queued up in the information, once it's stored and cached, then it's much quicker the next time around.
What I'm seeing,
So here-
Jenny, is close your SoFi puts.
You know what? It's funny because I'm always selling puts in there, and I've had positive P&Ls in there the last few years. So I
This
don't
doesn't
know.
look very good. This
I
doesn't
don't know.
look like a great,
I don't.
at least historically. Let's go back here.
But again,
okay?
as
Let's just go to 1 again because that was kind of quick. But let's try to see it managing the position. This is where like this is where like you refine. Okay, so this is what I consider paper trading. Paper trading for 2024, right? Paper trading is like you sit, you have to wait. You know, it's and you can get stuck on paper trading and never get off paper trading. This is basically like one heck of an education because you're getting the results back almost instantaneous. It allows you to be able to refine your strategies, get the results back very quickly. This is like getting an MBA in trading.
But I would like to stay. I'm going to put something on here too because this is from Spider-Man. With great power comes great responsibility.
That's right.
You have to. You have to know. You kind of have to because you can manipulate this to get if you wanted to get a certain result.
Yeah.
Yes.
So that's why I think.
Yeah, like and even if you change your time frame,
You
if you
look
go
at-
Like if you want to win on these puts, we can make
go to
yes.
like 1 year. If you go back 1 year, you're gonna get different
you're
results.
gonna it's
can
gonna look
change-
pretty good.
Yes.
But here, okay, we just put we put it on 1 and we did a managing at 50% and that didn't look very good either, you know. So there's a lot of adjustments that we can make here to try to get better results. But this is kind of like what you do. Yeah, if you probably go back in the 2 years, you probably would have made money on this particular strategy.
And we can switch.
You know, I
See
think this
here,
is a
you
lesson
made
too
money on
on
this strategy.
how we are always, and you know, and I know, like let's say we start with something and we're selling puts, then it falls really far. We may then change our position and just sit long for a little while, wait for it to pop back up, then get back in, and so like we're not just doing the same thing all the time.
That's right.
But this just that kind of shows that.
Yeah.
Okay.
So that was interesting to see because I have a handful of products that I'm always in and doing well enough in.
Yeah.
So it's surprising to see, these aren't really good results.
Well, it's a
Just
low price
doing the
product.
same thing.
Yeah,
That's
just
right.
doing the
This
same
is
thing.
a very low price product.
Can we do a complex?
These are additional screens that you can look at to the details, and I want to explain this real quick to everybody. The logs view is really helpful, and it gives you the fees associated with it. So this got assigned, you had an assignment,
wow.
therefore you got the $5 hit along with the
Okay.
$1.14 along with all the expenses.
But how
Each
would you
one
get
of these-
assigned if you're closing them at 21, or that's when you're not closing them?
You are not on this one. So this just shows you, and each one of these are different downloads. So you actually have 4 available downloads. So if you're somebody that wants to kind of nerd out with that glass of wine on Friday night, you know, you want to, you can have a spreadsheet party. You know,
You can get crazy.
You know what I think is
get
not-
crazy, Jenny.
You know what I'm going to do now? I'm going to take things that I've had and look and see, and let's say I'm positive P&L, but I'm going to run what I think I'm doing and see if it comes out the same.
I like it.
You know, just like, okay, let's say you're in XYZ and you're up this much and this is what you've been doing, plug it in and see if those numbers are similar to what your numbers are.
Do you have the 0 DTEs in here?
We don't have 0 TD. So this is great question. So we do not have intraday data right now. If we have enough people, using this, I'm sure this is something that we can request. But cost and stuff like that is kind of.
Oh, for sure. I mean, the fact that this is free in and of itself is amazing. And you can run complex strategies on here too, can't you?
You can get very
like multi-legged, like zebras and jade lizards and big lizards and all that stuff. Like you can run all that stuff
right
on
now.
there.
It's only based on deltas.
Right.
But the possibility of adding a drop down along with percentage difference, percentage down, percentage away from the previous, these are all things that are,
in the pipeline and coming down.
We run, what time? We still have.
Yeah, you got it.
And we run, I want to see something, I want to pick something and compare selling weekly puts versus the 45-day puts.
How about TLT? Get something higher than.
Let's do that.
Well, TLT has been falling. I mean, maybe do you have DraftKings in there or something? I want to compare weekly puts versus.
Don't have DraftKings yet. That's something.
Versus.
There's CrowdStrike. Just pick a stock that you want to do it, Jenny, because you have a vision.
Or even, I guess, even just do like IWM. I just want to compare weeklies
let's
versus
do that.
45 days.
Okay. What are we choosing?
Sell a put 30 delta.
30 delta, okay.
Weekly versus
strategy, of course.
Yes.
Weekly versus 45 days.
Let's just look at 3 days.
And only having one out at a time.
One at a time. Okay. So let's for this one, let's just choose exact 45 days till expiration.
Okay.
Should we do any type of exit conditions?
21 days till expiration.
For 50, 21. Well, no, 50%.
50%.
It can't be 20. Yeah, if we're comparing weeklies versus 40.
Yeah, 50%.
That's right. Because there's no.
You want to get out of the weeklies? 50%, I guess.
Well, I don't know. I want to see the
one at a time. Yeah. So this is versus the stock, right?
Yeah, for the stock for the past few years, it hasn't really worked out very well. Like a buy and hold approach.
It's done better.
Didn't make any money at all. You know, buy and hold, you lost $10. This, you lost $3,200. Probably from that decline here at the very beginning is where you lost it. Let's look at the details. Yeah, you can see you had some pretty big losses here at the very beginning of that strategy. But it looks like since 2023, I mean, it's actually been profitable pretty much every month.
So how far back were you doing this?
This was 3 years. 3 years, yeah. You actually were profitable 82% of the time, but those losses were bigger than those gains, so therefore you lost money on it. So let's go, and we can now choose it for, let's say, 5 days. Limit number of trades, okay, one at a time.
Is the puts are the orange, right?
Yes, the puts are the orange here. So this one, you actually had about a 50% return on capital. Average profit per trade was $10 and $2,500 worth of profits.
So as the weeklies perform better.
Weeklies for the win.
Your profit rate was actually quite a bit better on this.
Head to head, weeklies.
I'm a big weekly fan. I know our research shows 45 days, but I'm a big weekly fan because you're in and out. You're in and out quick.
Or you're long the stock.
Trades here. You have a lot more trades. You have 207 trades, whereas before you didn't have nearly that many.
Yeah.
Now we also show the total fees, and the fees. This is.
Well, I think that's good. It's a piece of the puzzle.
Yeah. I mean, we can lower the fees too by even saying something like, okay, exit right before 1 day, you know, and you're gonna just
close the yes,
you know, the day before. So
yes,
it's gonna minimize your.
It's gonna take it down by $4 because it's $1 versus $4, or free versus $5. Yeah.
You're not gonna get hit on that constraint here.
I mean, honestly, though, Dr. Data, that's pretty interesting when you look at that. When you take the fees and you're gonna close it for the 1 day. Look at how profitable that is.
And I know it's a lot more trades here, but you never have more than one on at a time. So
yeah.
In one scenario, never more than one on at a time. Here, never one on more. So your risk is the same as far as never more than one on at a time.
So you look at the amount of used capital. Okay, you used about $5,300 of that. So let's look. Okay, that was IWM.
I totally understand why Tom leans in like this.
Did we?
It's right there.
Oh, I know. It's right. No, I see.
So let's just show what would have happened here. Okay, so if you would do this in practice, you would look at the one that's 5 days away, and you're
30 delta.
Looking at the 30 delta. So it's basically doing this strategy right here, which is right now it's actually $4,000 with the buying power. And that's what you'd be doing, and you'd be making 32 cents.
And it's
worth of
so
credit.
little. It's so little.
It's not very much.
Not worth the $5,000 for only 30 cents. And typically, and I'm a big weekly fan, but usually in something that's lower priced. But also when I go out for the weeklies, I'm usually like this week doing next week's Friday.
Yeah, so you got a little bit.
So instead of 5 days, maybe you have 10 days in it. You have
good point, yeah.
a little more time in it, a little more premium in it. Maybe 60 cents or 70 cents instead of 30 cents.
I like it. All right, Dr. Data, this won't be the last time we have you in. Hopefully you can join us on our show because this is amazing.
I just wanted everyone out there to see how much fun the back testing is.
I mean, I'm not going to lie to you. I might have to start drinking wine on a Friday and back testing.
Love it. Thank you.
I might start drinking at noon when we're off the show when I start back testing.
Well, thank you for coming on, and I'm glad everyone could see it's not just SPY. I know our studies are SPY, but you can test it. There are many, many products. How many products in there?
50 right at the moment, 48.
I mean, that's amazing.
And more coming.
Yes.
A lot more coming.
All right, we'll be back in 90 seconds to get the opening bell. Spoos are still up 15.
Stay tuned.
To my trusted financial advisor, let me know your thoughts on reinvesting what very little remains of my money into ramen noodle stock, now that I'll be eating it for every meal until I die. Best, Cynthia.
Sometimes it feels good to get smart. Get even smarter with live market insights and insults.
They're all freaking losers. There's no skill.
From the smart mouths at tastylive.
You can get up to $4,000 when you open and fund a new account with Tasty Trade. That's 4,000 buckaroos, 4,000 bills, 4 large, 4K, 4 grand. Get on the platform for traders who just want to trade. Tasty Trade. Make your move.
Just under the bell, we're coming right back in. It is about 5 seconds until that bell rings, Jenny.
I'm going to get right in. I'm going to jump in.
Yeah, I know. I was like, are you going to tell me a story?
I'm putting in the trade that Liz and I do every morning. I'm going to tweak it. I'll narrow it. It's the bell. So 55.
Am I looking at your thing with you?
25. I'm going to go like 50 points down. So 05, 50 points down. And I'll just make this $15 wide.
Perfect. Hit it.
Okay.
Hit it.
And then to the top, 50 points up.
Oh, you're doing the top too?
60, 70, 80, 90, 100, 100. And how about the...
Come on, TikTok. You're taking your sweet time.
All right, $15 wide, $1.25, and ship.
Okay, so this is something we do every morning. Now, I will tell you, Spoo's just opened. They're falling a little bit. They're only up 10. NASDAQ's up, but Dow's down.
Okay.
Are you surprised by that? Dow's down, Russell's up, everything else is up. Everything's green, but the Dow.
Do you see it? Oh, I'm sorry. Did I never put this on? Did I never put mine on the? I guess I missed hitting the bat button to show the platform. Did I show the platform?
Yeah, we can see the platform.
Okay, good. Okay, so you see, I was working this to sell it at $1.25. I took less risk, $15 wide only. So
now I know you've been doing this. I've been doing just the puts and taking $2 in for it.
Yeah, so I made it wider. They're further. It might seem like a lot of risk.
Yeah,
$1,300 for $1.
Well, we're not filled yet. We might not get filled because now we're running by. It's already like a minute and a half past. Usually, you got to get it in the first minute.
And you could see it's right there.
Yeah,
$1.25, $1.25.
Nonetheless, look at this. Spoos are only up 7 now.
Yeah.
What else do we have to do? What else do we want to look at? Bonds are moving around big, and that's on the housing, and that was from Frank, so thank you very much.
Okay, so ZB, let me take a look at it. The big move, the big jump is that it was down. They were down, and now they turned around.
And Frank was telling me this is all about housing. All the housing starts, all those 3 numbers that came out at 7:30. It's housing for the win that is bringing the bonds back up.
Okay.
Let's take a look at our TLT position.
Oh, it's not moving that much. So TLT
It shouldn't.
is up
TLT is
34
smaller.
cents. We have a strangle. We have a short strangle around a zebra. It's not really doing too much with TLT, only up 30 cents.
We have a short iron condor around a zebra because I was looking at that. I was like, there's way too many legs for a strangle around it.
Oh, we just did it to reduce buying power.
Yes, to reduce buying power. Do you want to, while you're in there, will you separate those so that you can put the iron condor in?
Sure. So here's our iron condor, 90.85, 98.103. $5 white iron condor. I'll just put in a GTC for 50%.
And Frank is awesome because he's just telling me what's bringing down the Dow is AXP. They had earnings yesterday.
Oh, yeah. Let's look at some. Okay,
AXP
and then
down
let's go to our
$12.
Netflix position.
Yeah, we got to close our Netflix position too.
Netflix position.
No, we don't put GTCs in. We don't put GTCs in. Ooh, yikes. We probably could have got on that right on the open.
Well, no. It's 3 minutes. It was 3 minutes ago. And let's see. Netflix shot right up. Yeah. So let's
now we know it's
probably a scratch.
We know that it trades for 50% when it's right in the middle.
It's annoying because now it's through our calls, but I almost think we have to
close that thing. It's a scratch.
It's really
put an order in to scratch it.
Did you see how wide this market is? 75 cents at $2. It is bouncing all over the place.
Yeah, put an order in to scratch it. I think we got a 111.
I just want people to know, you don't have to panic. When it's trading in between 2 strikes, it should trade for half the distance of the strike. So I'm not going to panic and say, I'm going to pay $140 for this.
No.
It's 250 wide and it's trading in between the 2 strikes. It should trade for about $1.25.
I was going to say, I think we got 110 for it. You can put an order in to scratch it. I think it's going to be bouncing around today.
Yeah.
It's out of the money, in the money, out of the money, in the money.
Okay. I will put in order to scratch it, which is annoying because this morning it looked pretty good that Netflix wasn't going to have gone its expected move. Now it is beyond its expected move. of $50.
And take a look at AXP. That is bonkers. We've got that order in, which is good.
Down $14. It doesn't look.
You're filled.
Yeah, we're out.
Yeah, we scratched it.
I mean, it doesn't look too crazy.
That's a big move, though. It's outside the expected move for sure.
Yeah, so it was a 5% move down in American Express.
Yeah.
But
are the other financials going with it?
So we've had a lot of those, like Citigroup was earlier in the week. That was down. It's not, and they're coming down off of.
You're filled in SPX.
Oh, because now SPUs are unchanged. When I put it in, we were up 10, 12.
Yeah.
So now SPUs are unchanged. So we're filled. Let's talk about that trade. It's a trade we've been putting on every day in our own accounts. It's not quite the same. We'll make it wider. You only do the puts.
I only do the puts.
Now, it's one of those trades where it's kind of like what time? Yesterday I bought this back for about 20 cents. What time do you think that was?
I don't know. I think I get out of mine faster because I'm only one side.
If you get a move in the right direction.
Yes.
Now, it's not one of those that's going to come off before the show. It's not like the Jajun trade that comes off before the show.
Jajun! It's not Jajun. So this day's on it. And that's why I was asking about the 0 DTEs with Dr. Data, because this is the one that I want to be consistent on. I want to do 1, 2, 3. So I'm doing 3 SPX 0 DTE trades a day. Come hell or high water. Whether I'm in the car, yes.
The Jajun middle of the day trade.
Middle of the day trade, end of the day trade, and this one. So, I mean, the one that we do during the show is the Jajun special, which that's it. It's going to be.
And I'm a little bit sad. I don't. Did you put it in?
The Jajun special?
No, the morning trade. I don't have my computer up here.
No, I didn't. There's too much stuff going on. I just pushed everything out.
But this is similar. There are lots of people who trade these 0 DTs. This is just what we've been doing.
So the VIX is only up 13. So let's can you go to the VIX real quick?
Should I put in an order for this to close this at 20 cents?
Sure. I don't care if you take $50 out of this too. While we're on the show and we're putting this in, I don't care if you.
Yeah, I guess we'll check it at the end of our show.
I would put it in for $50 just in case. You're not going to get out because it's both sides. You're going to have to sit on it.
Well, and this is the morning. Like this is 8:30. We were never on at 8:30. We're used to 11 o'clock. Things are slowing down. We could get out of this. Well, I don't think we're going to be out of this at 10 a.m.
No, but I still want to have a GTC in. If some weird thing happens in there, I'd rather have a GTC in.
So I'll just put in for 50%.
Sure.
There we go. Okay, so that's in for 50%.
And that's working. Now, do you want to take a look at the volatility? You can look at VX or you can look at VIX. I don't care.
Okay. VIX is 1920 up 10 cents, so kind of unchanged today.
VX is down.
So you're looking at /VX, the future?
Yeah. So that's what I'm saying. We were only because Vanetta was talking about it today. Which do you think is the precursor? Not VX or VIX. I'm not saying that. Do you look at the market or do you look at volatility to tell you where things are going? This is a mixed bag.
I mean, they're both unchanged. One's down 10 cents, one's up 10 cents.
Yeah.
I think right now VIX is I don't see VIX coming down until after the election. So I don't know that it's like that much of a tell as to what's going to happen today. Right now, they're both pretty much unchanged.
Yeah, they're both pretty much unchanged. But that day where we saw the VIX down, or the VIX up, and the market up, I was like, up a lot, up a significant amount in the VIX. We were just like, that's weird. That's the day we had a huge turnaround.
But then, was it Tom who said, everyone's buying their protection. Everyone's coming in and buying their protections. Market's at all-time highs, so everyone's buying puts to protect themselves, and so the put prices are going up, and that's what's increasing the VIX.
It's a possibility. I mean, because it's cheaper now to buy those 0 DTEs than it ever was before. When you had your protection is cheaper because it's narrower term.
It's not the 0 DTEs that are boosting the VIX as much as just in general people buying. If people are out there buying puts to protect their portfolio, the puts are getting more expensive, and so that's just overall increasing the volatility.
Look at the VIX one day. So the VIX, look at how low that is. The VIX one day is down $2, and it's $8.45.
So from our recent studies, we always say, like, look at the day before close. So yesterday's close was 11.12. So right in that range of 10 to 15. It seems to be closing in that $10 to $15 range.
Yeah, the close from the days, because this is pretty low. Okay, let's close. So we closed our Netflix trades. Is there anything else we want to do before the next segment?
It's almost time for fast market.
No.
Anything in our account, we will be in our account. We could adjust these trades, close these trades, push them out on the follow page.
And we will. So if you're in the account right now and you can see it, there are a couple red bars. They are residual options. They're long options that we were trying to replicate stock. We will either move them out in time or close those, but we don't.
We have some long options. We have some short spreads. We've got quite a bit of red in the money signs, so we can deal with that after the show and push them out on the follow page, because it is 10:40 and it is just about time for fast market.
Yeah, and I want to see if there's any profits we can take. I don't think so, right? Not yet.
As far as the day goes?
Yeah, are you surprised that it is now, Tom and Tony are both gone and there is no crashing of the market yet? Knock on wood.
Not yet. That was the only reason I hesitated a little bit on putting that SPX trade through.
Because they're going to be gone?
Because they're gone, and usually it comes on a plane, the market crashes. That was my only hesitation. Okay. All right. I think we're good. I think that's it. You ready?
Yeah. So we're trying to keep everything on time, John. We are trying to be on time people. We're going to take a quick break, and when we come back, we've got fast market 10 trades.
We're ready.
In 20 minutes.
Stay tuned.
Dear Chad, thank you for trusting me with the workload of 5 people this week. It was an invaluable learning experience. All 97 hours.
Sometimes it feels good to get smart. Get even smarter with live trading insights and some live taunting.
You made me print out something for you in 40-point font.
From the smart mouths at tastylive.
Shake it up, stop when the clock hits 13. Sing 1, 2, 3, 4. Cause no one can do it like we do it, like we do it, like we do it. Cause no one can do it like we do it, like we do it, like we do it.
Are you on a quest for trading enlightenment? Driven by an unquenchable need to find the twin flame to your chosen strategy?
Our Where's Spat live event is the search for trading's ultimate holy grail.
Do you have what it takes to find the elusive bat as we visit 3 cities?
Join 6 Tasty Live speakers
as they present 6 unique strategies
and 6 unique clues using games and probability
to lead to the ultimate prize. Sign up for this free event today at tastylive.com/events.
Don't die like squirrel.
Crypto is better when it's tasty. The Tasty Crypto Show, hosted by me, Ryan Grace, and Frank Caberna, will help traders of all levels learn DeFi trading. We'll provide our insights on altcoins, crypto industry news, and blockchain education. And we'll have you swapping, staking, and trading using derivatives in no time, all using the Tasty Crypto Wallet app. So don't fork up your chance to become a crypto master. Watch Tasty Crypto only on Tasty Live.
In road trips, my family, it was like whoever could get the captain seat was it.
That's great. I'm having a great time.
Me too. But, I mean, stay a while. Take your jacket off.
No. I mean, I'll stay, but the jacket's not
Come
coming
on, take your jacket off.
Nope.
Come on, no.
I'm sorry. I didn't mean to.
No, I'm sorry.
You hopped on this cowboy's horse, so I guess you got to hear his tale. In '87, I took it off. There was the market crash. In '92, NBC canceled Blossom. A couple of years ago, I lost it for 2 days, and the Lakers won the NBA Finals. Bottom line is when this thing comes off, bad things happen.
You've got to take it off sometimes. I mean,
Never do.
How do you shower?
The jacket's kind of gotten used to it. In fact, every few days it needs it.
No matter what, you keep it on.
I can take my shirt off if you want, but I'm not taking the jacket off.
I just don't know if that's something that I could deal with.
It'll be like a teal tornado. Just endlessly washing up on your short.
I mean,
This is moving so fast, and I like it.
Yeah.
Golf putt, normal distribution. Reduce speed, increase standard deviation for a wider angular strike. If you think like a trader, we've got your back. Tasty Trade. Join the club, genius.
Heard that fast market music, have you?
No, I don't think
It's very catchy. It's like,
Yeah, you're right. Why would we never have heard fast market music?
I've never heard it before. I don't know that this is one of the segments where I'm usually doing something, so I don't know that I see it that often.
Okay. Fast market. We have 10 trades to get to. Let's 10 trades, and we don't have a lot of time, so fire them up.
I'm not gonna lie to you. Did you look at these?
No.
Me neither.
Right, we'll be surprised. Okay, what do we do first?
Okay, silver, slightly bearish. This is not from me. Neutral, slightly bearish / neutral. 1/3 call ratio spread in November. Buy one Nov 25, 37.25 calls, and sell 3 Nov 25, 39.75 calls. Use a decent amount of buying power, but no downside risk, and a break even is at 41.
So I like this idea of buy one, sell 3. You have room to the upside.
Correct.
The risk is to the upside, but you have room to the upside. I do like it. It's really way too expensive for us.
I don't mind it.
Way too expensive for us, but
if I were Tom, I would be doing that as well. And I like what you said. So I said this isn't from me because I am, like I said, a little bit more bullish in silver. But let's pull it up.
Let's I'm gonna go let's go the platform if that's okay. And I just went to SLV to put this on a smaller scale.
Okay, so then let's do this. You're buying one.
I'm just gonna go. I don't know if he has deltas on here. I'm gonna go to like the 30, which is right there.
Yeah, you're buying.
And then
buying one of those, and then
I could
sell 3 up top. Yeah.
So I'm taking in a credit. I'm taking in $66 credit. We have room up to 33 and 33 and change.
This is not bad.
It's not bad. It's not bad at all. We have you have the risk of 2 naked calls, but you're way up at not even on the screen.
Where's the break even?
33 and change. It's clever. It's a clever trade for sure. Do I press this button?
How much capital is it?
777.
777? Hit it.
66 cents, and you are using 777.
So we also, wait, Jenny, we already have a bearish trade, not a bearish trade in silver.
No, we have another trade in another cycle. That's why I moved this to 40.
We have a reverse.
I wasn't worried about that.
I know, we have a reverse big lizard. I just want to let everybody
I'm going to ship this. And this is bust out the certified badass card. We just sold 2 naked calls in SLV. We bought 1, sold 3, so we're short 2 naked calls in SLV.
If I start
the certified badass,
if I start shaking over here,
if she were in control of the platform, that trade would have never gone.
Never happened. Never happened. All right, number 2. Number 2. OKLO. Pull back slightly. Maybe a short put for December TTE. Credit put spread or debit call?
Yesterday, okay, so back in the platform.
This is specifically for you because you are an OKLO human.
This is from Richie Rich. So I'm going to try this. I did it. Are you seeing the platform now? I clicked on the bat screen.
Yeah, the platform's up.
Okay, so here's OKLO. A little bit of a pullback yesterday, but then back up today. Everyone's trying to get in on OKLO. We had positions on. I think they're gone.
And please, Richie Rich, this is from yesterday. So Richie Rich, I hope you sold your puts yesterday or did your debit spread yesterday. We have a position.
Here, we have a long December 15 call, short the November 20 call. diagonal. We'll just leave it and keep the dream alive in OKLO.
Yeah, but I like it. I mean, I'm long OKLO, you're long OKLO.
Sure.
Everybody's long OKLO. I mean, because it's a newer stock. It's kind of in its infancy. Okay.
Okay.
Number 3.
Coin. Coin is tough too. Earnings are approaching, but I'm still selling premium with the December 153.50 strangle. I mean, look at that credit, 930 credit. Justin from Portland, you get a certified badass card.
And you get a certified badass card. Yes. So Coinbase, look at how wide it is. $200 wide strangle, collecting $9.
Sometimes when something looks too good to be true.
December. So okay. So can we pop in and take a look at this? So you know what?
Yes.
So in Coin, it's the December 150.350. 150.350 in December. Earnings are on the horizon. You are a certified badass trader right now.
There's so much premium in here, and you're at the 350 call and the 150 put. It looks good, but I've seen this before where something looks so good. And then you do.
My opinion is if you're going to sell strangles, I don't want the earnings before it. I would sell strangles in the earnings cycle. I don't want that much room if there's earnings.
Well, the earnings are in a few days. The earnings are.
That's what I'm saying. Sell the earnings strangle instead of this strangle.
Well, the reason why you're not going to get here. He's getting such a wide range. You're not going to get that wide range.
Or sell it in December, the eve of earnings, because here's what's happening right now. If you're selling both sides and it moves, what day is earnings? October 30th.
It's next week.
Next week. So you have another week.
Well, no, it's 2 weeks away.
Look at what Coin did in the last 2 weeks.
It's been all over the place.
So you're not going to be able to get out of it. You're not going to be able to get out of it if you sell that premium and then it gets this move. So if you want to sell a strangle with earnings in there, I would wait till the eve of. I have no problem selling strangles.
We usually do.
Yeah.
But can you believe how far you can get in Coin?
There's earnings.
Well, but earnings is only getting you, the earnings move is only $27. This strangle is $153.50, $200.
This thing has been moving at look at where it was. Look at where it was last week. Go back into the. Can we go back into the chart? Look at where it was last week.
It was
100 points away.
163, and now it's 210.
Yeah,
I know.
It's 1 week move.
That's why you're getting paid so much.
That's why you're getting paid, right? Okay. Next up. Next.
We didn't put that in. I'm FYI. Oh, another silver sell November 27 put. So we just did that call 1/3 call ratio spread. Here's someone selling a put. We can add it onto our ratio spread. It won't use any more buying power.
Won't add any more buying power.
Here, I'm going to pop into silver. Pop into silver, go right back to 42 days, and we have that 1/3, and I'll add on this 27 put.
Oh my God, our silver position looks like my silver position now, because when you open mine up, it goes.
And you see it won't use any more buying power because we already have that 1/3 up on it.
And it's the one they wanted was the 27 put at 35 cents. Look at that.
I could actually, you know what I could do? I could sell.
What's this from?
2 puts. I could sell.
Hopeless Carlos. Tasty.
I could
Tasty
sell
never.
2 puts and it won't use any more buying power because we have 2 short calls.
Look at you.
Just racking up the theta. What do you think?
Love it.
All right, we're in.
And we got filled on that silver trade, which is good. So
we're getting crazy. I hope our risk manager isn't watching. We've got a 1/3/2.
He's driving
He's
somewhere.
going to be calling us. All right.
And on top of positions in every other stock. Okay.
Dollar Tree.
Okay. Has a 73 IVR, which is good for stock that just reported earnings. Oh, it's already out. Okay. I'm selling December 30 puts. What are your thoughts on this strategy?
I'm always leery of the Dollar Tree, Dollar General. I'm always kind of leery of those. I don't know. What do you think about those?
Why are you leery?
I don't know. So I met someone who invests in, he invests in real estate, and he's building warehouses, and then they're retail, and you're getting checks in the mail from the rent, blah, blah, blah. And he's super nice, and I was all into it until he told me he's got a lot of Dollar Generals, and I was like, I'm out.
That's where
I'm out. That's where I draw those. Something about the Dollar Tree, Dollar General, I'm always I'm never in these stocks.
Okay, but let's take a look at the stock let me ask you this. I want you to look at this as if you don't know it's Dollar Tree.
Okay, then I'll go to the trade page. You tell me.
So, I mean, now you know. You'd be like, what? What stock is it?
Go ahead, walk me through it.
So it's got a 73 IVR, which is a 70 now. So December. So you're through earnings, which I don't like either.
Well, it's
the 30
sectional, so
puts.
It doesn't matter.
The 30 puts.
What? This isn't right.
You got the wrong symbol.
Yeah, because the 30 puts in Dollar Tree are 4 cents.
My reading is, please keep in mind, visually impaired. It says I'm selling December 30 puts.
Yeah, they don't exist. And they're, maybe he's selling the 60 puts. I bet he was selling the 60 puts.
Eric from Sacramento, we regret to inform you that we're moving on.
Yeah, we'll move on to the next. 60 puts for $3. It's not bad if you would.
No. Yeah, no. So, okay, let's move on because we're not going to do Dollar Tree. She's got an inversion.
I got an inversion to Dollar Tree.
And I'm not selling a put for 10 cents in Dollar Tree.
I just don't like those stores.
Okay, number 6, please.
All right. DA, December Strangle, 47 put and 65 call. What do you think? I don't even know what DA is.
DA. Yeah, let's see what that is.
Hold on. Trade page. DA.
The 47 put, 65 call. December.
There is no DA.
What is happening?
I don't know. Is this supposed to be DAL? Delta?
Yeah.
Yeah. Because that makes sense.
That makes perfect sense.
All right. Earnings are over.
The 47 put, 65 call.
47 put, 65 call. Sure, I'll sell a strangle in Delta, 65.47.
Yeah.
So we talk about how we don't have a lot of strangles. I'm not afraid of this Delta strangle. Yeah, there's risk, but we can.
No, we're fine. And that's pretty far away. And this seems symmetrical. He's getting 60 cents and 60 cents.
Yes.
Does he mean Delta? We're team, we're going to need to throw an L on that after this for the slides.
Okay. All right. Next up.
Number
J. Japanese yen is oversold in the short term. Might be a good time to pick it up again. I'm trying to decide between selling a 50-day 30 Delta put or just going long the futures. So
let's take a look.
Back in the platform and
6J.
I want to see what this oversold looks like. I mean, for someone who was in 6J down here.
Doesn't that look very orderly? Look at that march down.
I know.
That looks like the most orderly down move I've ever seen in my life.
This pains me. This 6J. I can't stand it.
I know it does. But so
at this level, me personally, I'd rather sell puts than go out and buy the future.
I would rather too. So let's take a look at the 30 Delta put. I mean, isn't there an M6J?
We can sell a put spread. Here's the 30 Delta put. Here's the put spread where we're risking 925 to make 325.
Make that lower. I don't want to risk that much.
Risking 437 to make 187.
That's a number I can live with.
This is what you get when Liz and Jenny take over. Instead of buying the future, we're selling a 5-point wide put spread.
Yeah, because they didn't give us Tom's money to trade with today, and it kind of is irritating because otherwise we would just be singing futures.
Although I would sell the put, I think.
I would be selling if okay. Remember, we're going to answer this the other way. If I had Tom's money, I would be selling the 0.006665 put. How much is that?
0.00.
The one. It's the 38 Delta.
Oh, that is going to give you $937.
That's exactly what I would be doing if I had Tom's money because it's close to a 40 Delta. That's where I would.
He was looking for 30 Delta, so even the 30 Delta is giving you $700.
Yeah. Yeah, we do like that.
And it used $2,800. Not terrible.
No.
Okay.
I mean, we've been in 6J. We know it makes you mad, but I get it.
We're doing pretty well, Liz. We only have a few more to go. Next. XLV. At the beginning of the earnings season, an ETF seems like a reasonable choice with 54 IVR. December 145, 160. Let me take a look at XLV.
$2 in premium. Do you find it odd that all of these are December trades?
Well, November's 28 days.
Yeah,
so
true.
XLV Healthcare. Interesting. I've never traded the healthcare.
So 45.60.
Have you?
I think I have.
I don't know how. I'm not sure. I mean, there's option interest. There's open interest. There's 1.5 million shares. He's
how much capital is this? Yeah, that's a lot.
No, for a 145 product for that price, it's right.
It's a lot for us.
No, I mean, here, watch this. Okay, 145, 160 strangle. You're getting $2 using 2,300, about a 10% return on capital.
Yeah, but
if you don't want to use that much.
We'd have to iron condor it or something to that effect, because the issue here is in XLV, you've got 63 days. It's going to hold up $22,000 or $2,000 in order to do that. That's more.
So I turned it into just an iron condor.
That's more palatable of a nugget for the Liz and Jenny size accounts. So wait, let's talk why. Now, Tom's money, sure. I would be zinging that, no problem with the 45-60 strangle. And I like the strangle over the iron condor a lot. I don't think XLV is going to be a high flyer. I don't think that we're going to get out of this that quick. And it's 63
we're
days.
We're in this for a long time. I'm not, we're going to be in it a long time.
Yes.
Iron condor.
We're going to be in that iron condor a long time, but we would have been in that strangle a long time too.
I know.
So that's the only reason I wanted to think about doing it a little bit different.
Okay, so that's working. The iron condor is working. Next up, we have just two more. This is from Jeff from Miami. And who's in Miami? Taylor Swift, right?
This is Delta Airlines.
Here we have the 50-60 strangle.
Yes. Breaking news. Taylor Swift is in Miami, and I believe we're going to see Veneta is trying to be from Veneta.
Maybe. Okay, so Delta, we did do a strangle in Delta. That was an earlier slide. And
we did do a strangle in Delta.
Mm-hmm. Right. So last slide, we'll go with the last 10 out of 10, and then we're right on schedule.
I can't believe it, Jenny.
Tesla to 225 plus Friday morning, the day you're reading this. Tesla to 235 before November 1st. I buy calls. This is from Elon in Texas.
Okay.
All right, Elon in Texas.
Let's take a look at Tesla. Tesla to 225. Okay, this is
not that far off.
So they buy calls.
If you think it's going up, we have earnings next week. If someone's really bullish and we have earnings, you could buy.
So let me ask you this, Jenny. So I'm just reading their play. Now, Tom and Tony would never do this. Never. So they say it's going to be 225 Friday morning, which it's close. So you're right there. You could be doing, like, to your point, a Super Bowl. But if they think it's going to go to 235 by November 1st, what if we sold the 235 in the, let me go to this right here so I can take a look at what I'm doing. What if we sold the 235 in the 25 day or the 7 day?
Don't even tell me a calendar.
You're getting $3 for that 235. And if they think it's going to be there by November 1st.
But then it's going from 220 to 235, but $15. If you're long 100 shares or long a zebra or whatever, you make $1,500 instead of $100 on a calendar.
No, we can't afford a zebra in this.
No, I'm just saying if they think it's going to 235, then I'd rather do something very bold.
If you think it's going to 235, put a zebra on 100%. If you think it's going to 235, show them how to do it, Jenny. Show them how to put a zebra on.
Okay, and I pulled up just for us a Super Bowl where you buy a call spread and sell a put spread to pay for it, where we're risking only 500.
Your max profit here is only 217.
Yeah,
to your
it's
point,
only 217.
I mean, you could make that on the calendar.
Now, a zebra.
Zebra's going to be expensive.
28 days. Sell 150 delta. Buy 270 deltas. It's $3,100. It's $3,000. But if you bought 100 shares of Tesla, you're using $11,000.
If they think it's going to 235, wouldn't we just do the debit spread in the November?
Yeah, you could.
Yeah, sell the 235, and then what are you getting? $7. Buy that. That's where you'd land. This is your best bang for your buck as far as buying calls. And because if you're buying a call and you think it's going up, it has to go up by the amount of the extrinsic value in there. This washes extrinsic value. You will make money up to 235.
All right, 10 out of 10, 9:02. We're only 2 minutes behind schedule. Everybody stay tuned. We're going to take a quick break. We will be back. What's coming up?
We've got market measures. The importance of managing jade lizards.
Stay tuned.
Rock, paper,
scissors? He just played paper. He'll do it again. No, rock. Men statistically play rock, but he played paper and lost, and the mind works in patterns. He's going scissors. He knows I know he'll go scissors, but knowing I know he knows.
Scissors, shoot. Thought we were doing rock, paper, scissors, shoot.
It's always rock, paper, scissors. If you think like a trader, we've got your back. Tasty Trade. Join the club, genius.
Wolf! The
first half of this year's market has been giving the good guys the business.
It's certainly been back and forth for sure, Pete, and I'm getting whiplash over here.
With good mechanics, we can see Team Tasty stay strong in the second half.
Absolutely. Let's check out our starting lineup.
Liz Deerking, Eastern Illinois University. #1, because dedication and motivation equals success. Being able to make that one trade that builds on the next is the very first step.
Matt Helmuth, Illinois State University. #30, because that's how many of Tom's credit card purchases I have to decline a week. Stop trying to buy a suckling pig online, Tom.
Bobby Shepard, School of the Art Institute of Chicago. #6, because that's how many revisions every piece of copy goes through.
Jenny Andrews, University of Illinois Urbana-Champaign, #18, because that's the average of the VIX over the last 10 years, and I cannot wait for it to get back there.
I like the looks of that lineup.
Well, be mechanical is always better than just trying to run plays and see what sticks, Pete.
When you got skin in the game, you stay in the game.
That's right. Now get off the couch and get into the game.
Watch Tasty Trade.
The beauty of Thinkorswim was that we were different.
From the name to the front end technology was clearly what we wanted as traders. Second time around, I think we did a better job. Yes, we are known for our ability to support complex derivatives traders, but we also have the tools for somebody who's brand new who wants to come in on the first floor and work their way up to the top of the building. The amount of time I spend interacting with our customers via email or anything else is pretty much my entire life.
To be so powerful and so valuable, and then to be that approachable, just amazing.
Where else are you going to be able to email a CEO, get response back?
But you know what? Before he even knew who I was just some idiot trying to learn how to trade. And he still would email and help me learn and everything like that.
Some people say it's nuts, some people say it's insane. You know, that's what I do.
We built Tasty Trade's web platform for today's traders. See it, click it, trade it. Drill into data, find opportunity, and track the action with hundreds of indicators. Track your options profit and loss history over time per symbol. Note your progress and plan your tactics with a trading journal. Fund your account and start trading right in the app. The tools, the data, the knowledge. See it, click it, trade it. Join the club. Tasty Trade.
Today's episode of Market Measures is brought to you by SIBO. SIBO is partnering with tastylive to provide educational opportunities for traders at all levels. Did you know index options like these can provide opportunities for diversification, lower volatility, liquidity, and other benefits? To continue your education on some of the mechanics learned in today's Market Measures, check out SIBO's Retail Trader Suite at www.sibo.com/minis.
Welcome back, everybody. This is Market Measures, and we love our team because they put together something that is near and dear to our hearts. Jenny Andrews.
Yes, looking forward to it. Thank you very much to the research team for putting this together. I know our viewers had requested some studies. We talked about it earlier in this week, looking for requests. If you didn't see your request today, we are going to keep the research team busy.
We'll keep asking.
And get some studies for next week for our show, because I know there was someone I was writing back and forth with thought we were going to be, covering their request, and I didn't see it on the schedule today.
No, we did not see it on the schedule, but we will. We'll talk about that next week when we have a little bit more. Jenny and I get to do whatever we want on our show. So you ask and you shall receive.
The exciting thing about this market measure is it's from Jacob.
I know. Jacob, yes, we love Jacob. He's awesome. He's super smart. Okay, so let's jump into this because we've got a lot of stuff. We still only have like 1 hour left. So jumping in, this is the importance of managing jade lizards. So let's jump.
And I love that Jacob knows we're on and he's bringing on a jade lizard study.
I know.
And I'm very curious to see what this is going to say, because the jade lizard in a bull market, if you don't manage it early, you can go from having a winner to breaking even.
Having a non-loss is not a winner, right? So, okay, managing jade lizards. Jade lizards are an advanced option strategy for traders with a neutral to slightly bullish directional assumption looking to make short premium trade. True.
To sell a jade lizard, a short out-of-the-money put option is combined with a typically closer in the out-of-the-money call spread. If the distance between the call strikes is less than the credit received, there's no upside risk. The downside risk is unavoidable. At Tasty, we often advise exiting short premium positions well in advance of expiration. What effect has early management had for a persistent seller of jade lizards?
All right,
This is great.
Let's keep moving. And he's got it all right. Okay, the study. So they're using 15 years of options data in SPY, IWM, Triple Qs, Apple, Amazon, and Google. That's a lot. Considered selling 45 DTE jade lizards at every monthly expiration using a 20 delta short put and a 40 and 30 delta call spread.
Okay, so with that 30 delta call spread, you're maybe not covering the width of the spreads. I do a lot of back testing on jade lizards.
But they have to use deltas.
Yeah. You have to use a delta. So with this study, there may be a little bit of risk to the upside, but I like it. I love any jade lizard study. Bring it.
And I like that they're covering their bases because these are the big liquid products. All right, let's go to the next slide.
And this is over 15 years.
The study contrasted holding these positions through expiration with closing them at 21 DTE. Okay, so this is interesting because you and I kind of say you close your jade lizard when it's nearing your call spread, not necessarily these parameters.
But he's got 21 days till expiration, and when you're using that back testing, you can choose close at a certain day or close at a certain percent of profit. And sometimes when I'm looking at it, I will look at, compare closing them at 50% or closing them at 30% or closing them. Sometimes when it's going through that call spread, you're only getting 20%. So here he has closing them at 21 DTE.
And they analyzed the percentage of winning trades, the net average P&L per trade, and the conditional value at risk, the CVAR, the average of the worst 5% of outcomes. Okay.
All right, great.
That's just this is just the setup. So this we can kind of go through quickly. We'll analyze more of the rest of them. Number 4, please. Okay.
Okay, win rate, SPY, IWM, Triple Qs, 79%.
This is held through expiration.
68%. And average P&L, are you surprised that IWM is negligible, 2.55?
No, I'm more surprised that SPY has a $38.
Yeah.
Hold on 1 second. I'm going to pull up his parameters in SPY. I just want to see what it looks like. We talk amongst yourselves. You can go to the next one if you want to.
Well, this is 15 years. Okay, so this is 15 years of data. It's also running through COVID. And I know from testing some of these, a lot of strategies really take a big hit. As your P&L, you'll see your P&L climbing. You hit that COVID era and it goes really negative, and then it takes from then until now to get back up into the positive. So I'm not surprised by the low results for IWM and Triple Q.
Do you know what delta they used for the puts?
20 delta.
Thank you.
Okay, so let's move on to the next slide. Now here we have closed at 21 DTE. Look at the difference. Now, all of them were higher average P&L, but much higher in IWM and Triple Qs. SPY, minimally higher.
Minimally higher, but the conditional value at risk in SPY went down by 2/3.
Because you're closing them at 21 days. You're not letting those puts get close to expiration. And they're all over 80% win rate.
Yeah, this is fascinating to me. So, but I usually don't now I will say this, I usually do not let mine go until expiration, the jade lizards.
So
I mean, this is the one that I will say 21 DTE. I'll either close it and then reestablish it somewhere else, close it and manage it. I'm never rolling up a put. We're never managing it by rolling up a put. The one thing you can do in these with the delta parameters, Jenny, is you could take and roll down the calls if you needed to because they're pretty wide.
When you look at this, like average P&L, we've always said IWM is a good candidate because it's much lower priced. You're using much less buying power.
I don't think it's that the conditional value at risk isn't that much more than SPY.
No, but you're looking at SPY, which is so much higher priced, and Qs where you're using a lot less buying power in IWM. I kind of like the average P&L there.
I do too. Okay, let's see, because then they're going to do it in Apple, Google, and some other things too.
Let's take a look.
So here's held through expiration.
Okay.
Look at this. Held through expiration, you're losing money on Apple.
Look how much you're making in Google. But that's before, a lot of this is before the split. So you're getting hefty premium for some of those puts.
Look at the win rates in these. I mean, what I saw, I expected the win rates to be around 70-ish percentile, right? 68, 70, 72. I consider all those the same number. I mean, I'm not going to tweak those. But to your point, in the last set, I would choose IWM for its low capital usage, especially if you're gonna close it at 21 days till.
And here now, I feel like it's a lot different. You look at the CVAR and Amazon and Google. Well, now they've all split. So now you're looking at $150 product instead of hundreds of dollars.
Yeah.
Okay, so let's see when you manage it at 21 days.
The CVAR is still pretty high in these, closed at 21 days.
Well, they were expensive products. I mean, Amazon was so expensive.
So, okay, looking at these, I think the main takeaway for me is I'm never going to let it go past 21 days.
It's okay. So I love this and I love this study. And selling jade lizards and running all my back testing, yes, I would close at 21 days. But we do also love the 0 DTEs and the weeklies, but it's different. It's a different strategy. It's a different.
They're different. That's not that that's like apples and giraffes. Those aren't even the same.
It's not like a jade lizard. If we're putting on a jade lizard in one of these big products, we're closing at 21 DTE.
Yeah. Yes. Mm-hmm. This way you can't talk about 0 DTE in the same breath.
Or even the weeklies. We've got lots of people who love trading the weeklies. And I know most of these studies show best results closing at 21 DTE. And I think that is for the, these big products.
Well, it can't be the weeklies because the weeklies are gone after today. Like the 0 DTEs are gone.
It's the jade lizard and these bigger products close at 21 DTE for the best results.
Yeah. I mean, hands down. What I've been loving too is taking these jade lizards and putting them over stock positions.
Oh yeah,
because when you're looking at that, you're getting premium selling, but you've got the directional bias in there, and then because there's no risk to the upside, if your product goes up, then you pick back up to the upside of the jade lizard. It's a double negative because you're doubling down to the downside. But I do like that. Let's look at his takeaways.
Okay, final slide, takeaways. Selling jade lizards can be a profitable trade when looking to collect premium on neutral to slightly bullish assumptions. For both ETFs and equities, closing jade lizards at 21 DTE saw improvements in all trade metrics considered.
Only in Google were traders holding out through expiration able to make more money, but this was the cost of less frequent winners. Remember, it was only 50% and significantly worse bad losers. That had the biggest conditional value at risk.
The next time you identify a good candidate to sell premium but can't decide on an option strategy, consider a jade lizard. Just remember to manage early. And that is a key takeaway with those jade lizards. Manage early. And I, from my experience looking at some of the test results, managing at 21 DTE yields way better results than managing at 50%. Like if someone says, I'm just going to manage at 50% and leave it, but then doesn't manage at 21 DTE, I think that hurts you in the long run.
Well, because I also think it's a battle, right? You're collecting so much more on the put than you are on that call spread, but you want it to go towards that call spread. So you want to be making more on the put than you're losing on that call spread. So it's a battle. I think 50% in a jade lizard is a little bit
right. So I think
hard to get.
I agree. So I think that 21 day mark is more important than the 50%.
I do too.
I don't know that you're going to hit 50% before 21 DTE. So just keep it simple, 21 days till expiration.
I kind of agree. Jacob, you get a gold star. We're going to send you a certified badass option trader in the mail.
Thank you very much, Jacob. And we have, what time is it now?
We're going to try to do one more thing before we bring Scott in.
Yes, Jamal made an amazing piece for us.
And so he usually does This Week in Stocks. We were jam-packed and loaded with things. We want to say thank you to absolutely everybody. So we do want to do This Week in Stocks. Now, my question to you, Jenny, and my question to John, do we take a break for like 30 seconds or do we just jump right into it? John, you get to be the decider.
We can do a real quick break.
All right, we're going to take a quick break. We'll be back with This Week in Stocks. Stay tuned.
Got friends? Get $250. We'll give you a bonus for each qualified person you refer to Tasty Trade. So spread the word and earn rewards. Terms and conditions apply. Join the club, genius. Tasty Trade.
If you missed the live show, here's our cherry on top weekly recap.
Tomorrow, I love you. Tomorrow, you're always a day away.
In a personal note, I'm also looking for a Daddy Warbucks.
Tell you what, I don't like the new trend of guys wearing pearls.
I don't even know where to start with that sentence.
Excuse me.
Wait.
What trend?
What trend?
I mean, Derrick Rose was wearing pearls the other day.
Okay, that's his prerogative.
Hey, guys wearing pearls, yes. Do I have to teach you guys everything? Guys wearing pearls is a new trend.
Look at coverage. The neighbors can see from like one little spot.
Oh, I'm with Tom. That's disgusting. There's a lot wrong with that.
I shut the ring cameras off before I go out there.
Get the full scoop by checking out the archives at tastylive.com.
Hello, everybody. Welcome back. We have got Scott coming on in about 10 to 15 minutes, so you can give us a call and he will answer your questions. It's going to be our favorite segment. I know that. But right now, we've got a great segment for you that Jamal put together for us.
Yes. I can't wait to see this. I love the title, The Rally That Everybody Seems to Hate. Well said, Jamal. Well said,
Jamal. Now, that being said, Jamal is out in LA right now. I believe he went out yesterday. If anyone sees him, give him a hug from us. Please, hug.
To all
two
the
arms.
out there.
All hugs require 2 arms and 1 leg. If you could do that with Jamal,
Everyone
that'd be great.
had a wonderful time in LA. I'm sad we're not there. So we're holding down the fort here.
I am. Okay.
Okay, the rally that everybody seems to hate. Let's see what Jamal.
All right. What does he have to say here? What if that's it?
I think a lot of people are in that camp, like waiting for this rally to end.
Jamal, I'd like to give you also 2 gold stars because we have 6 slides, Jenny. 1 of 6.
All right. Notable items of the week. Retail sales strengthened in September in an illustration of resilient consumer spending.
Yes. So we did see that this week. Also, the ECB cut rates 25 points on Thursday. So it's funny. And I'm glad. This is why I love this segment. And I'm glad that Jamal does it all the time. We knew that the ECB cuts rates. All this stuff is very important. It's just interesting to see it all like kind of put together.
All these things that happened this week that's going on in the market. Netflix beats on earnings with 14.4% growth in global streaming paid memberships.
And then crude oil fell 6% this week. Is crude oil still down? Crude oil fell 6% this week after Israel did not attack energy facilities, thus removing the geopolitical risk.
Yes, it's down today. So it's been down every day this week. Gold hit another all-time high, even as the dollar was positive for the first time in 3 weeks.
Gold. Can't stop, won't stop. Tim Knight and Liz are both bullish.
Gold naked calls in SLV?
I know, you're crazy. Crazy, I tell you.
All right, VIX and VVIX remain near their long-term averages with the election less than 3 weeks away. It's interesting that we all talk about them being high. Average of the VIX is about an 18. Always was an 18 before COVID, but then we had that year of high VIX. So maybe it is closer to 20 now, 19. Remain near their average, which it's crazy to think that this is just average.
And that seems to be my main takeaway here is you're right. That is the average. We just keep saying elevated VIX levels. They're not elevated. They're average.
They're average, but we had 10 years of low VIX.
Yeah.
10 years from 2011 when we started until 2020. We were in a 10-year period of low VIX.
Yeah. And now we're just average.
Now it's
All right. Number 2, please.
All right, bank earnings have mostly gone well. Goldman Sachs reported on Monday that profits increased 45%. So here you can see all the banks.
So they all went well. And then AXP is the outlier? AXP went south.
Today, not so good.
The rest of them seem to have gone pretty well because...
I've seen some of them down a little bit this week, but in general, they're all near the top of the range.
Goldman Sachs is leading the charge.
Yeah.
And who's the lagger? Morgan Stanley is underneath it. I thought Morgan Stanley was down on earnings. They were.
JP Morgan is underneath Goldman Sachs.
Oh, is it? No. I meant the last, which is the lowest is Morgan Stanley, that red line.
Yeah.
The lowest is that red line. So that's pretty interesting. I mean, these banks, and they are the first. They're the first to report, and then they're gone. I think AXP was the tail of the banks, wasn't it?
Tail of the banks.
Yeah. Well.
Okay, so next slide, please. OKLO.
Look at this. He's totally playing into you, Jenny.
OKLO, day-to-day percent change. OKLO is up 164% in 1 month on news that Amazon, Microsoft, and Google are all interested in small nuclear reactors of AI energy. Yes, it's been a bonkers week for OKLO. Will it keep going?
Is this day one?
Of the nuclear energy craze?
Yeah, that's what I'm saying. Like, is this, look at OKLO was not, it was a SPAC. Our YouTube people were telling us this. It's a SPAC. And now OKLO is like the belle of the ball.
I know.
And none of the other ones are, CCJ's up, but that's uranium. And you're getting that UUUU, which hasn't participated.
It's fairly up. It's OKLO. OKLO is the one that's really, really seeing the...
And it's got a catchy name, OKLO.
Yeah, up to 1930 now. Up 350.
Yeah.
Everyone wants in on the game.
And stuff won't stop.
Everyone wants in on the game.
It's been up there before. When it first IPO'd, it shot up to 18?
The highest it got was 1880.
Yeah, 1880. So, we act like you've been here before, because we were. And then it just came right back down.
It's interesting. I said I was not going to sell my stock, but I did and turned it into just call debit spreads.
I'm pretty sure you're the breaking news on OKLO. You're the one who broke it onto the scene, the tastylive scene, because with your brother.
I brought the article about the company. This was back in March.
Yeah, you broke this. And we wrote it down, by the way, by the by.
And I experienced some pain because people would be like, oh, that OKLO, it was 10 it was 10 and it got down to 8 or 6. And we did experience some pain. It took a little while for it to make a roaring comeback.
Yeah, but you broke this onto the tastylive scene, Jenny Andrews.
Well,
how does it feel?
I wish I had more. Okay, next up, please.
Okay, so then what is this? There are many liquid ETFs that are flashing IVRs of 30 and above. Okay, I like a little chart like this, 30 and above, so we can see the 30 mark. You can get it above. Oh, yeah.
XLB, XLI, XLP. There's a lot, but what's interesting here, we're seeing high IVRs, but Jamal said the VIX is average. Yeah, yes, we're, average VIX, but we're seeing high IVRs everywhere, and the VIX at 1920 does seem high to us.
So you want to go IV rank is high and IV high. So Smash seems to be the outlier, but that makes sense. It's got a lot of stuff in it.
Yeah, there are lots of choices.
GDX?
Lots of choices here. So when we're in the middle of earnings season, but people may not see us making too many earnings trades, it's because we have high rank across the board.
I rank across the board. And when it's across the board, it's easier to stay that way.
The rally that seemed...
I'm glad we got into this because this is pretty eye-opening to me.
Yeah, we'll see what Scott's going to talk about when he comes in, see what's going on.
I think we're taking calls.
Taking phone calls.
Yeah, we'll see what...
Yeah, he'll be in momentarily. We'll be taking calls 855-238-2789 or 855-B-TASTY.
Yep. Okay, next.
Next slide. All right, so SPX forward curve, macro event.
Okay, this is where you lose me, Jamal.
Okay, we've got the different times on here, and he's going forward. So you see, we're going into October, November, what's going on, different earnings.
This is awesome.
The forward volatility curve over the next couple of weeks is highlighted by the big difference between election day and Fed day. So.
Okay, so you got Google, Tesla, Amazon next week, right? Mm-hmm. Then you got JOLTS, GDP, PCE, yeah, you know me, NFP, Apple, Meta, Microsoft. That's a big week. These are 2 big weeks. Then you've got the election.
Then you have the election.
And no one is doing any reporting of earnings over that election. Do you see that?
Right. Well, then is earnings almost over? Why
Probably.
Are we wrapping up?
Then it's going to be Lulu, but he's not going to write Lulu in there.
Yeah. And we've got the Fed.
Because he's got NVIDIA all the way over. NVIDIA is the end of November 19th or 18th. This is a pretty cool chart.
Jamal, you're welcome on our show every week.
So the forward volatility curve over the next couple of weeks is highlighted by the big difference between election day and Fed day.
Forward volatility curve.
So he put the forward volatility curve on with all these events. That's pretty interesting.
Yeah. Very cool. All right. And final slide.
Does that give you any trade ideas? No. Okay, from there.
All right. In closing, ASML's 65 billion plunge. I want to see where that is today. You can keep reading because.
Okay. ASML's $65 billion plunge on Monday shows the diverging fortunes of chip makers with regard to AI technology.
It popped up today, 20. It's up $24. It's up to $724. So.
Yeah, but it's still had the plunge protection team is trying, but they're not doing much to it. Okay, Uber explored a $20 billion bid for Expedia. I called you on this.
I know.
As a way to tap into new growth. Yes.
Apple rose to an all-time high on optimism that the new AI iPhone will lead to increased sales.
Yes, and then Walgreens Boots Alliance closing 1,200, 14% of its U.S. stores to offset a weak demand. Okay,
And
that's.
Walgreens had a little bit of a rally this week from about 9 to 10.50.
I mean, that's a big.
Yeah.
Big move for you, little WBA.
All right, Boeing turning to major banks on Wall Street for funds to withstand striking workers and operational setbacks. That doesn't sound good for Boeing.
What is Boeing doing?
And
because we have a Boeing position.
it's down 50 cents, so not much. It rallied this week, went from about 145 to 154, so it had about a $10 move this week. Today, it's mostly unchanged.
Yeah, so that's not that big of a move for Boeing. And then Qualcomm, which is what Vanetta talked about this morning. Qualcomm decides to postpone its purchase of Intel until after the November election.
Oh. Well, then I guess I need to keep my Intel position.
This is why I said this with such exclamation point.
Okay, so what I do want you to know is that our SPX trade is gone. So it's gone. So the trade, closed. Yes, closed. It closed. So the trade we did in the morning at 8:30 on the open, where we sold that $15 white iron condor, took in about $1.30. I put a GTC in to close it at 50%. It's gone.
Yeah, we don't scream Jajun for this one.
No. So that's trade one of the day in SPX, in our 0 DTE.
That's pretty good.
That's gone.
And it was 50% you put it in for, right?
I put in for 50%.
Okay, what time did that fill?
I don't know.
9:08.
9:08?
9:08.
That didn't take long.
So you were in that. You got in at 8:30. We were filled at 9:08.
Crazy. Oh, good. All right.
Yeah, that's not long at all.
No. So that was awesome. Thank you to Jamal for sending that.
I know, Jamal. I mean, that was jam-packed with information. We give you a gold star as well.
I love it. The rally that everybody seems to hate. All right, everyone, stay tuned. We'll be right back with Scott Sheridan.
Stay tuned.
Rock, paper, scissors? He just played paper. He'll do it again. No, rock. Men statistically play rock, but he played paper and lost, and the mind works in patterns. He's going scissors. He knows I know he'll go scissors, but knowing I know he knows.
Scissors, shoot. Thought we were doing rock, paper, scissors, shoot.
It's always rock, paper, scissors. If you think like a trader, we've got your back. Tasty Trade. Join the club, genius.
I think I've always been interested in finance. I have a degree in management and I took a lot of heavy finance classes, and I've always loved it, but I've always done passive investing. And so as I went through life, I decided that I needed to have a bit more control over my finances. I started to dabble in the options world when I opened up a brokerage account in probably 4 different companies, and none of them worked really well in terms of education until I got to Tasty. And tastylive in particular, because of the educational background that they tie in every single day on how to learn how to trade options. It started with the Where Do I Start series. It's outstanding. Tasty Bites, market measures, from theory to practice. I don't think there's a show that I don't like, to be honest. That education piece is highly important. I found that Tasty offered that.
People are always asking, where can they find my podcast? There it is, son. Look at that. Option Trades Today. You can listen here. And everybody's waiting for my podcast tomorrow. Option Trades Today, every Tuesday and Thursday around noon. If you want to learn, sir, every Tuesdays and Thursday, Option Trades Today. You can find me on YouTube or wherever you find your podcast. Option Trades Today. You listening to me? Option Trades Today comes out every day around noon, every Tuesday and Thursday. You too can stick with the bat.
If you missed the live show, here's our cherry on top weekly recap.
First of all, I'm sitting in the captain's seat. I've never been invited to come sit in the new captain's seat. But what I'm concerned with is the size of these screens. And he's still doing this.
No, let's take a look.
They did not hold that rally at all.
Phil, you got a partial. 973.75.
I'm looking at this like I have to move my head to get through the top, the top symbols. I thought he had like a little computer and he was getting down.
He hasn't learned that he could like swivel his head. He has to see the screen. He has to go like this to me. And then, you know what? Money goes to money. You did it. Good job out of you.
Yeah. I just drove with him twice. Now I'm really concerned that I was just in the car with him for 2.5 hours.
Got trader's block? We've got the cure. Get data-driven trade ideas with Cherry Picks, our weekly newsletter that gives you insights into the market. Sign up at tastylive.com/newsletters.
We built Tasty Trade's web platform for today's traders. See it, click it, trade it. Drill into data, find opportunity, and track the action with hundreds of indicators. Track your options profit and loss history over time per symbol. Note your progress and plan your tactics with a trading journal. Fund your account and start trading right in the app. The tools, the data, the knowledge. See it, click it, trade it. Join the club. Tasty Trade.
What's up, everybody? Check out my new series, Life Cycle of a Trade, where I show you my real-time trades with insights into strategy selection, adjustment mechanics, all the way to the closing order for all of the tastylive core strategies.
Live from the Tasty Trade World Headquarters, your friend and mine, Mr. Scott Sheridan.
Welcome, Scott.
See, I have to say, good morning. It sounds so much better.
I thought I sounded like a howler monkey, and I did that for Tony Batista. I raised I got my voice as high as I could possibly make it.
It sounded good.
I like it. That was very good. Now, before we get going, I have a question, sort of pseudo putting you on the spot. Did I hear this for Liz?
Okay.
Did I hear correctly? I just clicked in, I don't know, about 10, 15 minutes ago. Are you ragingly bullish on gold?
I am. True story.
She is. She really is.
I'm a gold bull. I'm a silver bull, and I actually look at them. And you know what? I think I have my dad and Tony from Mexico on both shoulders, being like, you're just kind of gathering assets with it. So when it goes up, I make money. I don't have a lot of money in it, but I am notoriously bullish gold.
What do you think of it, Scott?
What? Well, hold on. I'm with you. I'd be selling calls. I'm not short them, but if I was doing anything right now, I would absolutely be selling calls.
Well, don't get me wrong. I'm not. I want to say for the record, I'm not just like I'm going to buy gold and sit here. I'm using options premium, but I would rather lean towards the bullish side. And Scott, here's another thing, and I know this is going to be complex, and I'm not saying that you're not smart enough to understand this, but my account is smaller, so a lot of times I'm doing zebras, and that's a stock replacement strategy. So keep this in mind for 1 second. It's a stock replacement strategy, and then I ratchet it up. So I can't lose to the downside. If if it continues to go up, I get to participate to the upside, but it can only fall down to the last click. So that's why I'm bullish.
I don't know if Scott, when money doesn't matter, you don't need to learn about the zebra or the ratchet. Those are trading strategies for small accounts to replicate stock.
Wow. Okay, you started off well, but you weren't taking shots. Now you're taking shots.
That's not a shot. We're saying you're so rich and handsome. We're saying you're so rich and handsome that you don't have to worry about that.
Okay, here, I want to break into this and tell everyone we're taking callers. Give us a call, 855-238-2789 or 855-BE-TASTY. The phone lines are open if you have a question for any of us.
I want to show you something too. Can you see us?
Yeah, of course.
Okay, I didn't know. Take a look at this. This is you were asking about the trading codes or the trading floor earlier. If we were going on Wednesdays,
yeah, you gotta show the Tasty Live.
Look at the Tasty Live trading code that Jenny and I have created and wear on Wednesdays.
Sweet.
We love them.
Isn't that nice?
We love
I'll
them.
get to the floor. I'll get to the floor in a second. Let's get back to gold. So my answer is, if and when somebody tells me that they're buying gold as a substitute, in case there's a problem, so the dollar goes badly, whatever. They're just buying gold. I'm gonna go, look, really seriously, like if we ever get to the point where you need gold to go to the grocery store, you need guns and ammo.
Oh, for sure. Yeah. And that's in my brother's safe as well. If you open up his, you need all those things.
You go to Liz's. So Liz grew up with her dad buying gold. If you go to her brother's house, his safe is full of gold and guns. It's the way they were brought up.
Gold, I'm just curious. So, because do you know the story? Tom and I had a gold mine in Mali.
I know.
Right?
I know.
Okay. And at $300, we were going to absolutely crush it if this worked. Spoiler alert, didn't work. Anyway, so this is in the early 90s.
Yes.
Okay, so $300. Now, gold over the last, 15 years
has done nothing.
Kind of been 1,600 to 2,000. Pick your number.
Yeah.
Right? Okay. At 2,700, you don't want to lay into it a little bit?
No.
Being a perma long, you don't want to lay into it a little bit?
No. So I think. Don't get me wrong. We sold calls in SLV today. Like we leaned short in that. If that was if this was my first trade, if I woke up today, if I'm Rip Van Winkle and I wake up, I'm selling calls.
Yeah.
Okay. If I'm Rip Van Winkle, I'm selling calls. But because my position has been with me so long, I'm still bullish because I want the upside.
I just have a hard time. I was at the hairdresser and she asked me, and she's like
right. If you're waking up today,
she's like a 3-year-old lady who has her retirement account.
Yeah.
And she asked me, oh, everyone's talking about gold. Should I get into gold? And I said, well, it's at all-time highs, but if you want to get into it, you can get
Yeah, so I think that I need to be clear about that. I'm a bull because I'm talking my book. I want it to go up because I have that position. But if I woke up today, I would not be buying gold. Is that fair?
Got it. Fair.
That's fair, right?
Okay.
Yes,
all right. We have to take a quick break. Not a quick break. I want to show our visitors, Mikey and Bob are out hopefully they're out by the table.
You're probably at master control. Let them.
No, they just walked that way. They just walked that way. And I want to get them on camera. I want all the viewers to see. I want Mikey and Bob to wave for everyone. John, are they over by the camera?
No, they're not. No, that's what I was going to say. Jenny, you got to let John tell us. We can't see where they are.
They just walked that way. I'm excited for them.
Like this.
Bob flew all the way from Texas.
Boom. Okay.
You know what's so cool about this story? They're like best friends, and they met because of Tasty.
Oh yeah, they vacationed together. Yeah, I mean we love hearing these stories, Scott, because when we go on the road, there's lots of groups of people that have become friends and friends that like family and family like friends because they met through Tasty. Because there's not a lot of people that you can talk to about this kind of stuff.
Right, they're friends. Their wives are friends. They go back and forth visiting each other, and they just met through trading. So cool.
Awesome. That is awesome. Okay, so now going back. Oh, go ahead.
We have Simon from New York on hold. I don't know.
But I think, Scott, don't you want to go through our top 10?
Simon's going to have to wait. I have another question. I'm sorry, Simon. Because I have a question for you two, because you brought the jacket up. You go down to the floor. And, very few people will ever have that experience of going down to the floor. So it's great watching you. I think you guys really do a good job. I think it's a great setup to have the show when you're able to do it down there.
It's awesome. It's fun.
I don't know if you are aware of this, but I think the Amex, there's another floor that's bringing back traders. The MIAX, I believe, is also looking to bring back traders.
I have heard this. Now,
I want to clarify, this is not retail. So this is not like, oh, can I get my 5 lot, 10 lot, 20 lot, whatever. This is institutional. I want to get your input, though, because I'm a believer in cycles in life. Everything that's old is new again, hence why Tom actually looks fashionable on occasion, because his clothes are so old that it actually cycles through. I don't know about the gerbo, but some of the other stuff. He's had it since the 90s, and the 90s stuff's coming back. So what do you think of the floors? What do you think of doing? Because it's going to be crosses, institutional. What do you think of it?
I love it.
It's busy. It's busier than you would think. There's a lot of energy down there. When our first show down there, we thought, oh, it's going to be crickets behind us. It's busy.
Jenny thought I was going to quit Tasty and try to go back to get a job on the floor. I love it. I love the energy of it. I love everything about it.
Yeah, it's a lot of fun. And Scott, last week when we were there, we ran into the owner of Tudo's, and even though Tudo's
not on the floor, at a bar afterwards.
Still open?
Okay, no, Tudo's is closed, but he said for us, he would reopen it to bring all of our trader friends from the floor and have one big party in Tudo's.
Oh, that's awesome. We might have to do that.
Jenny's got his card.
I got his number.
We may have. I'm not sure that I'd want to eat anything at a place as close, but you go and have a beer, have a drink, right?
Yeah.
But that's cool. All right. So I know we've got. You want to give the phone number one more time? I'll give the list. I know we got Simon.
Scott, do you know the phone number by heart? Here's our question.
Well, I'm looking at it right here.
Oh.
But it's on, so that's not fair.
We were joking because it's the only phone number we memorized. Like, you know your childhood phone number, you know, your best friends, and this one, because I hear it so often.
It's funny that you say that, because now everything is just, you know, on your phone and you don't have whatever. I mean, like, just hit a button. So I know my wife's and I know my oldest. I do not know my other two. I don't know their number.
I don't know my kids' number.
I don't know my kids' phone numbers, and that's terrible. They all know mine. They had to memorize one phone number, so they know mine. They don't know my husband's.
For safety.
Yeah.
Right, for safety. Yeah. So, but anyway. Okay. Well, there's the number. You got it. If you want to call in.
855-238-2789 or 855-BE-TASTY.
On the off chance that Tom is listening to this before he takes off, because I think his flight is in a few minutes. Top 15 symbols going through the system. First 40 minutes of the day, no broad-based indices or futures. And Tom, for you, if you are listening, number 15, SMCI at a 66 for everybody else. Netflix at a 15, NVIDIA at a 39, Tesla at a 40, Apple at a 40, MSTR at a 65, GLD at a 73, SLV at an 81, Coin at an 84, Meta at 56, AMD at a 69, ASML at a 68, TSM at a 53, Amazon at a 54, OKLO at a 51, and for Tom, number 15, SMCI at a 66, rounding out the next 10, Mara at a 33, AXP at a 50, PLTR at a 64, Microsoft at a 57, MU at a 40, TLT at a 52, TQQQ at a 46, SMH at a 53, Costco at a 33, and Goot with an L at a 57.
I like big list, Scott. That is a big list.
It's always 25.
That's a lot. That's a lot.
It's always 15, and then if they're all 30 or higher, then the next 10 make it in.
That's why Tom. That's why he says for you. I just learned this. That's why he says for you, Tom, because Tom only thought there was always 15. Top 15 symbols running through the day. He's like, there's more than that.
No, the reason actually, because he doesn't pay attention, and all he remembers, because I'm like, you weren't paying attention. He would always repeat the last one.
Oh.
So I'm like, you know what? You don't pay attention. So I'll just start with number 15 so that he doesn't have to pay attention and think about it. That's where that came from.
Oh, see how nice you are to him, Scott.
I mean, and
Serving it up on a platter.
What do you think of OKLO that's gone from 5 to 20 in the last couple weeks?
Don't know anything about it, but anything that's gone from 5 to 20.
It's nuclear. I mean, it's not nuclear stock. It's a nuclear stock.
It's a nuclear stock. So it's all, ever since they announced the 3 Mile Island and all these companies wanting to invest in nuclear, it's been on fire.
Apparently.
Yeah.
Hopefully not a meltdown, but boom. Okay.
And I thought Vanetta was our only comedian today.
But
sorry.
All right, what do you think? Should we get to anything exciting about the top symbols, or should we get to Simon?
No, I mean, those are usual cast of characters. I mean, OKLO I expected to hear on there because of its move.
Well, SLV's not usually on there, is it?
SLV's usually on there, isn't it?
It can be, yeah. It's
up 80 cents. It's a big move for SLV.
SLV is a mover and a shaker. I mean, I'm a metals fan. How about that? I'm a metals fan. All metals, silver and gold, Scott.
And heavy?
And heavy.
All right. Well, and how busy are the 0 DTEs today? Do you see all that volume?
Yeah. So it's interesting because there's a lot of regulatory concern coming from one person in particular, Gary Gensler.
Yeah.
He hates them. So there's a lot of issues that are, well, let's say this. There are a lot of suggestions that are being pushed down from him to the OCC to try to limit people's ability to trade 0 DTE. I think it's horrible.
That's awful. That is absolutely awful, especially seeing what we're seeing on the floor. They're crowd favorites.
Yeah, everyone loves them.
Love them. Correct.
Yeah.
Love them. And one of the things that's interesting for us, we actually have a lot of customers who buy them for protection.
Yeah.
So the concern, from Gensler and the OCC is that too many people are selling them. And if there's a meltdown, for example, what do you do? Or if there's a melt up, where does the stock come from? And these things don't happen, but they create scenarios where the what ifs And if you walk down the what if strategy, you're not going to get out of bed in the morning. So we are fighting this, and hopefully we're gonna win. As an industry, when I say we, this is an industry battle right now.
Yeah.
And it's going to create some very unfavorable results, let's say that, if this is actually pushed through. So what do I think of them? I think they're great, and our customers do participate, but I think probably a little bit differently than the rest of the street, where you do have a lot more people in the street selling. But listen, as a market maker, if you can buy, what do market makers want to do? They want to buy cheap stuff and then sell more of the meat, right?
Yeah.
So they want to, but they have risk departments as well. So, market makers love buying this stuff. So why wouldn't they? Because it helps to take the risk off for that day. So there's a huge value to them. This was Tom. It was his idea, and I hate giving him credit for anything, especially, but I could do it when he's not here. So, Tom was the one that came up with the weeklies.
Yeah.
And the CBOE didn't like the idea. They're like, nah, nobody's going to really trade those. Think about those. So we went from monthlies to weeklies, and now in a lot of products we've got dailies. And what I think happens is when you see retail gravitate to it, that means that there is a demand for it. There's a reason for it. If people didn't want it, they wouldn't trade it. There are products that come out and people look at it and they go, what's the reason? What's the purpose? It's making me think of in Miami, Florida, they were trying to block rideshare. So the taxi limo commission, powerful lobby, what they agreed to was that you could have a rideshare, but it had to be set up 24 hours in advance. Well, that defeats the purpose of a rideshare.
Yeah, that defeats the rideshare completely.
You want the rideshare is you want it right when you want it. So I want an Uber, I want a Lyft. Well, the people spoke, and when enough people came out against that, guess what happened? That got thrown out. Austin, same thing. Austin, Texas tried blocking it or banning it. And, people wanted it. So what I'm hoping here is that calmer heads prevail. Is probably more of a story than you were hoping for with the answer, but I'm very passionate about it. What I'm hoping is that there's enough people that speak out and go to FINRA.
And Scott,
and
I think the general population, outside of Tasty, we have the smartest people. I mean that with all due respect. We are the smartest traders out there. I really do think that. But the general population of people are asking, when the general pop starts asking about zero DTEs, there's a lot of eyes are on this. There's a lot of engagement in zero DTEs that people haven't traded before.
They're so easy because they're cash settled. I could see an issue if they were settled to a future, but at the end of the day, you're not getting a future. It's cash settled.
No, it depends on what you're trading.
We're talking about SPX.
Oh yeah,
we're just talking about SPX right now.
Correct.
So
but if you're trading
cash
SPY,
settled at the end of the day,
settled.
those
Yeah.
are.
Correct.
I can't see why people would have a problem with that.
Because we're just thinking the floor.
And there have been conversations from various exchanges about potentially listing stocks zero DTE. So expand, like go to the top 20, top 30 symbols, and have them cash settled.
That would be nice.
That'd be awesome.
But the problem is the complexities of, think about it, you're doubling the data.
Yeah.
And you're going to have a lot of confusion for customers. Oh, I thought I traded the cash settled. No, you traded the stock settled.
Yeah, I get it.
Right.
I get it.
Right?
Yeah.
So, in theory, I think it would be a great idea, because then what are people going to complain about? It goes to cash. So what are you worried that you can't deliver? So anyway, Simon's been holding a long time.
I know we've got to get to Simon, but this is, a topic that is near and dear to all of our hearts. We love these products.
Yeah, we do love these products. And it's funny because when we say zero DTE, we just think about the floor because they're so heavily traded on the floor behind us, Scott. A lot of the most active ones that we're hearing, it's a lot of the zero DTEs.
When you say the floor, SPX, yes.
Yes.
Yes. And we do a lot. We do a lot out there.
Yeah.
Again, I think if we're going to expand, and one of the problems, just to finish this, but one of the problems, if they do go to zero DTE on some of the bigger names, one of the issues is going to be around earnings. Because what's going to happen is we, our risk department, is going to have to go in and start covering, could be $20, $30. We have to look at the expected move.
Yeah.
Let's take Netflix for an example. Yesterday, what's Netflix up right now? Like
$60 probably.
It's up $73, $74. So think about if you were short a zero DTE call yesterday, or put, in this case, it was the call. You won't understand why, as a risk department, we had to go in and cover those for you.
Yeah.
Because The reason being, let's say you're short, obviously you get this, but some customers don't, is yes, the stock closed, let's say at 700. You're short the 720 or 730 call, and people are thinking I'm totally safe. But there can be an assignment after hours. If there's a move, which there was, market makers going to clean up on that, and retail will get killed. That's a downside.
That's why the idea of having these cash settled at 3 o'clock and these, if you make these 0 DTEs cash settled at 3 o'clock, you don't have that problem.
Yeah.
Correct. But it's just, please, I don't want to get a million emails on that.
That's that risk department is a thankless job.
There's a lot of complexities around that would make that a complicated offer. Not to say it can't be done, but it's not just as simple as saying, here's a new type of product, cash settled.
All right, we better get to poor Simon before he hangs up.
Go.
Simon from New York City. Simon, are you there?
Absolutely. Thank you guys for everything you do. I watch your show every day, and I love the different take that you have. If you have a few minutes, I actually have 2 questions specifically for you because I wanted to hear your take on these 2 topics.
We got all day, Simon.
Well, the first, great. That's wonderful. I have a very specific question about what you would do with cash if you had a portfolio margin account.
Simon, did you email me this week?
No, I don't think I did.
I got the same question this week from someone else.
Yeah, we did.
Oh, okay. Because some of the people just say, well, what you do is if you have portfolio margin, then you just go and load up on SGov, 100%. Because then you end up with only a 96% buying power, right? You only lose 4% of buying power, and then you can go and trade whatever you want, right? Then there's the other thing that I keep, have been screwing around with, the back testing tool and things like that you guys have released. And I wonder, wouldn't it be better to, instead of simply taking all of that and putting it in SGov, is, I guess you could hold it in SGov right now because market is high, but if there's a nice dip, then you just move into the SPY or something and you hold that. And yes, there's a bigger reduction in buying power, but then, obviously SPY has a very strong tendency to continue to go up. And then you continue to use your margin to go and trade other things and futures and stuff like that. So what do you think about that? Do you just simply take all the cash and lop it into SGov, or are you going to go and take a lot of that and go and do something else with? This is not counting, of course, trading strategies. Obviously, if you want to go and do a covered call, the trade, small trade off and stuff, that's completely separate. I'm talking about what do you do with the bulk of it?
So we have the research team on this for next week. Jenny has already put in a request, so hopefully we're going to get that. But I mean, I think that, other people, Scott might be able to answer this better, but I take my leftover cash in my account, I'll put in certain things that are very liquid that I can trade out of pretty easily if I need it for anything else. I'll look at BIL or BOXX or things that are liquid and in there and making money if it's in there. But those aren't my bread and butter trades.
Yeah, I don't know
what I do with the capital.
I don't know, Scott, what you think of those, like BOXX, where it's kind of like the box.
Well, it's just something where it's just earning a little bit of interest instead of sitting there. That's what I do, and it's liquid, so I know I can get out of it immediately and get into something else if I need to.
So from my perspective,
the same as SGov or Bill, I guess, right?
And I look at my trading account as my trading account, and I want, capital when ready. The concern, and no issues whatsoever, trying to increase your return on your available cash. The problem for me is that when you get somebody that does that, and all of a sudden then they're going out and they're either buying options or they're buying stock, and then they wind up borrowing, and they're borrowing at a significantly higher rate.
You have to keep an eye on that. That's a good point. You want to make sure you're not borrowing.
Correct. You got to make sure that your cash balance stays positive. Otherwise, you have a negative ARB. So, all in favor of doing it, but I think you need to be thoughtful with the approach. And I don't think it needs to be every available dollar.
Right.
Because again, you just don't want to get into a situation where all of a sudden you have a negative ARB because, I got to make this trade. I got to liquidate something. I can't liquidate it. I missed the trade. So, on top of that, I will add that we are adding the ability to trade T-bills right from the platform in the next couple weeks.
That's amazing.
So for anybody who is looking to do something with some extra cash that is coming, we are in the final stages. I think it could even be before the end of the month.
So Scott, can I ask you a question then? I mean, I'm sorry if I'm jumping on Simon's, but like I said, T-bills, which will be amazing to be able to trade them on the platform. That product, BIL, is sometimes what I'll put it in because that is it's just on a smaller scale T-bills, right?
I believe so, yes.
It's just
I
that
don't
same
trade
concept,
outside
right? Where
Forex.
if you look at it, it's just going to go up and down. It's just called BIL.
I can even.
Yeah, no, I know what it is. I've never tried. Never
Yeah,
tried.
so I mean that's like a small fry T-bill because T-bills are going to be a lot bigger with when they are on the platform.
I could show it here. So if you see, this is
10,
what the
yeah,
chart.
T-bills, I believe our minimum is going to be 10,000.
Oh, 10's the minimum. I thought it was going to be 25. Okay, that's good.
I think. Don't hold me to that one right now, but I think it's 10,000.
Okay. No, that's a great. I'm glad you brought that up about making sure you're not borrowing money. If you go up in your balance and you click it and you see that in a parentheses, that means you have too much money and you are reverse arbing. And I'm glad you brought that up.
But I do think is a great question, Simon, and we've received it when we were bringing up research studies, what studies people want. That was one of the studies people asked for, what to do with the money that's not at use in your trades. And so the research team is working on that, and we're going to hopefully have something next week. Okay,
great.
so thank you.
I have a.
And then one more quick question, because then we have another caller on too. Can we go over?
Oh, okay.
Sure.
Keep going.
I get overtime. If we go over, I get overtime.
Okay, Simon, what was your last question?
I wanted your specific take on this because I love to watch, how you guys deal with this differently in a lot of things you do. But a lot of the times what I'm doing is I'm just following the mechanics that are in, all the stuff you do in your book, right? I put on a strangle, it's at 20 delta, 16 delta, 30 days, 45 days, that kind of a thing, right? And the mechanic that's always promoted is to manage the winner, right? So, okay, the trade's going fine, whatever, it goes up, it goes down a little. One side is now 20 delta, the other side is 10 delta, fine. So you're supposed to move the 10 delta side up, right? So, do you guys actually do that?
No.
All the time? Because...
We don't. And you'll see we don't do that a lot on our show. We will manage when the tested side becomes almost at the monies. We don't micromanage our strangles as much as they do on this show.
And again, we don't have that many strangles. We have a lot more defined risk, and when you have defined risk, you don't need to roll up, roll down. You're not dealing with that. So we don't. If you go through our positions and we're on the follow page, we don't have
probably a handful of strangles.
And most of our strangles are in lower price products and nothing with too crazy risk. So you don't see us rolling up puts when the market's going up or rolling down calls when the market's going down. But thanks, great questions, and thanks so much for calling, and thanks for watching.
And I do have confirmation, $10,000 will be the minimum.
That's good. That's great. That's good, Scott.
Yep.
And that's next week?
That'll be coming.
No, you're like Tom. What are you sitting in Tom's chair? Is that
yes,
tomorrow? Is that coming out this afternoon?
That's in 2 weeks, right? 2 weeks.
I said in the next few weeks. Hopefully, it could be by the end of the month.
See, I hear what I want to hear.
Can we get to Gomer from Michigan?
Sure.
All right, we're going to get to Gomer from Michigan, and that's it. No more calls. We're not going to take any more calls, but we'll get to Gomer from Michigan since he's been waiting.
Scott can hang up on us if he needs to.
Gomer, are you there?
I'm good.
Yes, I'm there. Good morning. Great show. I have a quick question. Calendar spread. So I have a Netflix and a Taiwan Semi, which I did a calendar spread. One is expiring today. The nether leg is expiring in October 25th.
Okay.
Both are in the month.
You can just roll your short another week out if you want to keep it going.
Or is there a specific time to close both legs on a specific time?
When you're winning.
Yeah, if it's winning, close it. If it's not winning, you can roll your short out in time to keep the calendar going and hope that it comes back to your strike.
But I want to know, do I wait till 3:45 to close it?
Oh, no. There's no time. There's no time frame on that. I see what you're saying. So I mean, if I have a calendar and I want to keep the dream alive, I'll roll my short in the morning. It doesn't matter.
But I don't know, because Scott, you're here. I can ask you this. At a certain point in time, if someone has an option expiring today and it's in the money, at some point in time, it'll start holding up different margin.
Correct. We flip it to what it would be turned into stock. Correct.
At what time?
That you see. I think it's an hour to go.
Well, and that's why I was saying do it in the morning.
It might be an hour and a half to go.
Okay.
It could be 1:30 Central. And the reason we do that is so that, for people that can see what their hedges are. And they say, wait a minute, I'm in the money here. I'm going to wind up long or short stock. Do I have the money? Do I have the position? And if you take off the positions, then obviously the buying power is corrected right away. If you don't, then you don't have the money for it. There's a chance we're going to.
Yeah, take action or ownership.
So,
Correct.
So what I would do would be, if it's winter, you can close it. If you want to roll the short out in time, you can see what kind of credit you'll get for rolling the short out in time. Sometimes, even though it's in the money, you'll get a decent credit rolling that short out in time and keeping that calendar going.
And it is 1:30, so 1:30 Central, so an hour and a half before.
1:30
Central. Okay.
All right, thanks so much, Gomer.
Thank you, guys.
Have a wonderful weekend.
You too. Bye.
Scott, thanks for coming on.
Scott, this is my favorite segment too. We were saying it earlier. It's really fun to have you on. I think that, you should come on with us a little bit more often.
Hey, next time we're all in the office, we're going to have the Liz and Scott gold battle.
Yeah.
Right.
That's right.
I'm happy to come on anytime you guys, if you want me to come on your show sometime, I'm happy to do it.
Oh, yes, you said it live. We can do it.
All right. Have a good weekend.
All right, Scott, thank you very much. You have a great weekend too.
Everybody out there, thank you so much for watching. Remember to trade small, trade often.
Laugh with us, learn with us, and watch the Liz and Jenny Takeover in the morning.
We'll see you on Monday.
Hello, everybody, and welcome back. We have a very special guest who I am very excited to see because you are the man, the myth, the legend behind this.
Oh, welcome, Dr. Data. And
Hello.
everyone has been talking about this backtesting feature. You've been working tirelessly on it for a long time.
Yeah, working as part of a group. So.
Well,
don't be modest.
Oh, come on.
It's just us in here. No one can hear us.
We're very happy to get this to get on the platform. Yeah.
Well, everybody really wanted to see it, which is great. Mm-hmm. So you are going to talk us through how to get there, what to look for, tricks and tips.
Sure.
So let's start with showing everyone how they get to it.
Okay, absolutely. Let's do it. So first thing you're going to do is you can find out more about the backtesting application, some of the features that are available going to tastytrade.com/backtest.
Okay.
Singular, backtest. And you can see some of the, how you can learn from it and what you need for this. So this is free for everybody. Usually you'd pay like $50, $150 a month to get backtesting.
That's what I'm shocked by, is that it's all free.
This is free. Yeah.
You see ads about, hey, you can test your strategy. Like, people have to pay for it.
MT4 and stuff.
Yeah.
Absolutely. But this is 100% free as long as you have an account with us. So it's my.tasty. Now, this is only the web version. Okay, so you're going to go to the web. It will be out on the desktop application.
Okay. It will.
Yes, it will be, but that's still going to that's a little ways off.
Okay.
But we want to just kind of show it to you right now on the web version. Web version, you're going to use the same username, same password as you would on the mobile app, desktop. Web version, all same user. You're going to use your same username, your same password to log in, but you're going to go to my.tastytrade.com.
Okay.
Log in. So, when you get there, you usually start off at just the home page, okay, the dashboard. But here, I'm going to go to the left column and click this little replay, this little backtest logo here. Now it might be like this when you start up. You can click this little top left widget, and you can bring up the sidebar there.
Oh, there it is. Okay.
You can see backtest. Now the first thing that you're going to see is a disclosure, and the disclosure just kind of walks you through and tells you that backtesting is using historical information, and past results are not
indicative of future results. Yes,
yeah.
We've heard.
As long as you've been around the industry a little bit, you know that slogan, right? So what you have here is we have about 50 stocks, okay? Right now, we're going to get up to hundreds, within no time at all.
So you have 50 stocks. For some odd reason, in my mind, I thought you would only be backtesting something like SPY. That's a lot.
No.
I'm telling you, this is amazing.
That's a big universe of products.
She laughs at me. I can sit down with a glass of wine in the backtesting and have a nice evening.
She does.
That sounds like a great evening.
She does, Dr. Data. And then she'll call me and be like, you're not going to believe this.
Background.
No, I don't like any distractions. I just like to run my backtesting.
She does. I'll vouch for it.
Okay, every Friday night, backtesting at your house. Party.
It's a party.
So here I'm going to choose them. Well, what do you want to do?
Just stay in.
I see SoFi, which just seems silly, but SoFi, you could say sell, just sell a put in SoFi, sell like a 40 delta put in SoFi and see how that worked the last few years.
Okay, well, let's do that. Here,
Just looking at something different than SPY.
Yeah, sure. SPY is so 2023.
Well, every study we have is SPY, and I saw it there.
You're right.
It's nothing I've ever back tested before, so and it's something I trade.
I haven't back tested it either. We go here and we look at the intervals.
Or even 50, even 50 delta put. I think
TLT's on there. Did you see that, Jenny?
We look at the intervals here and we get to choose what we want. So the idea is, so people ask, what should I choose?
If you go the past 2 years, does it take out 2020?
Yeah, well, the past 2 years, yeah.
Well, yeah, because we're in 2024.
I know, but that's true.
Yeah, you can go back.
I was told there'd be no math today. So then you can say 3 years too. So the 5 years, 5 years is the only thing that's going to throw in 2020.
Let's just make it look a little better. Let's
go 3 years
for the data.
Okay.
You can also look at different scenarios too. So you
please
can
keep in mind, I cannot see that or this.
Sell-off, the pandemic sell-off. If you can look at the post-pandemic surge, the tech sector mania, the trade war roller coaster. Yeah, we got kind of
the trade war roller coaster.
We had a glass of wine looking at when we were coming up with these.
This is what I'm telling you. How
she's going to be hammered.
When we came up with these. So and we went over here and you choose your
got to make
scenario.
the delta pretty hefty because it's a low price product. But I always say that my favorite thing are selling puts in low price products, and this SoFi is one of my on my list. SoFi, DraftKings.
Agree with that.
We got all these.
Yeah.
So here. Okay, so you're going to have a lot of entry conditions. So let me just kind of run it over here, what you're looking at here. This is selling a put. Now, I have on here one contract, 30 deltas, 45 days.
I think you have to make it a higher delta because it's too low price. So
50 delta.
Yeah, put a 50 delta.
And this is the cool thing about it is you can change your expirations. And let's just, because we always talk about 45 days, let's just make it, 30 days. Is that cool?
Oh, sure. For 30 days out?
Am I throwing you off? And
we're 3 years. No, you're good.
Well, so
and we're going 3 years.
We probably need 45 days.
Okay, let's do that then. I'll put it back.
Because when these low price products, you need 45 days to get enough credit.
This is interesting because SoFi was invented or started trading in 2021. Okay, go on.
You can change it if you want to. So you can make it 75 days. You can make it 100 days. You can change this expiration here. The next you're going to look at here is you say, what are my entry conditions? So this is the first one here is just when you put on the trade, you're going to use the one that is closest to 45 days till expiration.
Okay.
Like if we look at the market right now, and let's look at SoFi right now.
I can't believe we're in SoFi.
I mean, it was next to SPY, and I didn't want to do SPY again.
If we look at SoFi, right, right now it's 42 days and 63 days, okay? So if this were to get back tested, we would choose the one at 42 days.
Yeah.
If you have in here, choose exact DTE. It's not going to do it until it gets to 45 days.
Got it.
Exactly.
Got it. I mean, it's a computer, so you have to give it exact parameters.
You have to give it exact parameters.
Number 5.
You can also say, okay, I only have a day off on Friday, and I have to work on all the other days, so I only want to check on Friday.
Well, I mean, and I think it's realistic to say once a week instead of every day, because nobody's going to put this in every day.
Well, here's my question.
Here's the cool thing here is you can limit the number of active trades. So because you only have a certain amount of money available, right?
I have unlimited funds,
have that,
but go ahead.
Daddy Tom money.
So let's say you limit your trades to 10.
You can definitely do that.
Oh, so I have a question.
Or one active trade, meaning like if you just want this on, then take it off. I want it on, take it off.
Let's say you don't want to do a 10. You don't mind having at least 10 on because it's over the course. Because
so
it's so. My question if you say put it on exactly 45 days, but you check every day, you're not going to really get
You're
filled
not
every
really
day.
doing it every day.
You're not doing it every day.
Maybe we should. Maybe this one should be called, approximate days or something like that. Maybe this is could be reworded.
I'm only
here
asking
on every
because
day.
a study that I have done that I have in a presentation, I checked every day, but only 40 on the 45 days because I didn't want to have it on every day. So then you might have it.
You probably would have to limit the number of trades you're looking at here. So let's just do it right here, just so we can look at the numbers. We're going to say, let's just do it on the one that's closest to 45 days. So it doesn't have to exactly reach 45 days. So it's just going to do it where you only have, so it's going to do it on day one. It's going to put on a trade. You're not going to create a new trade until that trade has been taken off.
Okay.
And then you're only doing one trade.
Oh, but we need
so
more
it's not
money
really
than
doing
just
it every
one.
single day. It's just
So
let's just see.
Okay, so this is only one at a time.
One at a time, but we're going to go back and we're going to adjust it.
Okay.
So here, I'm not going to say any exit conditions, and so let's run this. Okay. So here it is. Okay, that's the 50.
The puts won. It was like a race watching the whole thing.
It didn't really perform very well. The buy and hold approach lost $383.
Because SoFi went down. That's what I was going to say. I looked at this. SoFi went down, so puts are going to lose and stock is going to lose. But puts beat stock.
Both of these strategies did not look very good.
No.
Realistically. Now,
And it's interesting because it's
but we can make adjustments.
You can
Let's make adjustments to it. Okay. So let's say, like you said, let's put on 10 at a time. Okay.
so you
We
have
can
10
run it.
trades on it.
We can put 10 trades on at any given time. That just means probably we're going to lose 10 times as much as
Yes, because
then
before.
manage them at 21 days.
We're going to manage it 21 days. Yeah.
I mean, this should look identical if it's just 10 times, right?
Well, yeah, this would look
You're gonna lose
10
10.
bigger.
Yeah. Yeah.
Yeah, so stock wins a little bit. It's so funny how slow it goes.
Yeah, this is a little
Well,
bit
it's a
slow the
lot
first
of
time around because
information. I know.
And once it's queued up in the information, once it's stored and cached, then it's much quicker the next time around.
What I'm seeing, Jenny, is close your SoFi puts.
You know what? It's funny because I'm always selling puts in there, and I've had positive P&Ls in there the last few years. So I
This
don't
doesn't
know.
look very good. This
I don't
doesn't
know.
look like a great,
I don't.
at least historically. Let's go back here.
But again,
Okay?
as
Let's just go to one again because that was kind of quick. But let's try to see it managing the position. This is where this is where you refine. Okay, so this is what I consider paper trading. Paper trading for 2024, right? Paper trading is like you sit, you have to wait. And you can get stuck on paper trading and never get off paper trading. This is basically like one heck of an education because you're getting the results back almost instantaneous. It allows you to be able to refine your strategies, get the results back very quickly. This is like getting an MBA in trading.
But I would like to stay. I'm going to put something on here too because this is from Spider-Man. With great power comes great responsibility.
That's right.
You have to. You have to know. You kind of have to because you can manipulate this to get if you wanted to get a certain result.
Yeah.
Yes.
So that's why I think
and even if you change your time frame,
You
if you
look
go
at-
Like if you want to win on these puts, we can make
go to
yes.
like 1 year. If you go back 1 year, you're going to get different results. You
it's
can
gonna look
change-
pretty good.
Yes.
But here, okay, we just put we put it on one and we did a managing at 50% and that didn't look very good either, So there's a lot of adjustments that we can make here to try to get better results. But this is kind of like what you do. Yeah, if you probably go back in the 2 years, you probably would have made money on this particular strategy.
And we can switch.
I think this is a lesson too
money on this strategy.
on how we are always, and and I know, like let's say we start with something and we're selling puts, then it falls really far. We may then change our position and just sit long for a little while, wait for it to pop back up, then get back in, and so we're not just doing the same thing all the time.
That's right.
But this just that kind of shows that.
Yeah.
Okay.
So that was interesting to see because I have a handful of products that I'm always in and doing well enough in.
Yeah.
Mm-hmm.
So it's surprising to see, these aren't really good results.
Well, it's a
Just
low price
doing the
product.
same thing.
Yeah,
That's
just
right.
doing the
This
same
is
thing.
a very low price product.
Can we do a complex?
These are additional screens that you can look at too, the details. And I want to explain this real quick to everybody. The logs view is really helpful. And it gives you the fees associated with it. So this got assigned, you had an assignment.
wow.
Therefore, you got the $5 hit along with the $1.14, along with all the expenses.
But how
Each
would you
one
get
of these-
assigned if you're closing them at 21 days, or that's when you're not closing them?
You were not on this one. So this just shows you, and each one of these are different downloads. So you actually have 4 available downloads. So if you're somebody that wants to kind of nerd out with that glass of wine on Friday night, you want to, you can have a spreadsheet party.
You can get crazy.
You know what I think
You
is
can get crazy, Jenny.
You know what I'm going to do now? I'm going to take positions, take things that I've had and look and see, and let's say I'm positive P&L, but I'm going to run what I think I'm doing and see if it comes out the same.
I like it.
Just like, okay, let's say you're in XYZ and you're up this much and this is what you've been doing, plug it in and see if those numbers are similar to what your numbers are.
Do you have the 0 DTEs in here?
We don't have 0 TE. So this is great question. So We do not have intraday data right now. If we have enough people, using this, I'm sure, this is something that we can request. But cost and stuff like that is kind of.
Oh, for sure. I mean, the fact that this is free in and of itself is amazing. And you can run complex strategies on here too, can't you?
Get very
multi-legged, like zebras and jade lizards and big lizards and all that stuff. Like you can run all that stuff
right
on
now.
there.
It's only based on deltas.
Right.
But the possibility of adding a drop down along with percentage difference, percentage down, percentage away from the previous, these are all things that are,
in the pipeline and coming down.
We run, what time? We still have,
you got it.
Can we run, I want to see something, I want to pick something and compare selling weekly puts versus the 45-day puts.
How about TLT? Get something higher than.
Let's do that.
Well, TLT has been falling. I mean, maybe do you have DraftKings in there or something? I want to compare weekly puts versus.
Don't have DraftKings yet. That's
versus.
There's CrowdStrike. Just pick a stock that you want to do it, Jenny, because you have a vision.
Or even, I guess, even just do like IWM. I just want to compare weeklies versus 45 days.
Okay. What are we choosing?
Sell a put 30 delta.
30 delta, okay.
Weekly versus
strategy, of course.
Yes.
Weekly versus 45 days.
Let's just look at 3 days.
And only having one out at a time.
One at a time, okay. So let's for this one, let's just choose exact 45 days till expiration.
Okay.
Should we do any type of exit conditions?
21 days till expiration.
For 50, 21, well, no, 50%.
50%.
It can't be 20, if we're comparing weeklies versus 40.
Yeah, 50%.
That's right, because there's no.
You want to get out of the weeklies? 50%, I guess.
Well, I don't know. I want to see.
One at a time. Yeah. So this is versus the stock, right?
Yeah, for the stock for the past few years, it hasn't really worked out very well. Like a buy and hold approach.
It's done better.
Not making any money at all. Buy and hold, you lost $10. This, you lost $3,200. Probably from that decline here at the very beginning is where you lost it. Let's look at the details. Yeah, you can see you had some pretty big losses here at the very beginning of that strategy. But it looks like since 2023, I mean, it's actually been profitable pretty much every month.
How far back were you doing this?
This was 3 years. 3 years, yeah. You actually were profitable 82% of the time, but those losses were bigger than those gains, so therefore you lost money on it. So let's go, and we can now choose it for, let's say, 5 days. Limit number of trades, okay, one at a time.
Is the puts are the orange, right?
Yes, the puts are the orange here. So this one, you actually had about a 50% return on capital. Average profit per trade was $10 and $2,500 worth of profits.
So as the weeklies perform better.
Weeklies for the win.
Your profit rate was actually quite a bit better on this.
Head to head, weeklies.
I'm a big weekly fan. I know our research shows 45 days, but I'm a big weekly fan because you're in and out. You're in and out quick.
Or you're long the stock.
Trades here. You have a lot more trades. You have 207 trades, whereas before you didn't have nearly that many.
Yeah.
Now, we also show the total fees. And the fees, this is...
Well, I think that's good. It's a piece of the puzzle.
Yeah. I mean, we can lower the fees too by even saying something like, okay, exit right before 1 day, and you're gonna just
close the yes,
the day before. So
yes,
you're gonna minimize your.
It's gonna take it down by $4 because it's $1 versus $4, or free versus $5. Yeah.
You're not gonna get hit on that constraint here.
I mean, honestly, though, Dr. Data, that's pretty interesting when you look at that. When you take the fees and you're gonna close it for the 1 day. Look at how profitable that is.
And I know it's a lot more trades here, but you never have more than one on at a time. So in one scenario, never more than one on at a time. Here, never one on more. So your risk is the same as far as never more than one on at a time.
So you look at the amount of used capital. Okay, you used about $5,300 of that. So let's look. Okay, that was IWM.
I totally understand why Tom leans in like this.
Did we?
It's right there.
Oh, I know. It's right. No, I see.
So let's just show what would have happened here. Okay, so if you would do this in practice, you would look at the one that's 5 days away, and you're
did 30 delta.
Looking at the 30 delta. So it's basically doing this strategy right here, which is right now it's actually $4,000 with the buying power. And that's what you'd be doing, and you'd be making 32 cents.
And it's
worth of
so
credit.
little. It's so little.
not very
It's
much.
like not worth the $5,000 for only 30 cents. And typically, and I'm a big weekly fan, but usually in something that's lower priced. But also when I go out for the weeklies, I'm usually like this week doing next week's Friday.
Yeah, so you got a little bit.
So instead of 5 days, maybe you have 10 days in it. You have
good
like
point, yeah.
a little more time in it, a little more premium in it. Maybe 60 cents or 70 cents instead of 30 cents.
I like it. All right, Dr. Data, this won't be the last time we have you in. Hopefully you can come join us on our show because this is amazing.
I just wanted everyone out there to see how much fun the back testing is.
I mean, I'm not going to lie to you. I might have to start drinking wine on a Friday and back testing.
Love it. Thank you.
I might start drinking at noon when we're off the show when I start back testing.
Well, thank you for coming on, and I'm glad everyone can see it's not just SPY. I know our studies are SPY, but you can test. There are many, many products. How many products in there?
50 right at the moment, 48.
I mean, that's amazing.
And more coming.
Yes.
More
A
coming.
lot more coming.
All right, we'll be back in 90 seconds to get the opening bell. Spoos are still up 15.
Stay tuned.
Heard that fast market music, have you?
No, I don't think.
It's very catchy, it's like.
Yeah, you're right. Why would we never have heard fast market music?
I've never heard it before. I don't know that this is one of the segments where I'm usually doing something, so I don't know that I see it that often.
Okay. Fast market. We have 10 trades to get to. Let's 10 trades, and we don't have a lot of time, so fire them up.
I'm not gonna lie to you. Did you look at these?
No.
Me neither.
Right, we'll be surprised. Okay, what do we do first?
Okay, silver, slightly bearish. This is not from me. Neutral, slightly bearish / neutral. 1/3 call ratio spread in November. Buy one Nov 25, 37.25 calls, and sell 3 Nov 25, 39.75 calls. Use a decent amount of buying power, but no downside risk, and a break even is at 41.
So I like this idea of buy one, sell 3. You have room to the upside.
Correct.
The risk is to the upside, but you have room to the upside. I do like it. It's really way too expensive for us.
I don't mind it.
Way too expensive for us, but
if I were Tom, I would be doing that as well. And I like what you said. So I said this isn't from me because I am, like I said, a little bit more bullish in silver. But let's pull it up.
Let's I'm gonna go let's go the platform, if that's okay. And I just went to SLV to put this on a smaller scale.
Okay, so then let's do this. You're buying one.
I'm just gonna go. I don't know if he has deltas on here. I'm gonna go to like the 30, which is right there.
Yeah, you're buying.
And then
buying one of those, and then
I could
sell 3 up top. Yeah.
So I'm taking in a credit. I'm taking in $66 credit. We have room up to 33 and change.
This is not bad.
Not bad. It's not bad at all. We have you have the risk of 2 naked calls, but you're way up at not even on the screen.
Where's the break even?
33 and change. It's clever. It's a clever trade for sure. Do I press this button?
How much capital is it?
777.
777? Hit it.
66 cents, and you are using 777.
So we also, wait, Jenny, we already have a bearish trade, not a bearish trade in silver.
No, we have another trade in another cycle. That's why I moved this to 40.
We have a reverse.
I wasn't
lizard.
worried about that.
I know, we have a reverse big lizard. I just want to let everybody
I'm going to ship this. And this is bust out the certified badass card. We just sold 2 naked calls in SLV. We bought 1, sold 3, so we're short 2 naked calls in SLV.
If I start
the certified badass,
if I start shaking over here,
if she were in control of the platform, that trade would have never gone.
Never happened. All right, number 2. Number 2, OKLO. Pull back slightly, maybe a short put for December TTE. Credit put spread or debit call?
Yesterday, okay, so back in the platform.
This is specifically for you because you are an OKLO human.
This is from Richie Rich. So I'm going to try this. I did it. Are you seeing the platform now? I clicked on the bat screen.
Yeah, the platform's up.
Okay, so here's OKLO. A little bit of a pullback yesterday, but then back up today. Everyone's trying to get in on OKLO. we had positions on. I think they're gone.
And please, Richie Rich, this is from yesterday. So Richie Rich, I hope you sold your puts yesterday or did your debit spread yesterday. We have a position.
Here, we have a long December 15 call, short the November 20 call, diagonal. We'll just leave it and keep the dream alive in OKLO.
Yeah, but I like it. I mean, I'm long OKLO, you're long OKLO.
Sure.
Everybody's long OKLO. I mean, because it's a newer stock. It's kind of in its infancy. Okay. Number 3.
Coin. Coin is tough too. Earnings are approaching, but I'm still selling premium with the December 153.50 strangle. I mean, look at that credit, 930 credit. Justin from Portland, you get a certified badass
And
card.
you get a certified badass card. Yes. So Coinbase, look at how wide it is. $200 wide strangle collecting $9.
Sometimes when something looks too good to be true.
December. So can we pop in and take a look at this? So you know what?
Yes.
So in coin, it's the December 150, 350. 150, 350 in December. Earnings are on the horizon. You are a certified badass trader right now.
There's so much premium in here, and you're at the 350 call and the 150 put. It looks good, but I've seen this before where something looks so good. And then you do.
My opinion is if you're going to sell strangles, I don't want the earnings before it. I would sell strangles in the earnings cycle. I don't want that much room if there's earnings.
Well, the earnings are in a few days. The earnings are.
That's what I'm saying. Sell the earnings strangle instead of this strangle.
Well, the reason why you're not going to get here. He's getting such a wide range. You're not going to get that wide range.
Or sell it in December, the eve of earnings, because here's what's happening right now. If you're selling both sides and it moves, what day is earnings? October 30th.
It's next week.
Next week. So you have another week.
Well, no,
look
2 weeks away.
Look at what coin did in the last 2 weeks.
It's been all over the place.
So you're not going to be able to get out of it. You're not going to be able to get out of it if you sell that premium and then it gets this move. So if you want to sell a strangle with earnings in there, I would wait till the eve of. I have no problem selling strangles.
We usually do.
Yeah.
But can you believe how far you can get in coin?
Because there's earnings.
Well, but earnings is only getting you, the earnings move is only $27. This strangle is $150, $350, $200.
This thing has been moving at look at where it was. Look at where it was last week. Go back into the. Can we go back into the chart? Look at where it was last week.
It was
100 points away.
163, and now it's 210.
Yeah,
I know.
It's 1 week move.
That's why you're getting paid so much.
That's why you're getting paid, right? Okay. Next up. Next.
We didn't put that in. I'm FYI. Oh, another silver sell November 27 put. So we just did that call 1/3 call ratio spread. Here's someone selling a put. We can add it onto our ratio spread. It won't use any more buying power.
Won't add any more buying power.
Here, I'm going to pop into silver. Pop into silver, go right back to 42 days, and we have that 1/3, and I'll add on this 27 put.
Oh my God, our silver position looks like my silver position now, because when you open mine up, it goes.
And you see it won't use any more buying power because we already have that 1/3 up on.
And it's the one they wanted was the 27 put at 35 cents. Look at that.
I could actually, you know what I could do? I could sell.
What's this from?
2 puts. I could sell.
Hopeless Carlos. Tasty.
I could
Tasty
sell
never.
2 puts and it won't use any more buying power because we have 2 short calls.
Look at you.
Just racking up the beta. What do you think?
Love it.
All right, we're in.
And we got filled on that silver trade, which is good. So
we're getting crazy. I hope our risk manager isn't watching. We've got a 1/3/2.
He's driving
He's
somewhere.
going to be calling us. All right.
And on top of positions in every other stock. Okay.
Dollar Tree.
Okay. Has a 73 IVR, which is good for stock that just reported earnings. Oh, it's already out. Okay. I'm selling December 30 puts. What are your thoughts on this strategy?
I'm always leery of the Dollar Tree, Dollar General. I'm always kind of leery of those. I don't know. What do you think about those?
Why are you leery?
I don't know. So I met someone who invests in, he invests in real estate, and he's building warehouses, and then they're retail, and you're getting checks in the mail from the rent, blah, blah, blah. And he's super nice, and I was all into it until he told me he's got a lot of Dollar Generals, and I was like, I'm out.
That's where you're. That's where
I'm out. That's where I draw those. Something about the Dollar Tree, Dollar General. I'm always a little bit. I'm never in these stocks.
Okay, but let's take a look at the stock as if. What if I took? Let me ask you this. I want you to look at this as if you don't know it's Dollar Tree.
Okay. Okay. Then I'll go to the trade page. You tell me.
So, I mean, now you know. You'd be like, what? What stock is it?
Go ahead. Walk me through it.
So it's got a 73 IVR, which is a 70 now. So December. So you're through earnings.
Earnings.
Which I don't like either.
Yeah. Well, it's
the 30 puts.
It doesn't matter.
The 30 puts.
What? This isn't right.
You got the wrong symbol.
Yeah, because the 30 puts in Dollar Tree are 4 cents.
Am I reading this? Please keep in mind, visually impaired. It says I'm selling December 30 puts.
Yeah, they don't exist. And they're, maybe he's selling the 60 puts. I bet he was selling the 60 puts.
Eric from Sacramento, we regret to inform you that we're moving on.
Yeah, we'll move on to the next. 60 puts for $3. It's not bad if you would.
No. Yeah, no. So, okay, let's move on because we're not going to do Dollar Tree. She's got an inversion.
I got an inversion to Dollar Tree.
And I'm not selling a put for 10 cents in Dollar Tree.
I just don't like those stores.
Okay, number 6, please.
All right. DA, December Strangle, 47 put and 65 call. What do you think? I don't even know what DA is.
DA. Yeah, let's see what that is.
Hold on. Trade page. DA.
The 47 put, 65 call. December.
There is no DA.
What is happening?
I don't know. Is this supposed to be DAL? Delta?
Yeah.
Yeah. Because that makes sense.
That makes perfect sense.
All right. Earnings are over.
The 47 put, 65 call.
47 put, 65 call. Sure, I'll sell a strangle in Delta, 65.47.
Yeah.
So we talk about how we don't have a lot of strangles. I'm not afraid of this Delta strangle. Yeah, there's risk, but we can.
No, we're fine. And that's pretty far away. And this seems symmetrical. He's getting 60 cents and 60 cents.
Yes.
Does he mean Delta? Team, we're going to need to throw an L on that after this for the slides.
Okay. All right. Next up.
Number
J.
7.
Japanese yen is oversold in the short term. Might be a good time to pick it up again. I'm trying to decide between selling a 50-day 30 Delta put or just going long the futures. So
let's take a look.
Back in the platform and
6J.
I want to see what this oversold looks like.
I mean,
for someone who was in 6J down here.
Doesn't that look very orderly? Look at that march down.
I know.
That looks like the most orderly down move I've ever seen in my life.
This pains me. This 6J. I can't stand it.
I know it does. But so
at this level, me personally, I'd rather sell puts than go out and buy the future.
I would rather too. So let's take a look at the 30 Delta put. I mean, isn't there an M6J?
We can sell a put spread. Here's the 30 Delta put. Here's a put spread where we're risking 925 to make 325.
Make that lower. I don't want to risk that much.
Risking 437 to make 187.
That's a number I can live with.
This is what you get when Liz and Jenny take over. Instead of buying the future, we're selling a 5-point wide put spread.
Yeah, because they didn't give us Tom's money to trade with today, and it kind of is irritating because otherwise we would just be singing futures.
Although I would sell the put, I think.
I would be selling okay. Remember, we're going to answer this the other way. If I had Tom's money, I would be selling the 0.006665 put. How much is that?
0.00.
The one, it's the 38 Delta.
Oh, that is going to give you $937.
That's exactly what I would be doing if I had Tom's money because it's close to a 40 Delta. That's where I would.
He was looking for 30 Delta, so even the 30 Delta is giving you $700.
Yeah. Yeah, we do like that.
And it used $2,800. Not terrible.
No.
Okay.
I mean, we've been in 6J. We know it makes you mad, but I get it.
We're doing pretty well, Liz. We only have a few more to go. Next. XLV. At the beginning of the earnings season, an ETF seems like a reasonable choice with 54 IVR. December 145, 160. Let me take a look at XLV.
$2 in premium. Do you find it odd that all of these are December trades?
Well, November's 28 days.
Yeah,
so
true.
XLV Healthcare. Interesting. I've never traded the health.
So 45.60. I think I have.
I don't know how. I'm not sure. I mean, there's option interest. There's open interest. There's 1.5 million shares.
How much capital is this? Yeah, that's a lot.
No, for a 145 product for that price, it's right.
It's a lot for us.
No, I mean, here, watch this. Okay, 145, 160 strangle. You're getting $2 using 2,300, about a 10% return on capital.
Yeah, but
if you don't want to use that much.
We'd have to iron condor it or something to that effect, because the issue here is in XLV, you've got 63 days. It's going to hold up $22,000 or $2,000 in order to do that. That's more.
So I turned it into just an iron condor.
That's more palatable of a nugget for the Liz and Jenny size accounts. So wait, let's talk why. Now, Tom's money, sure. I would be zinging that. No problem with the 45-60 strangle. And I like the strangle over the iron condor a lot. I don't think XLV is going to be a high flyer. I don't think that we're going to get out of this that quick. And it's 63
we're going to be
days.
in this for a long time. I'm not, we're going to be in it a long time.
Yes.
Iron condor.
We're going to be in that iron condor a long time, but we would have been in that strangle a long time too.
I know.
So that's the only reason I wanted to think about doing it a little bit different.
Okay, so that's working. The iron condor is working. Next up, we have just two more. This is from Jeff from Miami. And who's in Miami? Taylor Swift, right?
This is Delta Airlines.
Here we have the 50-60 strangle.
Yes. Breaking news. Taylor Swift is in Miami, and I believe we're going to see Vanetta is trying to be from Vanetta.
Maybe. Okay, so Delta, we did do a strangle in Delta. That was an earlier slide. And
we did do a strangle in Delta.
Mm-hmm. Right. So last slide, we'll go the last 10 out of 10, and then we're right on schedule.
I can't believe it, Jenny.
Tesla to 225 plus Friday morning, the day you're reading this. Tesla to 235 before November 1st. I buy calls. This is from Elon in Texas.
Okay.
All right, Elon in Texas.
Let's take a look at Tesla. Tesla to 225. Okay, this is
not that far off.
So they buy calls.
If you think it's going up, we have earnings next week. If someone's really bullish and we have earnings, you could buy.
So let me ask you this, Jenny. So I'm just reading their play. Now, Tom and Tony would never do this. Never. So they say it's going to be 225 Friday morning, which it's close. So you're right there. You could be doing, like, to your point, a Super Bowl. But if they think it's going to go to 235 by November 1st, what if we sold the 235 in the, let me go to this right here so I can take a look at what I'm doing. What if we sold the 235 in the 25 day or the 7 day?
Don't even tell me a calendar.
You're getting $3 for that 235. And if they think it's going to be there by November 1st.
Then it's going from 220 to 235, but $15. If you're long 100 shares or long a zebra or whatever, you make $1,500 instead of $100 on a calendar.
No, we can't afford a zebra in this.
No, I'm just saying if they think it's going to 235, then I'd rather do something very bold.
If you think it's going to 235, put a zebra on 100%. If you think it's going to 235, show them how to do it, Jenny. Show them how to put a zebra on.
Okay, and I pulled up just for us a Super Bowl where you buy a call spread and sell a put spread to pay for it, where we're risking only 500.
But your max profit here is only 217.
Yeah,
to your
it's
point,
only 217.
I mean, you could make that on the calendar.
Now, is a zebra?
Zebra's going to be expensive.
28 days. Sell 150 delta. Buy 270 deltas. It's $3,100. It's $3,000. But if you bought 100 shares of Tesla, you're using $11,000.
And if they think it's going to 235, wouldn't we just do the debit spread in the November?
Yeah, you could.
Yeah, sell the 235, and then what are you getting? $7. Buy that. That's where you'd land. This is your best bang for your buck as far as buying calls. And because if you're buying a call and you think it's going up, it has to go up by the amount of the extrinsic value in there. This washes extrinsic value. You will make money up to 235.
All right, 10 out of 10, 9:02. We're only 2 minutes behind schedule. Everybody stay tuned. We're going to take a quick break. We will be back. What's coming up?
We've got market measures. The importance of managing jade lizards.
Stay tuned.
Welcome back, everybody. This is Market Measures, and we love our team because they put together something that is near and dear to our hearts. Jenny Andrews.
Yes, looking forward to it. Thank you very much to the research team for putting this together. I know
Jacob
our viewers had requested some studies. We talked about it earlier in this week, looking for requests. If you didn't see your request today, we are going to keep the research team busy.
We'll keep asking.
And get some studies for next week for our show, because I know there was someone I was writing back and forth with thought we were going to be, covering their request, and I didn't see it on the schedule today.
No, we did not see it on the schedule, but we will. We'll talk about that next week when we have a little bit more. Jenny and I get to do whatever we want on our show. So you ask and you shall receive.
The exciting thing about this market measure is it's from Jacob.
I know. Jacob, yes, we love Jacob. He's awesome. He's super smart. Okay, so let's jump into this because we've got a lot of stuff. We still only have like 1 hour left. So jumping in, this is the importance of managing jade lizards. So let's jump.
And I love that Jacob knows we're on and he's bringing on a jade lizard study.
I know.
And I'm very curious to see what this is going to say, because the jade lizard in a bull market, if you don't manage it early, you can go from having a winner to breaking even.
Having a non-loss is not a winner, right? So, okay, managing jade lizards. Jade lizards are an advanced option strategy for traders with a neutral to slightly bullish directional assumption looking to make short premium trade. True.
To sell a jade lizard, a short out-of-the-money put option is combined with a typically closer in the out-of-the-money call spread. If the distance between the call strikes is less than the credit received, there's no upside risk. The downside risk is unavoidable. At Tasty, we often advise exiting short premium positions well in advance of expiration. What effect has early management had for a persistent seller of jade lizards?
All right,
this is great.
Let's keep moving. And he's got it all right. Okay, the study. So they're using 15 years of options data in SPY, IWM, Triple Qs, Apple, Amazon, and Google. Mm-hmm. That's a lot. Considered selling 45 DTE jade lizards at every monthly expiration using a 20 delta short put and a 40 and 30 delta call spread.
Okay, so with that 30 delta call spread, you're maybe not covering the width of the spreads. I do a lot of back testing on jade lizards.
But they have to use deltas.
Yeah. You have to use a delta. So with this study, there may be a little bit of risk to the upside, but I like it. I love any jade lizard study. Bring it.
And I like that they're covering their bases because these are the big liquid products. All right, let's go to the next slide.
And this is over 15 years.
The study contrasted holding these positions through expiration with closing them at 21 DTE. Okay, so this is interesting because you and I kind of say you close your jade lizard when it's nearing your call spread, not necessarily these parameters.
But he's got 21 days till expiration. And when you're using that back testing, you can choose close at a certain day or close at a certain percent of profit. And sometimes when I'm looking at it, I will look at, compare closing them at 50% or closing them at 30% or closing them. Sometimes when it's going through that call spread, you're only getting 20%. So here he has closing them at 21 DTE.
And they analyzed the percentage of winning trades, the net average P&L per trade, and the conditional value at risk, the CVAR, the average of the worst 5% of outcomes. Okay.
All right, great.
That's just this is just the setup. So this we can kind of go through quickly. We'll analyze more of the rest of them. Number 4, please.
Okay, win rate, SPY, IWM, Triple Qs, 79%.
This is held through expiration.
68%. And average P&L, are you surprised that IWM is negligible, 2.55?
No, I'm more surprised that SPY has a $38.
Yeah.
Hold on 1 second. I'm going to pull up his parameters in SPY. I just want to see what it looks like. We talk amongst yourselves. You can go to the next one if you want to.
Well, this is 15 years. Okay, so this is 15 years of data. It's also running through COVID. And I know from testing some of these, a lot of strategies really take a big hit. As your P&L, you'll see your P&L climbing. You hit that COVID era and it goes really negative, and then it takes from then until now to get back up into the positive. So I'm not surprised by the low results for IWM and Triple Q.
Do you know what delta they used for the puts?
20 delta.
Thank you.
Okay, so let's move on to the next slide. Now here we have closed at 21 DTE. Look at the difference. Now, all of them more higher average P&L, but much higher in IWM and triple Qs. SPY minimally higher.
Minimally higher, but the conditional value at risk in SPY went down by 2/3.
Because you're closing them at 21 days. You're not letting those puts get close to expiration. And they're all over 80% win rate.
Yeah, this is fascinating to me. So, but I usually don't let now I will say this, I usually do not let mine go until expiration, the Jade Lizards.
Jade Lizards.
So I mean, this is the one that I will say 21 DTE, I'll either close it and then reestablish it somewhere else, close it and manage it. I'm never rolling up a put. We're never managing it by rolling up a put. The one thing you can do in these with the delta parameters, Jenny, is you could take and roll down the calls if you needed to because they're pretty wide.
When you look at this, like average P&L, we've always said IWM is a good candidate because it's much lower priced. You're using much less buying power.
I don't think it's the conditional value at risk isn't that much more than SPY.
No, but you're looking at SPY, which is so much higher priced, and Qs where you're using a lot less buying power in IWM. I kind of like the average P&L there.
I do too. Okay, let's see, because then they're going to do it in Apple, Google, and some other things too.
Okay, let's take a look.
So here's held through expiration.
Okay.
Look at this. Held through expiration, you're losing money on Apple.
Look how much you're making in Google. But that's before, a lot of this is before the split. So you're getting hefty premium for some of those puts.
Look at the win rates in these. I mean, what I saw, I expected the win rates to be around 70-ish percentile, right? 68, 70, 72. I consider all those the same number. I mean, I'm not going to tweak those. But to your point, in the last set, I would choose IWM for its low capital usage, especially if you're gonna close it at 21 days till.
And here now, I feel like it's a lot different. You look at the CVAR and Amazon and Google. Well, now they've all split. So now you're looking at a $150 product instead of hundreds of dollars.
Yeah.
Okay, so let's see when you manage it at 21 days.
The CVAR is still pretty high in these, closed at 21 days.
Well, they were expensive products. I mean, Amazon was so expensive.
So, okay, looking at these, I think the main takeaway for me is I'm never going to let it go past 21 days.
It's okay. So I love this and I love this study. And selling Jade Lizards and running all my back testing, yes, I would close at 21 days. But we do also love the 0 DTEs and the weeklies, but it's different. It's a different strategy. It's a different.
They're different. That's not that's like apples and giraffes. Those aren't even the same.
It's not like a Jade Lizard. If we're putting on a Jade Lizard in one of these big products, we're closing at 21 DTE.
Yeah. Yes. Mm-hmm. This way you can't talk about 0 DTE in the same breath.
Or even the weeklies. We've got lots of people who love trading the weeklies. And I know most of these studies show best results closing at 21 DTE. And I think that is for the, these big products.
Well, it can't be the weeklies because the weeklies are gone after today. Like the 0 DTEs are gone.
It's the Jade Lizard and these bigger products close at 21 DTE for the best results.
Yeah. I mean, hands down. What I've been loving too is taking these Jade Lizards and putting them over stock positions.
Oh yeah,
because when you're looking at that, you're getting premium selling, but you've got the directional bias in there, and then because there's no risk to the upside, if your product goes up, then you pick back up to the upside of the Jade Lizard. It's a double negative because you're doubling down to the downside. But I do like that. Let's look at his takeaways.
Okay, final slide takeaways. Selling Jade Lizards can be a profitable trade when looking to collect premium on neutral to slightly bullish assumptions. For both ETFs and equities, closing Jade Lizards at 21 DTE saw improvements in all trade metrics considered.
Only in Google were traders holding out through expiration able to make more money. But this was the cost of less frequent winners. Remember, it was only 50% and significantly worse bad losers. That had the biggest conditional value at risk.
The next time you identify a good candidate to sell premium but can't decide on an option strategy, consider a Jade Lizard. Just remember to manage early. And that is a key takeaway with those Jade Lizards, manage early. And I, from my experience looking at some of the test results, managing at 21 DTE yields way better results than managing at 50%. Like if someone says, I'm just going to manage at 50% and leave it, but then doesn't manage at 21 DTE, I think that hurts you in the long run.
Well, because I also think it's a battle, right? You're collecting so much more on the put than you are on that call spread, but you want it to go towards that call spread. So you want to be making more on the put than you're losing on that call spread. So it's a battle. I think 50% of a Jade Lizard is a little bit
Right. So I think
hard to get.
I agree. So I think that 21-day mark is more important than the 50%.
I do too.
I don't know that you're going to hit 50% before 21 TE. So just keep it simple, 21 days till expiration.
I kind of agree. Jacob, you get a gold star. We're going to send you a certified badass option trader in the mail.
Thank you very much, Jacob. And we have, what time is it?
We're going to try to do one more thing before we bring Scott in.
Yes, Jamal made an amazing piece for us.
So he usually does This Week in Stocks. We're jam-packed and loaded with things. We want to say thank you to absolutely everybody. So we do want to do This Week in Stocks. Now, my question to you, Jenny, and my question to John, do we take a break for like 30 seconds or do we just jump right into it? John, you get to be the decider.
We can do a real quick break.
All right, we're going to take a quick break. We'll be back with This Week in Stocks. Stay tuned.
Hello, everybody. Welcome back. We have got Scott coming on in about 10 to 15 minutes, so you can give us a call and he will answer your questions. It's going to be our favorite segment. I know that. But right now, we've got a great segment for you that Jamal put together for us.
Yes. I can't wait to see this. I love the title, The Rally That Everybody Seems to Hate. Well said, Jamal. Well said,
Jamal. Now, that being said, Jamal is out in LA right now. I believe he went out yesterday. If anyone sees him, give him a hug from us. Please, hug.
To all
2 arms.
out there.
All hugs require 2 arms and 1 leg. If you could do that with Jamal,
Everyone
that'd be
had
great.
a wonderful time in LA. I'm sad we're not there. So we're holding down the fort here.
I am. Okay.
Okay, the rally that everybody seems to hate. Let's see what Jamal
All right, what does he have to say here? What if that's it?
I think a lot of people are in that camp, like waiting for this rally to end.
Jamal, I'd like to give you also 2 gold stars because we have 6 slides, Jenny. 1 of 6.
All right. Notable items of the week. Retail sales strengthened in September in an illustration of resilient consumer spending.
Yes. So we did see that this week. Also, the ECB cut rates 25 points on Thursday. So it's funny. And I'm glad, this is why I love this segment. And I'm glad that Jamal does it all the time. We knew that the ECB cuts rates, all this stuff is very important. It's just interesting to see it all like kind of put together.
All these things that happened this week that's going on in the market. Netflix beats on earnings with 14.4% growth in global streaming paid memberships.
And then crude oil fell 6% this week. Is crude oil still down? Crude oil fell 6% this week after Israel did not attack energy facilities, thus removing the geopolitical risk.
Yes, it's down today. So it's been down every day this week. Gold hit another all-time high, even as the dollar was positive for the first time in 3 weeks.
Gold. Can't stop, won't stop. Tim Knight and Liz are both bullish.
Gold naked calls in SLV?
I know, you're crazy. Crazy, I tell you.
All right, VIX and VVIX remain near their long-term averages with the election less than 3 weeks away. It's interesting that we all talk about them being high. Average of the VIX is about an 18. Always was an 18 before COVID, but then we had that year of high VIX. So maybe it is closer to 20 now, 19. Remain near their average, which it's crazy to think that this is just average.
And that seems to be my main takeaway here is you're right. That is the average. We just keep saying elevated VIX levels. They're not elevated. They're average.
They're average, but we had 10 years of low VIX.
Yeah.
10 years from 2011 when we started until 2020. We were in a 10-year period of low VIX.
Yeah. And now we're just average.
Now it's
All right. Number 2, please.
All right, bank earnings have mostly gone well. Goldman Sachs reported on Monday that profits increased 45%. So here you can see all the banks.
So they all went well. And then AXP is the outlier? AXP went south.
Today, not so good.
The rest of them seem to have gone pretty well because
I've seen some of them down a little bit this week, but in general, they're all near the top of the range.
Goldman Sachs is leading the charge.
Yeah.
And who's the lagger? Morgan Stanley is underneath it. I thought Morgan Stanley was down on earnings. They were.
JP Morgan is underneath Goldman Sachs.
Oh, is it? No. I meant the last, which is the lowest is Morgan Stanley, that red line.
Yeah.
The lowest is that red line. So that's pretty interesting. I mean, these banks, and they are the first. They're the first to report, and then they're gone. I think AXP was the tail of the banks, wasn't it?
Tail of the banks.
Yeah. Well.
Okay, so next slide, please. OKLO.
Look at this. He's totally playing into you, Jenny.
OKLO, day-to-day percent change. OKLO is up 164% in 1 month on news that Amazon, Microsoft, and Google are all interested in small nuclear reactors of AI energy. Yes, it's been a bonkers week for OKLO. Will it keep going?
Is this day one?
Of the nuclear energy craze?
Yeah, that's what I'm saying. Like, is this, look at OKLO was not, it was a SPAC. Our YouTube people were telling us this. It's a SPAC. And now OKLO is like the belle of the ball.
I know.
And none of the other ones are, CCJ's up, but that's uranium. And you're getting that UUUU, which hasn't participated.
It's barely up. It's OKLO. OKLO is the one that's really, really seeing the...
And it's got a catchy name, OKLO.
Yeah, up to 1930 now, up 350.
Yeah.
Everyone wants in on the game.
It's up one step.
Everyone wants in on the game.
It's been up there before. When it first IPO'd, it shot up to 18?
The highest it got was 1880.
Yeah, 1880. So, we act like you've been here before, because we were. And then it came right back down.
It's interesting. I said I was not going to sell my stock, but I did and turned it into just call debit spreads.
I'm pretty sure you're the breaking news on OKLO. You're the one who broke it onto the scene, the tastylive scene, because with your brother.
I brought the article about the company. This was back in March.
Yeah, you broke this. And we wrote it down, by the way, by the by.
And I experienced some pain because people would be like, oh, that OKLO, it was 10 it was 10 and it got down to 8 or 6. And we did experience some pain. Took a little while for it to make a roaring comeback.
Yeah, but you broke this onto the tastylive scene, Jenny Andrews.
Well,
how does it feel?
I wish I had more. Okay, next up, please.
Okay, so then what is this? There are many liquid ETFs that are flashing IVRs of 30 and above. Okay, I like a little chart like this, 30 and above, so we can see the 30 mark. You can get it above. Oh, yeah.
XLB, XLI, XLP. There's a lot, but what's interesting here, we're seeing high IVRs, but Jamal said the VIX is average. Yeah, yes, we're average VIX, but we're seeing high IVRs everywhere, and the VIX at 1920 does seem high to us.
So you want to go IV rank is high and IV high. So Smash seems to be the outlier, but that makes sense. It's got a lot of stuff in it.
Yeah, there are lots of choices.
GDX.
Lots of choices here. So when we're in the middle of earnings season, but people might not see us making too many earnings trades, it's because we have high rank across the board.
High rank across the board. And when it's across the board, it's easier to stay that way.
The rally that seemed...
I'm glad we got into this because this is pretty eye-opening to me.
Yeah, we'll see what Scott's going to talk about when he comes in, see what's going on.
I think we're taking calls.
Taking phone calls.
Yeah, we'll see what...
Yeah, he'll be in momentarily. We'll be taking calls 855-238-2789 or 855-B-TASTY.
Yep. Okay, next
slide. All right, so SPX forward curve, macro event.
Okay, this is where you lose me, Jamal.
Okay, so we've got the different times on here, and he's going forward. So you see, we're going into October, November, what's going on, different earnings.
This is awesome.
The forward volatility curve over the next couple of weeks is highlighted by the big difference between election day and Fed day. So.
Okay, so you got Google, Tesla, Amazon next week, right? Mm-hmm. Then you got JOLTS, GDP, PCE, yeah, you know me, NFP, Apple, Meta, Microsoft. That's a big week. These are 2 big weeks. Then you've got the election.
Then you have the election.
And no one is doing any reporting of earnings over that election. Do you see that?
Right. Well, then is earnings almost over? Why
Probably.
Are wrapping up?
Then it's going to be Lulu, but he's not going to write Lulu in there.
Yeah. And we've got the Fed.
Because, he's got NVIDIA all the way over. NVIDIA is the end of November 19th or 18th. This is a pretty cool chart.
Jamal, you're welcome on our show every week.
So the forward volatility curve over the next couple of weeks is highlighted by the big difference between election day and Fed day.
Forward volatility curve.
So he put the forward volatility curve on with all these events. That's pretty interesting.
Yeah. Very cool. All right. And final slide.
Does that give you any trade ideas? No. Okay, from there.
All right. In closing, ASML's 65 billion plunge. I want to see where that is today. You can keep reading because.
Okay. ASML's $65 billion plunge on Monday shows the diverging fortunes of chip makers with regard to AI technology.
It popped up today, 24 it's up $24. It's up to $7.24.
Yeah, but it still had the plunge protection team is trying, but they're not doing much to it. Okay, Uber explored a $20 billion bid for Expedia. I called you on this.
I know.
As a way to tap into new growth. Yes.
Apple rose to an all-time high on optimism that the new AI iPhone will lead to increased sales.
Yes, and then Walgreens Boots Alliance closing 1,200, 14% of its U.S. stores to offset a weak demand. Okay, that's
Walgreens had a little bit of a rally this week from about 9 to 10.50.
I mean, that's a big big move for you, little WBA.
All right, Boeing turning to major banks on Wall Street for funds to withstand striking workers and operational setbacks. That doesn't sound good for Boeing.
What is Boeing doing?
And
because we have a Boeing position.
It's down 50 cents, so not much. It rallied this week, went from about 145 to 154, so it had about a $10 move this week. Today, it's mostly unchanged.
Yeah, so that's not that big of a move for Boeing. And then Qualcomm, which is what Vanetta talked about this morning. Qualcomm decides to postpone its purchase of Intel until after the November election.
Oh. Well, then I guess I need to keep my Intel position.
This is why I said this with such exclamation point.
Okay, so what I do want you to know is that SPX trade is gone. So it's gone. So the trade, closed. Yes, closed. It closed. So the trade we did in the morning at 8:30 on the open, where we sold that $15 wide iron condor, took in about $1.30. I put a GTC in to close it at 50%. It's gone.
Yeah, we don't scream Jajun for this one.
No. So that's trade one of the day in SPX, in our 0 DTE.
That's pretty good.
That's gone.
And it was 50% you put it in for, right?
I put in for 50%.
Okay, what time did that fill?
I don't know.
9:08.
9:08?
9:08.
That didn't take long.
So you were in that. You got in at 8:30. We were filled at 9:08.
Crazy. Oh, good. All right.
Yeah, that's not long at all.
No. So that was awesome. Thank you to Jamal for sending that.
I know, Jamal. I mean, that was jam-packed with information. We give you a gold star as well.
I love it. The rally that everybody seems to hate. All right, everyone, stay tuned. We'll be right back with Scott Sheridan.
Stay tuned.
Good morning, everyone, and welcome back to the show. This is Option Trading Concepts Live. My name is Nick Batista. Got my man Mike Butler, and of course, Thomas Westwater in the house with us today for Westwater Wednesdays. And if you want to come join us, hop over to YouTube, type in Tasty Live, come to our channel, give us a like, and subscribe to our videos because that helps us immensely. But more importantly, just come chat with us live because we'll be taking questions throughout the show. Whatever you got questions on, from strategies, concepts, trade ideas, trade management, whatever. Just come hang with us for the next hour of the day. My favorite hour of the day. I get to spend it with my buddies, Mike and Thomas. Thomas, how are you, sir?
Doing awesome. It's good to be back with you guys every Wednesday. My favorite day of work, of course.
Oh.
And we get to eat some pizza after this, so everything is swimmingly. And, China markets, they kind of crapped the bed overnight, but VIX still above 20, ES ripping higher, so it's not a bad day.
Been a little crazy couple weeks. I mean, I know you mentioned the China stuff. You had an awesome article. We put it in the cherry picks as well from last week, just about all the craziness that was going on in those markets. Is there? You think it's popped? Did we get the fluff out of it?
Yeah. And if you look back at these big Chinese equity moves when they come out and say we're going to do stimulus. It sells off every time after because the policymakers in China never live up to the expectations, and that's what's happening here. They had some, talking heads come out, they didn't live up to it, so selling off. But we didn't really translate. European equities held up overnight, so it's being shown in things like copper. It's being shown in things like oil, but we're not. It's not spilling over in equities, so I think that speaks to kind of some of the risk-on appetite here.
I actually had when I was on for Johnny Trades and we took some calls. Somebody was asking about copper ETFs. Do you know of any that are like not even like tradable, but just exist?
CPER.
CPER. Okay.
Yeah, there's COPEX, but that's miners, of course.
Yeah.
Yeah, I think CPER is the big one.
Okay.
But copper's a hard one. There's not really a great product to get outright exposure to, and the futures product is really big.
Yeah. We were talking about like FCX is like
Freeport.
kind of
Yeah. I mean, that's a good one.
as like a proxy. I mean,
Yeah, that's probably your best bet. You can
Yeah.
also go with COPEX if you want to do the miners, but
very good. Mikey, how are you? Have you packed? Are you ready to roll?
I haven't done anything.
No?
Yeah.
Classic man move.
Yes.
Yeah.
Classic male activity. Yeah. Well, the places where we're staying, they have laundry. So.
Oh, that's nice.
I'm just gonna pack. I'm literally packing a carry-on.
Yeah.
And I'm just gonna bring like 6 or 7 days worth of
That's
stuff.
what you gotta
which
do.
for a guy is 1 pair of jeans, 6 different shirts, and that's it.
Yeah.
So yeah, I'm gonna do that, and then I'm probably gonna buy another carry-on there, and just pack it with a bunch of stuff.
Yeah.
All my trinkets.
Yeah.
That I'm gonna bring back.
Wow.
So yeah.
I can't wait to see your desk when you get back. I feel like you're gonna have like the
a lantern,
like the
Hello Kitty,
the Hello Kitty, like
Yeah.
the one that like goes like this all day.
Yeah.
Yeah. I feel like you're gonna have so many little like knickknacks.
You never know. You never know. But yeah, I'm very excited, and it's starting to feel real. It's starting to feel like it's actually happening.
Well, you will be missed.
Thank you. Thank you. I'll miss you guys too.
Oh, that's what I was waiting for. I was holding my breath. I wanted to get, tell me you love me back, that kind of thing.
I'm sure you'll be thinking about it.
Yes.
Like the Bo Nix interview, you see that?
No.
They were like, some reporter was like, I saw you and Coach yelling at each other. What were you saying? And Bo Nix was like, yeah, I mean, he's told me he loved me, and I yelled at him that I loved him back. That was literally his answer.
That's good. That's good. That is really awesome.
So what did you guys think about the Bitcoin documentary?
Yes, I did watch it. Did you watch it?
I did watch it.
It was disappointing.
Yeah.
Were you disappointed? Do you believe
I
it?
did watch it. I saw it. I brought Max up and I saw it. And I told my wife, everyone at work is watching this. Can we watch it?
And she said no.
She's not greenlit.
She said absolutely not. We're in Game of Thrones season 1
so
final episode.
Could have went out after, she went to sleep, but passed out. So.
Yeah, it was a big. I feel scammed that I watched it. Honestly, how about you?
I mean,
it was interesting.
I thought it was interesting. I don't.
But it was exactly what I said it was going to be. It was. They're either going to have like real info, or they're going to be like, "We're all Bitcoin. This is blah blah blah." So it's I won't spoil it for anyone, but
I don't know. I think whoever is behind it is long gone.
It's a rare max flop.
Mm-hmm.
So.
Yeah. I mean,
because it does
it got some buzz.
The whole thing is like, okay, they wanted to create this currency that was untouchable in terms of like someone being manipulated or changing their mind or whatever. So the only thing they can do is remove themselves and never take credit for it. And a lot of the characters on that show, the movie or documentary, were kind of joking around and being like, "Ooh, who is it? Who is it?" And I don't think that the real creator would have done that, unless maybe they're doing it to take attention off of themselves, because they actually are.
But
yeah, it was interesting. But
I thought it was interesting. But who knows?
One day one day something will come up.
No, I hope it stays forever. Nobody knowing. I think that's part of the allure.
Yeah.
I don't want to face. I don't want to know that.
Fair.
I want it to be anonymous.
I think the CIA is still plausible.
I think that's probably good. I would put that at like even money odds. Yeah. But yeah. Anyway, market continuing to rip higher. Mm-hmm. E-mini's up 35 right now, 58.35. We're basically at all-time highs, or I think we are at all-time highs. We pushed through the top end of where we've been trading here. I think this is all-time highs. NASDAQ up 123. You got the Dow up 400 and the Russell up 17. Everything up between half and 1% here to start the session. It was basically flat on the open, so it's been just a grind higher. Oil had a huge range yesterday. It's having another huge range. I know we talked about that last week of just like how the geopolitical stuff usually is short-lived. Definitely seeing it play out here with oil 73.24 down 30 cents here. It got as low as 71.53 after being as high as 79 and change yesterday. So it's been 10% move to the downside in very, very short order. Volatility futures finally below that 20 handle / VX 1945 here. You've got bonds down 5 ticks. Gold basically unchanged. It's down $1. It had a big move yesterday, and silver up 20 cents here. It also had a huge move yesterday. And on the backs of the documentary, Bitcoin is basically unchanged.
Mm-hmm. Yeah, interesting day today.
Yeah.
I see a question in the YouTube chat about Domino's Pizza not really moving, being closing only. They're in a class action lawsuit, I believe, for potentially
Domino's. For what?
For some kind of investor info that was incorrect or whatever. It's an ongoing thing. So
Is it
I don't know. I would
it's not
guess
halted.
No, but I would guess that it's something related to that.
Yeah. Yeah. If you call the desk, they can help you with that.
Yeah.
So 888-247-1963.
If I was typing it, I would remember that number because we've typed it 1,000 times.
I was literally, because I say the 855-238-2789 or 855-BE-TASTY when we're on the morning show. So verbal, that's my number.
Mm-hmm.
Typing is the 888.
Yeah, it is Wednesday. We got some info for you, looking at the WASD. But if you want to join us on YouTube, we're streaming live there. Just pop over to the Tasty Live channel. You see this video. You can throw in your trade ideas, questions along the right-hand side chat, and we'll get to them shortly. But, yeah, why don't we pop over to the slides, walk through a couple of visuals, and see if there's a trade for us, shall we?
Love it.
Yeah, so WASD comes out Friday, noon Eastern, so 11 Chicago time. Of course, a monthly report by the USDA World Agricultural Supply and Demand Estimates. They give us, production figures, export figures, ending stocks, which is the big one. And, we'll look at how they move to, or what they are for the results, the surveys, the estimates, and kind of look at some fund positioning. First, I want to talk about soybean and corn harvesting season in the U.S. Russia, Black Sea too, of course. And the harvest is ahead of schedule. Soybeans about 47% complete. That's above the 5-year average. Corn harvest is about 30% complete. That's also above the 5-year average. So soybeans harvesting a little ahead of corn, but both are trending in a pretty good direction. That's kept some pressure down on both of the prices. We've seen a good rise. Wheat's been doing better over the past couple months, especially the past month. Wheat now on track for a third monthly gain. I think a few weeks ago, if we had to say one, we said that wheat was going to, be the most bullish. And that's because a lot of things are happening with geopolitical concerns over in the Black Sea. They export Russia, Ukraine. They're two large producers. And they export a lot of wheat, and that's been disrupted. A ship was hit by Russia, I think, like 3 weeks ago. That kind of spooked the market there. But it doesn't appear like they're systematically targeting ships. That was just kind of a one-off event. I think it happened once before, a couple of years ago when the war started. But anyways, these survey results are going to be released on Friday. And let's see how they are relative to expectations. So the top chart is for the world estimates. The bottom is for the U.S. Both are important. Of course, the U.S. estimates are going to impact U.S. prices a little more acutely, since that's what the futures market for these products really represents. But anyways, we'll start talking about the world results at the top, measured in metric tons. Corn, the average estimate versus September, we're looking at a 1 million metric ton decrease. So coming across at 307.3 million metric tons. Soybeans looking unchanged here. So, if we get a big reduction in soybeans, we could expect to see the price go higher since we're not expecting a decrease at all. And then wheat, decrease of 1.3 million metric tons. And some of that is coming from the U.S., some of that is coming from the Black Sea region, Brazil, et cetera. If we look at the U.S., those are measured in millions of bushels for the WASDE report. We're seeing that corn is expected to have a decrease in these ending stocks, about 69 million bushels. Average estimate is calling for 1.9 or about 2 billion bushels. We're also looking for a decrease in soybeans, a decrease in wheat. The numbers themselves aren't exactly what's important. It's what the number prints relative to these expectations. And if they print just a little bit outside, you don't see much move. You can see the 1 day move, some pressure, but usually that normalizes after there. So we're kind of looking for those surprise expectations, for those surprise prints versus expectations.
Are these usually like sort of volatile in terms of like the projections versus what actually comes out? Because you have like, unlike, I don't know, there's so many like variables like weather or transportation and like specific countries. Like it seems much more variable than just like oil production. Like that's like kind of like there's only a handful of things. A lot of it is OPEC. Like there's only like a couple things you really have to worry about. Here there's like kind of a lot of variables. So I would expect this to be sort of volatile.
Yeah. So the grains market, it's pretty complex. You could get in, and there's analysts that, at big banks, you get analysts that they cover one stock. That's it. Every single day they're doing one stock. With the grains traders, that's all they're doing too. They're just looking at grains. There's people that just cover corn. And you really have to spend, 40, 50 hours a week looking at that to really get, a dialed in, super detailed picture. So we're kind of looking at, the overview here and how they move to expectations. But you could spend all day, every day on this stuff and almost just scratch the surface. But like you said, so last October, the WASDE did print a reduction in the corn yield, things like that, and prices the day after moved higher. You could go back to 2022. Again, WASDE, the October, printed a reduction in the corn yield. And, this is more important WASDE for corn and soybeans versus wheat because we're in the harvest right now. We're halfway through the harvest. It's October. The U.S. Corn Belt, U.S. soybean areas have been pretty dry, which is really good for farmers because they could get out there, they could run their tractors, they could run all their equipment all day. They don't have to worry about getting bogged down in mud. They don't have to worry about all that stuff that could push the harvest back. So it's been a good harvest. That's why prices, these increases we've been seeing, have kind of flatlined here. The WASDE, of course, could change that, but a good harvest may cap some upside. That we could possibly see if these prints, go outside of expectations. So you really just have to look at the number when it prints, see what that was versus the survey. You could also look versus what it is versus the high estimate. So you can see if corn, if the WASDE prints the millions of bushels for the ending stocks lower than that 1.8 billion bushels, that's going to push the price up because no analyst was expecting that. Okay. So I like to look at the range. I like to look at the average. And when they come out, just kind of trade according to that and hope that, the historical performance that has informed your trades continues to do that. But of course, like you said, there's 100 things going on in the grains market. There's literally trading firms that go out there themselves and just go through the fields, they measure the moisture in the ground, they do all that kind of crazy stuff, and they run it through their models. We don't have that here, but I am putting together something that will you enter a number and it'll spit out something relative to what we've seen in the past. So like in Excel, I'm trying to average what we've seen the moves 1 day, 3 days a week, based on if it was a miss, a beat, or met expectations.
Ooh, that'll be interesting.
So I'll have that soon. It's there's a lot of problems you run into when doing that, but it's fun to do. But can't spend hours and hours on that each week. It's kind of a side project. But yeah, let's go to the next slide. We'll talk about fund positioning. So last week, the COT reports this every Friday. It's for a look back to Tuesday, I believe. So you pretty much say it's for the previous week they report. So in the last reporting week, speculators across corn, soybeans, and wheat, they all added long exposure. Wheat especially, also soybeans. Corn, we're already net long. So these products that are net short. And we've come off, these soybeans, this orange level, that was a record low net position right there back in July. And we hit record lows back in February and March as well. And prices kept declining after that. So it kind of surprised the market that soybeans kept moving lower after making a historic net position low. But traders are coming back on the long side. So wheat, we've gone really reduced our short exposure there for funds, and these are speculators. So this represents the non-commercial positioning. And yeah, some short covering in wheat, some short covering in soybeans. Corn, not so much. So, what does that tell me there? There's some more room to come out of shorts from the wheat side. There's a little bit to come out of the soybean side. Corn, not so much.
Okay.
So the buying power on the long side, perhaps exhausted in corn.
They've all had a nice bounce in the last 2 weeks or so.
Yeah, definitely. But we could say there's more buying power for funds in soybeans and wheat. So if those soybean WASD numbers print, ending stocks under those expectations, we could get some good upsides. So I think that's where you place your trades. Corn, I'm not so sure about. I think I'm going to have to say what I said a few weeks ago. It was either 3 or 4 weeks ago. I think wheat is the best long to keep going here. You got geopolitical disruptions in the Black Sea. It's not an ahead of average season for the harvesting in the U.S. So wheat, I think, is where you could get more long exposure. Soybeans second. I think corn, you kind of leave it alone for now.
Mm-hmm. What kind of levels do you like on the downside? If I'm looking at some sort of put spread or something like that, do you like
wheat 580?
Okay.
That's kind of where we had the swing low back in June.
Uh-huh.
And then we came back in July, broke that level, and then it support churned resistance on a swing high in late July. Then we sold off, came up in September, hit that level again, some congestion there. So I think there's some, I think 580 is a good spot. I'm not sure what the delta is for that on a 44 day.
Yeah, it's a 36 delta.
Yeah, so that's pretty good.
Wrapped around where I was looking. I was looking at the 560 to 575 range, but I like leaning a little bit directional based on what you've brought to the table for us as always. It's just so timely.
Yeah.
What have you seen from your initial? I know it's not ready for prime time yet, but in terms of miss versus,
it's pretty much what you would expect. The 1 day move after a miss to the downside, prices go up the next day.
Okay.
The correlation breaks down if you go out to 7 days, because of course other things start coming in.
Mm-hmm.
One thing that is interesting is export sales for, where was this chart I had? Export sales for soybeans for the 24-25 marketing year just passed the last year. So we're selling more to overseas markets. China's bought some soybeans, surprisingly, because they were really quiet the first half of the year, and they've come in, they've bought some soybeans. So that pushed us above the last year's levels. However, we're still far below what we saw in 2022, 2021, or even 2022. We're far below that. So the export market is still pretty quiet, but we're coming back. And that could be because maybe China is anticipating a Trump win, and then, the export tariff war goes up. They target soybeans. They don't want to buy soybeans, things like that. I guess you could kind of play into it. So elections coming up, I'd say it's a small factor, but it is a factor. Some volatility, perhaps.
Well, the volatility futures themselves are telling you there's, across the board, there's a little bit of extra angst going into the next 30, 40 days. Is it under 30 days now?
Yeah. November 11. So, what's October? 30, 31 days, right?
Almost.
Yeah. We're right there.
Close.
Yeah, it's close. It's close. So, yeah, I think, and you're seeing that in the bonds too. Bond market volatility is pretty elevated right now. You could look at that through the MOVE index. I think that's Bank of America's thing.
What's your view on the change in the interest rate projections? Like, we were talking about it, was that yesterday or 2 days ago?
Yeah, a couple days ago.
Yeah.
It's flying around.
I mean, have we ever had a period in time where the projection for rates has been so volatile in terms of just their change, 25 basis points, 50, the probabilities of a 50 going from, 70% down to, 16 now? It's
Right,
crazy.
right. Yeah. So, we kind of got, everyone said, the 50 basis point cut, we're going to do another 50. It seems like the Fed, or at least the market thinks the Fed is going to slow down now, but there's a lot of variance in the estimates. You still have people calling for a 50, you have some people calling for no change. So the bond market is having trouble pricing these rate expectations. And that's really what moves the bond market, right? What the Fed is going to do. That's the most acute indicator you can look at for Fed rate hike bets. So I think that's also spilling in why the VIX is staying above 20 and the bonds don't know what to do. But you got the S&P 500 breaking into new highs at the same time. So equity traders, either you get, it seems like they don't care. Either you get a 0, 25, or 50. Equity traders are saying we're going higher no matter what because the Fed is going to keep cutting. Bond markets are less so certain. And, it makes sense that the more high beta things like the NASDAQ is reflecting a little more uncertainty.
Yeah.
Because you got other things. You got materials, I believe, have performed pretty well. Industrials. Healthcare, I think, has done well. Yeah, it's interesting. We're going to get that election in November. We're going to get a unknown Fed decision in November. So I see the VIX staying a little high through the end of the year. At least.
It feels like there's not much certainty to anything you just went through. So an expectation of higher volatility.
And we can't complain about it. Right? Yeah. So
it has been great. This has been perfect. The downside moves haven't been as they haven't stayed as long as
they get scooped up.
They get scooped up really quick. Like a week would be nice. A chop and we have had that for a little bit. I think in the market as a whole. We've stayed between 57 and 58 for 2 weeks, but it feels like the actual down moves are just V bottoms.
Yeah. It's like the Ferris Bueller sentence: life comes at you fast. If you don't stop and look around for a while, you might miss it.
Yeah,
something along those lines. Replace that with sell-offs, and you have your 2024.
Very true.
Because every single sell-off we've seen has been bought up immediately.
Very quick.
In the next couple of days, which is crazy. I'm working in order for the 580, 570 short put spread in ZWZ4, 44 days out for 4.000 credit.
I did the 580, 565, so a little wider.
And you're in?
I'm in. Yeah.
I'm probably going to get filled in the next couple seconds here. It's now, my mid is matching my limit price.
Get a little bit of a down tick and you'd be good.
Yeah.
Very nice.
And that's in November. So, yeah, I like it. Sweet.
What are you thinking on oil, Thomas? Because we had it. We took a little heat.
Yeah. A couple days of a little more upside than expected there. But yeah, like we said, when the geopolitical premium comes out of oil, it comes fast.
Yeah.
And we've seen we've had a really sharp move to the upside and really sharp move to the downside over the past week. So, I mean, it's definitely a volatile oil market. You know, you got people wondering, is Israel going to strike Iran's oil facilities? That would take off 3.4 million barrels per day. That's about 4% of global production. But at the same time, you got OPEC. They have spare capacity where they could step in and fill that gap right away. And, you know, prices would go higher on that attack. So OPEC would want to release some of their spare capacity. You see oil prices going up to 80, 85. You're going to want to take advantage of those prices and get that. So on the other hand, you got China disappointing now. This is leading, you know, part of this sell-off.
Oh, is just the China stocks going down, you think, or just?
Yeah, well, I mean, the same reason that's pushing China stocks down. The policymakers, the property planner commissioner, whatever it's called over there, they came out. They pretty much said nothing when people were expecting them to say we're going to do this, X, Y, and Z. So you got that. API yesterday reported like a 10 million barrel stock increase. Expectations were for around 2 million barrel increase. That's not surprising because the hurricanes in the Gulf have been disrupting these shipping channels. So our exports haven't been able to get out as much as they have. So you get less exports, you get more stocks building. And, you know, demand actually, the EIA released their STO, the short-term energy outlook. I believe it was yesterday or Monday, and they reduced their demand growth forecast for 2025. So that's reflecting along the lines with OPEC, that's reflecting along the lines with what the IEA has said, the International Energy Agency. And I hate how the EIA and the IEA are both the same acronyms with just two letter switch because you always get it like confused when you talk about it. But yeah, it's not looking good or as good as it was for demand. China needs to step back into the market and do something if we want to see prices go back up towards 80, in my opinion.
And another completely uncertain trading space, as you can see in the price action. I also just pulled up the volatility index. I misspoke on the when I was on the show earlier today. It's actually OVX : CGI, not CGI : OVX. So I messed that up. But here's what is the VIX style implied volatility for the oil markets. Even with this move, you're still seeing very, very high implied volatility. So, you know, going to what Thomas is talking about Israel striking oil fields, OPEC increasing, the big swings that we could potentially see, you can definitely get paid for taking some volatility risk here if you want to be, you know, short an iron condor or strangle or something like that. I'm already in one, so I'm taking a little bit of heat on the upside, but I think that's a really interesting thing to kind of put on right now with oil volatility at highs here.
Yeah. The daily moves have been crazy.
Yeah.
But yeah, I closed out of my short for a scratch this morning.
Yeah,
that felt good.
More intestinal fortitude than I did.
Hold.
I got squeezed out yesterday. Not squeezed, but yeah. I closed it for a couple $100 loser.
It's all right.
You can't win them all.
True. Glorious. Yes. Well, we'll see if we get filled. Nick's in at 585.65 or 565. Yeah, 585.65. I'm working at 585.70, and I will not budge on my price.
You'll be in there though when this WASD report comes out, right?
Yes. Yeah.
44 days though, so you'll have time.
Correct. Yep.
Mike will be reading the WASD report.
Yeah, I will.
I'm sure.
That's exactly what I'm doing.
Yes. Yeah. That'll help get you like to sleep, I think.
Potentially.
I asked him yesterday, is he going to raw dog the flight?
Oh.
Can't do that. That's too long of a flight.
How long
I think
is
I
the
would lose
flight?
my mind. 14 hours, something like that. Imagine raw dogging a 14-hour flight, just staring at the headrest in front of you.
No, I can't do that. Yeah. I can't do it.
I get lost in my thoughts.
Flight like that.
Yeah.
I need constant entertainment.
Yeah. I think I'm going to download Jujutsu Kaisen, the anime. which is very popular right now in Japan. I think that would be the best move. Then I'm fresh. I got the fresh characters in my mind. I'm seeing,
You're trying to really immerse yourself in the culture before you get there. You'll
commitment.
land and
Commitment.
Yeah,
I like it.
You'll land and just be fully assimilated into their.
Correct.
Yeah.
He's been on the Duolingo or in the
The Duolingo.
Yeah, Duolingo.
Do you have something a phrase that you can give us?
Mike des dojo yoroshiku. I'm Mike. Nice to meet you.
Wow.
You like that?
That's impressive.
You like that?
That's impressive.
That's about it. That's all I got.
That was good.
Thank you.
You know, you could just stay there. You don't have to come back.
Yeah.
You can become a merchant in a market, arbitrage some goods.
Yeah.
Don't give them that idea.
Like
it's
Miami or
impossible.
Tokyo Vice, the show. Just move there, start working for the newspaper, get involved with the Yakuza.
Yeah.
Never come back.
Yes.
Could be something. Could be something there. All right. Popping over the YouTube chat now. Not filled on that wheat order yet, but I think I will be filled in the next hour or so. James Bond, happy hump day. Thoughts on natural gas with the impending storm, crazy storm. Stay safe if you're in that area.
Yes.
How come we're not seeing an uptick in natural gas with the upcoming storm of the century?
So much energy consumption is offline across the Carolinas, across Georgia. Yeah, another hurricane coming. So Florida energy consumption. So energy consumption is demand, right? You're taking demand off the grid. All these storms knock millions and millions of homes off the grid, and you go lower. It's not like it's not surprising to see this kind of move when you have major storms taking so many homes off the grid. You also have those exports that won't be able to get out. That's going to help build product. But after all this clears, I think it could be a good opportunity to get long. I'm trying to look at the levels here.
Yeah.
We've already broken through some that I would have said are good places to get long. So I think you really take this down to maybe 250, 255.
Okay.
Before you look at getting long.
Because seasonally, this is the time where
seasonally, we're going to start. The futures curve, at least, is showing us that we should go up. And of course, winter brings on heating demand. Stocks draw in the winter. And the stock build through the summer was okay. We started high. We started above the 5-year average, the 1-year average, but we didn't build as much as we could have. I think we have some upside for natural gas once these storms move out.
Are there any stock-specific companies like you do an XOM of natty gas type thing?
Yeah, there's a few.
They're publicly traded.
You could do Southwest Energy, even Exxon, EQT.
Okay. Let's see, is there a looking KMI? Kinder Morgan?
Yeah, that's a good one too.
Okay. All right, these will be on the radar once the storm passes, which is supposed to hit today. No?
Yeah, tonight. Yeah.
Crazy.
Yeah, it's say it's a big one.
What is it? The fourth strongest ever recorded?
I believe so. Yeah.
Something like that. Insane. With core PPI tomorrow, how would you play SPX, or is there nothing to do?
What do you think, Thomas?
Producer prices. I mean, of course, if you get higher inflation, the Fed's looking at the labor market more, right? They inflation has come down enough to where it's in their target or within their target range. I think you'd have to have a big upside surprise to really affect these Fed bets. I think it's interesting. You keep your eye on it. but I'm not trading off of it. So
Yeah. I would think you'd see some volatility come out at the end of the week. I'm assuming they're all the numbers are in line, which they usually are. So I think that's the play. Short some vol.
Yeah, we've done like iron condors before, calendars, stuff like that. Downside calendar is interesting.
In what, SPX?
SPX. So is, I guess, the upside too. But yeah, the downside calendar, like buying the 5710 put 5 days out, selling the 5710 2 days out, you're collecting 960 against the 1450 debit. So a huge chunk of the value there. And if you get a downside move, that could be a really nice trade. But same thing with the upside, like the 5860 call 5 days out, 730, selling the 5860 2 days out, 380. So both of those trades, you're picking up over 50% of the value of that long option. Double calendar, if you did both of those, it's $8 in SPX.
Do XSP if you want to
XSP if you want to be smaller.
Small. Yeah.
But I like those trades because you're inventorying the weekend delta and premium, and you're selling the CPI and PPI for Thursday and Friday. And you're collecting a lot if you do the 2 day relative to the 1 day. And if there's no surprise with the PPI, you would assume that the CPI would be in line as well. So maybe you get a contraction tomorrow. You don't have to wait for Friday. But
You ready
I like
to do
those a lot.
a 0 day trade while you're in flight?
No.
Just wake up with a cash, settlement.
Mm-hmm. Well, that's what's going to be crazy. What's crazy is the football games on Sunday are all when we're sleeping. So we're going to wake up and be like, oh, this happened, X, Y, and Z happened. We're just going to be sleeping through it. Except for the Bears game. The Bears game is in London, 8 a.m. Central. So that'll go on at, I think, 10:30 or 10:45 at night.
Okay.
On Sunday night.
Nice.
So you will be sick. So
you got to find a bar that'll have...
Bears bar in Japan.
there has to be some. Like you get those American bars that are, playing sports.
True.
Yeah.
Walk down some stairs, walk through like a dripping,
yes,
brick
it's
alley.
In a basement somewhere.
Yeah. Neon sign in the corner, guy smoking outside.
Yes.
Yeah. Anything's possible in Japan. But yeah, that's kind of what we normally do with SPX trades, but decent implied volatility.
Mm-hmm.
Let's see. Do we talk about Bitcoin? Yes. If you have a Bitcoin question, let us know. 2 days ago, you said trading ELF was risky. Can you elaborate further on why? Is it too high IV? If so, what's the highest IV you would be comfortable trading?
I don't think that was the talk. I think we were looking at like naked puts or something here.
Yeah, I think the question was, I think our answer was we wouldn't sell a put into a stock that just went from 200 to 100 in a month.
You're trying to get some long delta, like maybe you do a call diagonal or put spread or something like that.
Yeah. So like anytime I see a move, like a 1 week move that is $40 to the downside, and then you look at the implied volatility going forward, where is the next $40 move in ELF? It's 200 days out. So like that's a big disconnect for me. I'm not taking undefined risk in a stock that is well exceeding the implied volatility over the same cycle it just realized. So like I have no problem if you want to get bullish ELF, but I'm not selling a put here and taking all that risk in a stock that just got cut in half. Like I would still rather, like I'll do it, but I would still rather do defined risk. And you can do it in a cheap way, like buying a December at the money call, selling a November out of the money call. Like you can do a 110, 125 for $700 and get paid the same max profit as a short put at 100 for November. So like that, I think that was the point.
I think it was that and just general liquidity. It's not, the options don't trade all that much. I mean, when you look at volume, open interest is in the handful of contracts. So maybe that's something that we touched on as well of just, I've never traded this myself. So, for me, the first thing, if I'm going to trade something new is I look for, obviously you want premium and, good volatility, which just has high volatility, but you want to see liquidity, and it doesn't look like this has all that much. 10, 20 cents wide, not awful, but it's not something that is heavily traded, at least on the option side.
But yeah, defined risk in there if we're going to do it.
Yeah.
And they have earnings coming up. November 8th cycles where they're pricing it in.
Yeah, on the 11th.
Looking for trading strategies for bullish NVIDIA in this IV environment we're in.
I just did a Iron Condor in the Johnny Trader account. Wrapped around where I am here, I think I did, let's see, 120, I think. Well, yeah, 120, 110 on the downside, 145, 155 on the call side, 37 days out. It looks like earnings are after the November monthly, which is nice. You can see there's a little extra volatility pumped into the 22nd, which would and into December. So it tells you that there's probably an earnings event that is within one of those two and not in this November monthly. So that's also positive. You can go as wide as you feel comfortable with. I think, NVIDIA certainly warrants a short premium position, whether you do a strangle or an Iron Condor, 5 or 10, 20 points wide if you want to. Definitely on the board. I have one in this account too. Let's see. I'm up 33 cents. 115, 105, 148, 158.
Like it.
Yeah.
Yeah, I think the IV being higher in the further dated cycles is just because earnings are there. That's the only reason. But I do like the fact that November is out of the earnings cycle. So like if you bought December for like a call diagonal spread or a call crab trade, if you bought December and you sold November monthly, you have the ability to roll into the next week and pick up a ton of premium, even if NVIDIA sells off or chops around here. You could do like a 130, 150 for $11, or do a crab trade for cheaper, something like that. But I like the out of being able to roll into the next weekly cycle, which has the earnings announcement. And you can see the value of the 150 in the 44-day relative to the 37-day is twice as much. So, and you get the full decay of the 37-day, and then you roll into the earnings cycle. So I like that idea a lot for bullish trade. Defined risk, taking advantage of IV and the earnings announcement. Something like that. Do we have any trades on Tesla?
I have 2.
And are we bearish on Tesla going into tomorrow's robo-taxi event?
I have basically no delta here. So I have an Iron Condor in November. I'm short the 200, 185 put spread, the 310, 325 call spread. So I'm 15 points wide on both sides. That one, it's coming about 70 cents actually. So it's coming a pretty decent amount in just under a week here. And then I also have the butterfly in the 9-day expiration. That one, I had a net cost of $1. Remember, we bought in the risk and then sold that wide Iron Condor a little further out in time. That's what I did here. So I guess I sort of have an upside play because this expires in 9 days, but inside up would be perfect. Yeah. So that's how I'm playing it. But vol is certainly high. 80 IV rank. We put in the cherry picks yesterday. Call skew very much in play here. Whether that keeps up after the event or not, I'm not sure, but people are definitely playing the upside.
Yeah.
Or at least the cost to play the upside is more.
Yeah. And this is a kind of a mini earnings event. So like you can sell the 2-day by November and you'll get a lot of premium because of this event. And if it goes wrong, you could then roll into the October 25th cycle, which is the earnings announcement. So you have a lot of outs here, even if you're directionally wrong, to just reduce basis and have another shot at a binary event escape route. Do you think they're going to open the Tesla show with a flying taxi?
I hope.
I hope
That'd
too.
be pretty dope.
That would be sick.
Yeah.
But I don't know. I don't see it happening.
Only a few years away.
Yeah, that is true. But if they do, if they open the show with Elon in a flying taxi, the stock price will double
Where
overnight.
are you getting? Is this just something that like is infecting your brain?
Yes.
That this is like going to happen?
Infection is a great word for it.
Yeah, I'm like, what do you?
I'm infected by the stock market. But if that does happen or did happen, you gotta imagine it would go straight to the moon.
You would think so, but I think the delta on that is
pretty low.
Is a zero.
Not zero.
Not zero. Anything's
This is
possible.
a probability world.
Yes.
Anything that could happen has happened in an alternate universe.
0.01.
Yeah. But yeah, like I do, regardless of whether you're bullish or bearish, I like the setup of going to December or November, selling the 2-day. If you're wrong, roll it into the 16-day. And you can, like, the premium difference is still big, like very big. 260. Yeah, the 260 2-day premium, just the call side, is 250. The 16-day is $10. So if you set up a diagonal spread or a crab trade or whatever, and you're wrong, you can roll into that cycle and pick up another $2 or $3 at least.
Hey, play into vol.
Yeah, exactly.
That's what
we're doing.
The big,
yeah,
point is.
How about a Apple Iron Condor or Strangle?
I have one on. I am in the November expiration 210, 200, 240, 250 for $3.40. It's currently marked at $3.13. Apple has had some very big moves day to day.
Those big green bars. I remember we were in Scotland and we were like, "Oh, Apple's up $10," and then the next day, "Oh, Apple's up another $10." I'm like, what are you talking about?" There you have it.
Yeah, the Apple 200s.
Mm-hmm.
Yes, that was enjoyable.
Yeah. Let's see. But yeah, Iron Condor is tough for me because they have earnings at the end of October. So neutral strategy where you're banking on IV collapse that's not going to really happen until after earnings, and theta decay that's going to be slowed until earnings. I'd rather take a directional shot or wait till earnings and then do the Iron Condor or Strangle.
Everything is going to have earnings though coming up, so you gotta keep that in mind too.
What earnings are we most excited about this season?
Ooh, it's a great question. I mean, I think it's the same big dogs that we trade every single time. NVIDIA, Apple, Tesla, Microsoft. You know, those are the ones that are the most liquid. They typically have really, high implied volatility relative to itself. I don't know. I don't get outside my realm of stocks all that often.
Yeah.
You get one-offs here and there, but I'm not, there's no random stock that I think is, more tradable now.
What do you think?
Well, we get some banks this Friday, right?
Yeah.
Yes.
Started off, yeah. I think, that's always interesting to see the first reporting how the banks do. Especially as they cut interest rates now. I'm trying to see what their guidance will be on, like overnight interest and stuff like that versus are they expecting IPOs to pick up, all those underwriting fees, how the Goldman's bond market desk does, all that stuff.
They cut those overnight rates as soon as possible.
Yeah.
There's no lag there. They as soon as the rates come out, you get that email from Chase.
We're sorry to inform you.
We're sorry to inform you. You just lost 50 basis points.
Yeah. I remember seeing some. I think it was a bank executive. I think it was J.P. Morgan. I think it was Chase. But they were saying like you should not expect much from the banks with the cuts because revenue is going to come down. Blah blah blah. I don't remember exactly what he said, but it was definitely a bearish statement. So we'll see. For me, I think the most interesting ones in the big name tech stocks are Microsoft and Amazon, because Microsoft is not near its highs. It's sold off pretty aggressively. It's kind of simmering at the bottom of this range here. And Amazon, I think, is interesting because they had earnings and they absolutely tanked. They went from 190 to 150 during that Japanese yen unwind. But even without that, they went from 190 to 160 the next day after a pretty bad earnings report. So they have filled the gap almost. But I think that's an interesting one. You might see a little implied volatility priced into there because of that move. But we'll review all of them as we normally do. But those are the two that stand out to me right now. What's our view on Carvana? How would you manage a 10-18 short call spread? Depends on what the strikes are.
Yeah,
but the only management we do is we just roll it out in time if it's out of the money.
Look at this. 20 to 200, 10x.
Yeah, car vending machine. This is the world we live in. I don't know what to tell you.
I don't know.
People don't want to call on phones. People don't want to talk to salespeople. As amazing as you were as a salesman, people just don't want to do it anymore. They'd rather go to a car vending machine and click a button and get their car.
Nah. I want to talk to me. Grossinger Autoplex.
Yeah. Top salesman. Summer of
05.
I don't know. What's the date?
2010.
There you go.
2011.
Okay. That works.
Yeah. Or no, it was probably earlier than that.
You ever go back
2009.
and like dab up your old employees?
They sold it.
Oof.
But it's still there, so it's just another. It's a different company now.
They cashed out.
Yeah. Yeah.
After you left, they were like, we can't survive without.
Yeah, they were like,
gotta
that's
cash
as
out.
good as it gets, you know.
But yeah, shorting a call spread or any spread, the only thing we can do is just roll it out in time before it goes in the money for small credit. That's pretty much it.
175, 185, 1018. Yeah, so you're kind of stuck here. I mean, this is you have $1-ish in risk left over the next 9 days. Ideally, you got to move back to 180-ish or 185, and you might be able to roll this out, especially if you sell a put spread against it, make it into like an iron condor type position. But yeah, you were coming into this week, you were 50-50 shot. You didn't, the coin was not on, did not land on your choice, unfortunately, this week.
Yeah. Rapid fire. Delta Airlines sitting at all-time highs. Earnings tomorrow morning. What's the play? $2 expected move on a $50 stock. That's a no for me, dog. It's just too low IV for anything to really like play out. Like you could get directional exposure really cheap in here because of that. But
I have some short delta in UAL, so I'll hope you get a proxy move on that.
But $2, like I'm looking for a 10% expected move relative to the stock price. So if this was a $5 expected move, you'd have tons of premium. You could do whatever you want, but this is really low. So I would personally stay out of it. AMD 160 call, November 8th with 20K open interest. What does it mean? I think is the question.
What strike?
November 8th, 160 call. 20K open interest. Yeah, I mean, there's nothing we can really trade on this. It's interesting to see, but you don't know what they have. Maybe they have thousands of shares and they sold the call. Maybe they bought the call. I mean,
that's not a significant amount in AMD. You go to the monthly expiration, and every strike has 10 to 20,000 contracts. Even in the October expiration, those are the sort of things that are hard to kind of, I don't.
back. It is Friday, October 18th, 2024. This is Futures Power Hour, sponsored by CME Group. I'm your host, Chris Vecchio. He's Ilya Spivak, joining us for the ride today as we look at these futures market with stocks trending higher as we reach the halfway point of this trading session. Ilya, big moves today amid exceedingly small volume in the equity markets. Last time I checked a few minutes ago, the S&P barely had cleared 500,000 contracts traded. That's about half of what we consider to be a healthy volume day at this point in time.
Yeah, it's kind of a paint drying, grass growing kind of day here. And not surprisingly, that's showing a lot of corrective kind of price action around equities, around the dollar in a few spots, in bonds, one might even say. So it looks like the markets are kind of slowly, quietly drifting into the weekend. We had the one little bit of solid data for the U.S. yesterday. I don't mean solid in that good. I mean solid in that it was released. It was a quiet week for U.S. economic data all week. And the markets don't seem to have a catalyst here.
They don't seem to have a catalyst here. And immediately when we look to the calendar for Monday, it's not going to be one with many catalysts either. We can go right to the slides here on this Friday for Futures Power Hour. Ilya, let's talk about this macro calendar next week, because while there are items of interest, it is decidedly quiet still. On Tuesday, two speeches from ECB President Lagarde. She'll also be speaking later on Wednesday. We have a 20-year bond auction. There's a Bank of Canada rate decision. Other than that, this is a quiet week that's coming up as we wrap up the last full week of October.
Yeah, I mean, as you mentioned, we have all kinds of Lagarde speechifying throughout the week. We have the BOC. The thing that really captures my attention is the set of updated PMI numbers on Thursday. I think that's really where I'm looking most closely, because that is the most timely version of a check on the global business cycle that we get in the data cycle. GDP numbers obviously are the sort of top of the benchmark pyramid in terms of where growth is, but those things are quarterly and ridiculously lagged. And so the PMIs are something I watch very, very closely to get a sense of where we are in the business cycle. And when you look there, you're going to get, I think, another sense that this divergence in global economics continues, where the U.S. is doing fine and everywhere else is doing decidedly not. And so that'll be interesting. Other than the BOC rate decision and those PMIs on Thursday, there's really not a whole lot here to do anything with. We are going to have the IMF and World Bank annual meetings, which I suppose will sprinkle some forecast updates throughout the week, but those things are rarely market moving and more academic input.
Certainly the macro calendar is quiet. Next week, there's going to be a greater spate of earnings, of course, a Tesla, a Coca-Cola on Wednesday, Amazon Thursday, Friday quieter, something like, Colgate-Palmolive is probably the big one on the board. So earnings perhaps have the bigger sway. There's a lot of Fed speeches coming up, of course. Monday's calendar itself is really defined only by two Fed speeches. There's no significant data releases, no Treasury auctions of note, no events overseas of note. So Ilya, with the remaining time we have here on Futures Power Hour, we're going to just talk about these charts, because it's a decidedly mixed day here for the stock markets. The S&P and the NASDAQ are churning higher. Tech is up slightly. Semis were basically flat. When you look across the board, even the banks are doing well still. The Russell was slightly weaker. It's been bobbing back and forth. We now find it underwater by 0.22%. The Dow Jones is flat on the day, S&P up by 0.39%, and your NASDAQ here, the leader, up by 0.68%. Ilya, Wednesday we had a long lower wick. Yesterday we had a long upper wick. Today we're having an inside day. For all intents and purposes, while this breakout from the trend lines of the July and September swing highs is still in play, it's very much a mixed market still. The consolidation may have just shifted to a higher plateau, and that may be between 20,200 and, say, 20,750. We need a little bit more evidence, even if momentum is turning positive, to think that this thing has legs yet still. Not in the clear.
No, not in the clear. And a couple things here. At the daily time frame, what you see is a massive bearish engulfing candle that has not been invalidated, and any attempt to even approach its high yesterday, things get slammed back down. That's not good. That's not a good sign. And if you zoom into, let's say, an 8-hour or a 4-hour chart, you start to see the outlines of what could be a head and shoulders pattern. Now, it's a little bit early days yet, but you'll notice where we're testing now is the top of yesterday's range, where we got rejected yesterday. This is exactly the spot. You hold here, and if you look at where the August high was, it's a real auspicious place because you're getting rejected there over and over and over again. You tried to pop out above it. That failed. Now you're retesting it again and carving out a kind of head and shoulders setup, maybe. It's not confirmed until it's confirmed. And the neckline is where you have that gray line across the screen, give or take, about 2250, something like that. You get a close below that, and now you have a tradable topping signal.
There's work to be done, as it were. This is a symmetrical triangle, perhaps, that's forming in recent sessions, and I don't think anyone's going to be surprised given my bias and likewise my positioning still, where I'm long the 22,000 NASDAQ calls, that I expect this to continue to move to the upside. But it is an uptrend. It is a triangle, perhaps, that's coming together here. Symmetrical triangles, bottom left to top right, typically continuation about 70% of the time. Lower term time frames are less reliable than larger time frames. Keep that in your pocket as well. But I think the levels matter most if we start to clear out that big engulfing bar we had here on the 15th on the 4 and 8 hours. That's ultimately a signal that we would be looking for a breakout to the upside here in the NASDAQ. Whereas in the S&P, it's already doing so to a certain extent. We are sitting at what would be the highest close or second highest close we've seen on the 8-hour time frame ever. A little bit further from here, we're looking at the highest daily close ever, which is never a bad thing to notch on a Friday. It is a day, though, where if you just think about the terms, vol is in. It's a 26.55 a yard, lower than the 30s we were looking at yesterday. And the volume here, 566K contracts traded. Do we fade boring markets that are seeing volatility sucked out of them? No.
We don't.
We don't, right? And it's a Friday. Adds another layer to it. So right now, heading into the end of the session, I mean, the onus is on the bulls to drop the ball, but expecting that there's going to be some significant shift here, trying to, as I like to say, arbitrarily and capriciously picking a top. In ES, maybe fading the highs yesterday was a lucky pick, but in terms of a reliable turn, we're closed above the 1-week moving average every day since October 8th, and we've yet to place a close below there. So for now, as a bear, you kind of have to just be patient, it feels, until you get a legitimate technical reason, like we saw in bonds, which, you know, worked out for one day, then not as of yesterday.
Then not.
But you have to look for a break in the look for a break in the trend first before you start taking stabs on that side. Otherwise, for me, this is the exact price action that I want to see unfold, that I'm hoping to see unfold. Why is that? Because those S&P 500 6K calls in the ESH5 contract are singing my name right now. So I will be staying long into the weekend. There's plenty of time to expiry here. There's still 74 days to expiration. So buying the breakout on September 19th, looking for a move up to 6,000. It's been a patient trade so far, but we gave ourselves enough time to work through it. And there's no reason to let go of it right now.
No, there's no reason to let go. You do see some worrying technical signals under this level. 6,000 is, of course, a level with the kind of magnetism where you can imagine the markets wanting to get there for sporting reasons. I am forever reminded of the euro trying to get to 160 in 2008, where you get a real sense at the time that the top is at 150, but the market just absolutely has to go to 160 because it's the kind of thing that has all kinds of speculative fervor around it. The euro gets there, nudges it for 2 days, can't close a single day above it, and over the course of the next several months capitulates to 118. So it's one of those things where sometimes certain levels just have a level of attraction because there's all kinds of hype around them. So That tends to be a place where sell orders are clustered. It tends to be a place of psychological significance. You look at this and you say, okay, well, so you have a bearish dark cloud cover candlestick. You've not invalidated it. You're at the high. Do you go long here? If you're already holding long, you don't get out. If you are initiating, well, now your nose up against resistance, and you just showed how rejection there works yesterday. So no, you wait. You let yourself see a clean breakout, and then you look at the momentum indicators, be it stochastics or RSI or anything, any oscillator, you name it, and you see divergence. Now, that can be because we're drifting sideways, and markets, as we've talked about quite a lot, can correct in terms of time as well as in terms of price. You can work down momentum, overshoot just with sideways drift. And maybe that's what we're looking at here. But that you see negative RSI divergence, negative stochastic divergence, negative MACD histogram divergence, pick your poison, that you're seeing these things tells you momentum is ebbing. It's either ebbing before it reaccelerates or it's ebbing before a turn. There's no knowing what that is yet. All you know is you have a bearish candlestick setup that you have it overturned and momentum is fading. Either buyers will reassert or this is a top. At this point, for this to be actionable, I'd say you need a clear cut break the near-term range one way or another. And for the bears, I would say it's the top of that gray box there. That's your kill.
58.30 or so. Yeah.
That's your kill.
Well, if
you get under that, good night.
Yeah, if you get under there, then you could say this is a false breakout. You're returning into a consolidation that held the price contained for about 3 weeks. And then my heuristic always, if you return to a consolidation, you look for a move to the other side. Obviously, in the NASDAQ, that's been going two ways this week, where if you got out long and then got short because we re-entered the previous consolidation, it hasn't been friendly here. But that's why perhaps the range.
I can attest to it personally.
Right?
I'm still sitting in it, waiting for it to make up its mind.
It's a little bit of weakness here today in the Russell. It is an inside day, even if it's a doji or kind of looks like a shooting star, but not exactly. So you wouldn't call it that. Either way, though, ever since the breakout here on the 11th, when we cleared out the former swing high, it has been a price moving up. And likewise, where are we settling up here? We're settling right around the former swing high, but certainly above the prior closing highs. And so this puts us right around
in that same range,
same range as the July closing highs. We're breaking the downtrend a little bit. It may be a brief pause, but the small caps are looking exceedingly well on a technical basis. This is a chart where we may be now into an ascending triangle of sorts and getting ready for a much bigger breakout. And when we think about the sector by sector basis here, laying this into the futures, yes, it's not a great day for banks now. They're down around 1%, but it's been a pretty good week. They've made a lot of progress. If banks are doing well, and KRE in particular is doing well, then the Russell itself is likely to be doing better. XLF is up by 0.04% now, so the banks are making a comeback over the session. And broadly speaking, if you're thinking about the Russell and the health of the economy, home builders tend to track the health of the economy quite closely. This would be a new closing high for the year for the home builders. And in fact, if we look at the weekly time frame and go back 20 years, this would be a new all-time closing high for home builders. So the Russell chart, while not looking as impressive as the S&P in recent days or the NASDAQ, especially today, it's difficult when you look at a sector by sector basis and think that there's imminent doom right now on the horizon. So as someone who is flirting with and thinking and really racking his brain about the Russell Iron Condor, the collapse of volatility recently, it's now under 40 IVR. The collapse of volatility across equity markets coupled with the breakout terms makes holding a directionally neutral position rather unappealing. I tried getting out yesterday and couldn't get out. Today, it's actually a little bit of a better trade for me because the price is coming in. I am still trying to get out of it. And while I might eat some crow at some point in time, maybe we get a bigger setback here, it's just not the trade I would put on at these levels if I were deploying fresh capital. So why hold the bag still any longer.
Yeah, I mean, you look at this and you say, okay, horizontal levels being less subjective than sloped ones, you're at the top of the range in the Russell, where you've been held up now multiple times, going back to, let's call it mid-July. So 2,300 is essentially your line in the sand. That's the July 17th high. If you want to look sort of a little bit further out, the July 31st high is 2,320. So those are your barriers. You are, as you are in the NASDAQ, as you are in the S&P, though, of course, the structure here is very different overall, but the near-term kind of punchline is basically the same. You are literally pressing your nose up against critical resistance, and in the Russell, it's a much heftier resistance. In the case of the NASDAQ, it's a few days, a week, maybe a little bit longer. In the case of the S&P, it's only a couple days. In the case of the Russell here, you're pressing up against resistance that's held for the better part of 3-4 months. And so this is one of those situations where you go, okay, well, do the thing. Either break or turn, but there's not confirmation that we're going to turn, and there's not confirmation that we're going to break at the moment. So what is there to do if you don't have a position on at this point? Not much. I mean, it makes sense to see KRE having done relatively well earlier in the week and take a step back here into the end of the week. Just look at the bonds, and you immediately see like, oh, here we go, a little yield relief for the troubled regional banks in your life. And then you see those yields come back up, and you go, okay, KRE's not going to like that. And so you get this kind of churn where it's like, well, are we reflating? Because if we're reflating, that means higher rates. That means all of these portfolios that these regional banks hold, think SVB, think Signature, think that whole mess, they're still sitting on all of these things. And the question still remains whether one of them or two of them or many of them are going to fold up in a less than quiet way. I mean, I think there is a creeping likelihood that this is sort of like a savings and loan type of crisis where you don't necessarily get a crescendo explosion. What you get is a slow, quiet bleeding out of the weak hands over a long period of time. And that's not necessarily anything that should concern broader markets in an explosive way per se. But we don't know this. And we do see KRE continue to respond when yields do X or yields do Y. Mm-hmm. So the markets are aware of that this is kind of this hovering thing in the background. So we'll see if some of the subcomponents shake that off. But for the Russell itself, it's got to make a move here for me to say, okay, yes, it's either attractive risk reward this way or that way. At this point, it's kind of no man's land.
KRE coming back in a little bit today. When you think about the Russell composition, financials as of the end of last year were the largest component of the Russell at 16.86%. Healthcare, 15.43. Excuse me, industrials actually bumped up. My mistake. Industrials, 17.07%. So between the industrials and the banks, you're looking at a day where, quite frankly, net, it's not exactly strength out of the industrials. Banks are a little bit weaker. Right. Translation to a slightly softer Russell when those are the performances of the two big components there. Otherwise, look, it's only down by 0.19%. The banks did break out. Industrials are closing pretty much this week will be an all-time weekly closing high for industrials. The table is set right now for small caps, perhaps to play catch up. AI fears this week define perhaps some of the Russell outperformance, right? You have a day where ASML earnings look terrible. So the semis get hit, tech gets hit, but the Russell is able to rally. The Russell didn't give back its gains that it's put on the board this week. It's faded a little bit, but the NASDAQ is actually trying to take back the losses from yesterday, at least. The high yesterday was 20,594. We're only 84 points off that right now. That's not a significant move by any stretch of the imagination in NASDAQ point terms. So the mere fact that we've seen some sector rotation and the tide is net higher than where the Russell started last week, or excuse me, ended last week, where the NASDAQ ended last week, all good. Volatility coming in, all good. If you're a bull right now, yes, Israel-Iran fears. 18.03 on the VIX. I don't necessarily think that we're expecting anything really to pop off in a way that escalates tensions. Volatility in the term structure as well, Ilya, across the board is down. VXX is off by 44 cents. VXZ off by 33 cents. And now under 18. So a really big vol flush here at the end of the week. I suppose the question is, do we trust it? Given the fact the event is the presidential election, and that's not going to be resolved anytime soon.
No, it's not. I mean, it's easy to start myth making here and say, at least on the geopolitics side of things, you got a little bit of a nudge in the right direction. So Israel killed Yahya Sinwar, who was the head of Hamas in Gaza and the architect of the October 7th attacks. And then Netanyahu gave a speech that said, in an interesting kind of wink and a nod, that the war is not over, but this is the beginning of the end. Obviously, hostages are still being held, so he's not going to declare anything over, but it does suggest that there is an effort to define what victory looks like in terms of this latest win for Israel, and to call it essentially and say, okay, let's start to wrap this thing up. Maybe that's part of this equation. Crude oil is down today, but gold is not. So it's decidedly so. In fact, I'm kind of kicking myself for not trusting the breakout. So you look at this and you say, okay, well, hold on a minute now. Yes, that could be a narrative, but also there's a presidential election here and nothing has ended and we don't really know for sure. We're just looking at kind of isolated points connecting some dots, but others are very, very pointedly not in the same sort of narrative, not in agreement. So it's a bit early yet. I wouldn't hang my hat on saying we're in the clear here. If we were, what a great thing to have seen a crescendo in stocks. If there was really the all clear here and this vol suck really meant something, as opposed to just a light volume day and a Friday and no news, I would expect to see more conviction across assets in the same direction, and that's just not here.
I would be a lot more impressed if volume was higher today with this vol depleting.
Yes.
The fact that it's very light volume to me says vol may be coming off the board simply because people aren't trading.
Yeah.
You know, who's out there buying protection, right? If you know, one of my theses has been we are seeing vol bid up because people don't want to give up their asset base heading into the election. You know, if you look at it from a purely fiscal stance, you're either going to get more spending or a lot more spending, right? Kamala is about $3 trillion in new debts over the next decade.
More tax cuts or a lot more tax cuts.
Right. So and then Trump's maybe 11 trillion. So you're going to get more spending or a lot more spending either way. So definitely are going to stick around. You could argue that, you know, it's interesting. Trump with the higher deficits probably means higher structural inflation, but he's also a real estate guy. So he's going to lean on the Fed for lower rates, which is an interesting combination. Whereas Harris, without the higher structural deficits and not leaning on the Fed, produces probably the same level of interest rates. If you like really game it all out, the effects balance each other out perhaps over time. So I don't think stocks necessarily cares what I'm saying, but what people want to do is just in case they've been buying put protection. And so that's been bidding up volatility. Today, volatility is not being bid up. People have already done their hedging, so to speak. We're going into a weekend where news flow otherwise is fairly staid, and stocks don't really have anything to do. Bonds, on the other hand, are seeing some relief. And the question is from where or why? Because that may inform how we may want to proceed moving forward. It's been a very choppy week for bonds where it looked like we were potentially bottoming. We've struggled to retake
me this week.
We've struggled to retake the uptrend from the April, May, July swing lows here. We are now back under the 1 week moving average. It's not quite the right place for it, but if it were at the highs, you'd call the prior 3 days of price action an evening star candlestick cluster, which is a topping pattern. Momentum remains negative, but vol is up still. And for all the warts, we've really discussed 2 ways to approach the bond market right now, which is one, given the volatility, selling put spreads underneath last week's or this week's low, right around 119, 117 would be something to consider. And that's holding so far. The other perspective would be thinking about the 6-month high-low range and having been bracketed right around the 50% mark, we could approach it like an iron condor, because what drove us to the lows in late April, early May, what drove us to the highs in September, those were extremes in market pricing around Fed cut odds. And the Fed cut path, at least in the very short term, appears to be fairly crystallized insofar as the Fed's not going to back off cutting, and the market, when shifting its expectations around Fed cuts, is operating around next year, not the end of this year.
Absolutely. I mean, I think you just hit the nail squarely on the head. The Fed has talked itself into these next 2 cuts. It would be a tremendous thing if the Fed would not cut at either November or December. Because for all of the Fed saying we're data dependent and this and that, all of the signaling that they've provided suggests November and December are at this point a lock. The real question is what happens next year, because the U.S. economy seems to be heating up, at least episodically looking at the data. And this is why I think the PMIs might be really interesting next week. U.S. composite PMI growth has been basically holding at its current pace since May. Now, when it got to May, that was a 12-month high. So we got to the fastest growth rate in a year in May for composite manufacturing and service sector growth. And really, it's the service sector because manufacturing is still very anemic. And we've been holding there now, essentially going on 5 months. So if the data points we've seen more recently, the ISMs, the NFP, the pickup in core inflation, even the retail sales numbers, if all of this starts to come together to some of these economy-wide indicators beginning to accelerate, the long end is not going to look very good at all, because it's going to start looking like the floor on Fed rate cuts next year is meaningfully higher than the markets thought before, and even than the Fed thought before. It's going to look like everybody's wrong, and the U.S. economy is outperforming everybody, right? We said earlier in the year, one of the funniest out of consensus things that could have happened is that the Fed has been right all along when it said in December, January, we're going to cut 3 times. And at this point, they've cut the equivalent of twice, albeit they did it all in one shot. If they cut only 1 more time this year, then you could have basically closed your eyes and said whatever the Fed said in December 2023 was the right thing to say. And so, hilariously, the most out of consensus thing is the Fed had it a year ago. And but at this point, the context is very different. Both the Fed and the markets have talked themselves into 100 basis points this year. Powell could not have been any clearer about the Fed being on as close to autopilot as you can get on this. Obviously, nothing is ever on full autopilot. And so at this stage, what's going to move the needle? Is it going to be the PMIs? I don't know. It's not the kind of indicator that really has immediate fireworks behind it. It's more like something that tells you where things are going, and then you look for confirmation in the real sort of banner top billing type of data to get your catalyst. And that's not on the menu next week. So are bonds just going to idle here for a week? Let's see. It's always interesting to get a sense of what the market does by default when you leave it alone. When you say, you know what, here, no data, no event risk to sit on your hands about. Your move. Do a thing. What's your path of least resistance? That'll be very interesting for me to watch in the bonds next week. If they break up or they break down, apropos of nothing, just because the market has decided where it wants to go and it's got the space to get there, that would actually be one of the most telling things it could do.
Bank of Canada rate decision.
Yeah.
We frequently, as macro people, look to Canada perhaps as a early warning sign for what may be transpiring in the U.S. economy. 80% of exports go to the U.S., and so if they have a slowdown up in the Great White North, then it's likely it means that there's less demand coming out of the U.S.
And the slowdown.
The Bank of Yeah. So what's the Bank of Canada facing? They've already cut rates a few times. They started before the Fed, of course.
Yeah.
Is the outlook for Canada improving, getting worse? And will there be any read-through for U.S. markets?
It's getting worse. Canada is actually increasingly diverging. So while the U.S. is showing impressive resilience, the situation in Canada is getting increasingly dire. And that, of course, explains why the central bank is doing what it's doing at a pace that it's doing it, as opposed to the Fed. The employment numbers recently, you name it. I mean, it's not looking good. And whether that has read-through for the U.S. is now the operative question. Whether that's a reflection of U.S. demand fading or whether that's a Canada thing.
Mm-hmm.
There is a school of thought out there, and one, Tiff Macklem, the governor of the Bank of Canada, seems to be an adherent, that monetary tightening worked more potently in Canada. That the reason that you're seeing this divergence in Canada is because of the way that the BOC chunk of global rate hikes has had a much bigger effect in terms of slowing the economy than the tightening cycle in the US. That's interesting because in the US, what we've talked about this tightening cycle has been unique in one very important sense. In no other tightening cycle going back to the advent of modern finance in the early 1970s when the dollar is taken off the gold standard and essentially the current era of fiat money is born. At no other tightening cycle, except this one, did we have the outlays on credit costs by private companies go down. Because, of course, what's the point of tightening? You're trying to slow the economy. You're trying to raise rates. You're trying to get companies to spend more on credit, financing, to spend more on servicing, so that they spend less on growth, so the economy cools. That's the object of the game. Companies are supposed to find credit more expensive in a tightening. That's what tightening is. Not this time. This time, outlays on servicing debt for corporates so far has been falling. And the reason it's been falling is because they haven't had to face the wall of higher borrowing yet. They borrowed hand over fist during COVID when rates were zero. And of course, they spent much less during COVID. So they had giant cash cushions. Everything was on lockdown. They're only eating through that money now.
Right.
And typically those loans have a 3 to 5 year maturity, which would leave us in 2025 with a wall of refinancing. And even if the Fed cut by 300 basis points it be a wall of refinancing that's higher rates than where this borrowing was incurred. So maybe we're still looking, and maybe we're still waiting, and maybe Canada, where it didn't happen this way, is an example of here's what happens when the tightening finally bites. But who knows? At this point, it's unclear what the timeline is. And being bearish in the face of a rising market, I can speak from experience here, is a dangerous kind of thing. You have to have your risk be real tight, because markets can go higher until they don't. And nothing says they have to stop at a particular level. They can also go lower until they don't. Nothing says, and nothing says otherwise. So it'll be really interesting, I think, to listen to the Bank of Canada and get a sense for where they see the pain and whether they think they still need to move at the pace that they're moving, or whether they need to dial things up, or whether they're, and most importantly, whether they're starting to see a drop off in U.S. demand. Because that would tell us that the sequencing is starting to line up and the knock-on foreshadowing effects are starting to present themselves. Because so far, it's just not been there. Canada's veered off into the doldrums, and we've been hopping along just fine.
We've been hopping along just fine. The Economist just put out a special report about how the U.S. economy is blowing away the rest of the world right now.
Yeah.
We're growing at 3.4%.
I'm a little bit worried that the Economist did it. They tend to top tick things.
Yeah.
At least it's not the cover. Is it the cover? I haven't seen this week's cover. Is it the cover?
I don't think it was the cover. If it's the cover, we got a real recession risk ahead of us, folks.
I mean, I read their most recent glowing review of the U.S. economy, but I haven't seen this week's cover. Ooh,
no,
it's on the cover.
It's SpaceX is on the cover.
Oh, good.
Yeah, so the economy's fine.
That's a topic I can get behind.
Yeah, that's it's fine. It's not the U.S. economy. It's fine.
No, that's okay. And frankly, SpaceX deserves all the credit in the world
what they just did
after they essentially landed a flaming rocket into chopsticks.
Yeah, it was incredible to watch. You talk about a market staying on specific levels. The mid-July swing highs halfway between the lows that we have in the beginning of May, the highs that we have in September. It's holding up right now in ZN, and there's been some churn here. So for those that are operating on the neutrality basis, they're probably having a better time than the folks who are taking directional bets, as it were. But this is a pinned area for now in the short term. It could be a pit stop before the next leg lower. Certainly momentum is pointed to the downside still. Otherwise, I think that if we are going to stay neutral here, this is the place to do it. But bonds aren't moving all that much net this week, at least the past several sessions. And that's been something that hasn't been standing in the way of gold. And today, hi-ho silver. My goodness, 4.5% here for silver to the upside. And we are at the top side of the recent range, which means we're at the top side of the yearly highs. All of a sudden, this longer term sideways move, this range that's been carved out between, say, 26.5 and 32.5, that gives you a target, 33.5, that gives you a target of roughly $7. And $7 on top of 33.5 calls for move up into 40, which falls short of my longer term view for 43, but it is a nice piece of progress towards there. Ilya, the metals are flaming hot today. It's not just the precious, even copper's up 1.46%. This is a new all-time high in gold as well.
Yeah.
What else is there to say here besides long and strong?
At this point, I'm a little bit annoyed with this thing because I saw the break of the swing high yesterday and said, it's not confirmation in the bonds, and this thing is rallying in the face of the dollar getting strong. I don't know. This looks a little fuzzy. And fuzzy or not, you can't argue with a market that's going up. And following one's mechanics would have said, just buy this thing, close your eyes, pinch your nose and just do it, which would have been the right call. As ever, follow your mechanics is the lesson that we learn over and over and over again. You don't want to overthink things. So I'm a bit annoyed here that gold is as strong as it is. At this stage, I don't think I'm layering in long, just because looking at the light volumes here, it's Friday. Maybe there's still the pending risk of a flush out, because we still haven't had Israel's retaliation against Iran.
Not yet.
And whatever that is likely to take an amount of geopolitical premium out of this thing. So
this is becoming like waiting for Godot at this point, though.
It really is. It really is.
Right.
We got these little tidbits saying, oh, they're going to do it before the U.S. election. Who knows? Nobody knows. So they're going to do something or other here. And that's going to take a level of risk premium out of this, assuming nothing goes wrong. Because at this point, they're telegraphing quite clearly again that this is theater, that essentially everybody needs to have their face-saving moment, and then we can move on. So, not to diminish whatsoever the incredible risk of shooting missiles at countries and hoping that they go right. You could absolutely have gold explode higher, and let's hope and pray that we don't, because these war games get botched and somebody does something that they don't mean to do. A missile falls accidentally where it isn't intended to go, where it doesn't belong, and you end up with a regional war without anybody having wanted one. You don't really need to stretch this out very far. I mean, look at how World War I came to be. You kill one Austro-Hungarian archduke and things start to spiral. So you have a situation here that's touchy, but I'd like to see that retaliation happen in a scripted, organized, nothing goes wrong, and nobody that isn't supposed to see a missile sees one, and then everything gets sucked out a little bit out of gold. And as long as its immediate uptrend holds there, then I'm a buyer. One slight correction, and I just sent you the image. The U.S. economy's resilience is on the cover of The Economist this week, but the image that they use is that of a dollar looking like Starship, the SpaceX rocket. Oh boy, maybe they top ticked it. I don't know. Nobody knows, but they have the resilience of the economy they have the U.S. economy on the cover.
You see these? These need to be upgraded then, because I look at that cover from in that little tiny quarter-sized image of mine.
Yeah.
And I'm like, oh, that's the SpaceX rocket landing. No, it's the U.S. economy lifting off. Good, thank you. Well, that's more of a reason to be long gold. Gold's the second best performing asset.
Yeah.
Recessions. So, all right. So
just give me that pullback. Just give me that pullback. Let's take geopolitical risk out of this thing, and let's get to a place where it responds to normal catalysts. It's weird that gold is up when the dollar is up. It's weird that gold is powering higher when bond yields aren't doing much of anything, and if anything, are pressing at the recent swing highs. That's not how gold is supposed to go. Let's unwind some of this geopolitical risk. It's not surprising that it's jumpy here into a weekend where the retaliation might actually occur. Let's get that done, and let's get a proper signal together, and then I'm with you.
For now, 38 days to expiration. The long 2,800, short 2,850 call spread continues to work. It's an extension of the one prior that was the 2,650, 2,700. And as long as gold remains in breakout mode, I'm going to keep rolling them up. And just got to give yourself enough time so that you're not bit in the butt by convexity. In fact, given where we are right now, I think because we're looking at this Israel-Iran risk, and I'll think about this afternoon. We'll talk about it on last call today. Victor and I are stepping in for Tom and Tony, so be sure you come back for that, folks. I may have rolled out the position to 69 days to expiration by then, just because of this seeming reduction in risk that we're seeing out of the oil sector. I want to use this as a transition in a moment to go over to oil, because I think oil and gold, like you said, are closely tied together. Before we do, copper is I still am sitting on the fence about this, because the short strike in the iron condor that I put back on when we had the IVRs north of 100 and we were sitting closer to 4.6, the short strike on the put spread side is 4.35, and so that's been challenged this week. Obviously today the position is responding a little bit nicely, or a little bit better. I'm going to hold it for now, only because even though it's not exactly turning up the right way, there has been this turning point in the market in recent months in copper. The lows that you have in June, all the way out through the highs that you have here in August, and we're kind of pinned right there.
We're right there. Yeah,
got a doji on September 20th. We broke out and then pinned for a day.
Yeah.
So this seems to be an important swing zone right now for copper. It's also a place that if people are looking to trade copper, between the lows that we had in August and the highs that we had in September, you're effectively at the halfway mark there. There's still enough VIG in here, if you can find the contract pricing and size that's good enough for you, to perhaps take a stab at it as well. So I'm going to hold this through the weekend. I'm happy about that performance. But Ilya, we're zipping along here. There's only 12 minutes left, so we need to go over to crude oil right now. And oil is breaking lower with a further contraction in volatility. It's been one of the horsemen, if you will, for lower oil prices. Down by 1.24%, moving off the lows over the course of the day. But vol here, 73.9. The low for this session was 70. Is the continued erosion in price and vol, even if there's been a rebound thus far today, a sign to you that this geopolitical risk is winding down?
Certainly seems like oil is more responsive to kind of switching gears into the more sort of fundamental, more supply-demand story here, which makes sense. I mean, with gold, you have a situation where, okay, maybe you wait for the geopolitics to wind its way out. There's nothing immediately breathing down your neck. In crude, you got diminishing demand expectations. You have more supply than ever. It's just a ridiculous amount of supply out there. I mean, everything is absolutely awash in oil. Saudi wants to pump more. They want to retain market share. OPEC Plus, in fact, as a grouping, seems to be increasingly market share minded as opposed to price minded. Not that they matter, but it does suggest that at least one thing that tends to give you some speculative fervor. I mean, I've argued for a long time that OPEC Plus shouldn't give anybody any agita as far as the price of oil. But
you have.
But markets, when they get an OPEC headline, they go, ah, and so even the kind of episodic seizing up of people around OPEC seems to be going away. So you're starting to kind of show us a level of capitulation. It's very early yet. As we can see, we're kind of hovering at the lows right now where we've been over the past 3 days or so. So we're not truly breaking, but the pressure is clear. You're pressing down. You had a big gap down. You haven't even tried to come and close it. So the pressure is on. I'm a little short. I'm looking for the lows here, the swing bottoms we saw in September, and then we'll see. But I'm happy going into the weekend having this a bit on the short side. If there is that retaliation, then come open on Sunday, this should be something that's very responsive.
Oil is one of the many energy products that are taking it on the chin today. Natural gas this week. This has been a real pain in everyone's side. we don't have any position in here right now, Ilya, but the temptation to look to catch a falling knife certainly has been there. This acceleration down has actually begun to accelerate itself. The distance between current price and the 1 week moving average has increased over the last 48 hours, showing that the move lower is accelerating. And it's accelerating in context. Look at the lower panel down here, folks. Volatility has actually been coming in. The range of vol intraday has been dropping as we've moved forward through time. So it's not like there's any interest in here. A falling volatility environment, a falling price. What's the allure of trying to sell some put spreads? It is a catching falling knife situation. It's not one in which you could say momentum's been broken. We've been down below the 1 week moving average every session since the close on October 4th. So why here? Why now? I don't see anything that suggests this could be the low. It's the newest low for the year.
Yeah. And this thing is the Leroy Jenkins of assets. It doesn't have to listen to any kind of macro themes or anything like that. It just goes where it wants to go. So I don't see anything of interest here. It doesn't look like something that I want to sell. It doesn't look like something I want to buy.
I'm just trying to paint something on here to find some sort of justification for anything.
I mean, certainly that range bottom break is a thing. So I suppose what you could do is do a kind of fib extension, so off the high at about 4 into the range bottom, and then use that swing at 3.4 as your correction, and see, okay, well, if you had to map out where this extrapolates to, let's see. I guess that can give you some downside targets, but again, would I hang my hat on that? No.
I mean, is the play just to buy a 240?
Because this thing doesn't care. This thing doesn't care about anything.
You know, we could look to buy at 250 and sell the 230 put. You're risking 1 to make effectively 3, a 30% probability of profit. But if you wanted to trade this extension and looking for a move down to the 100% target, going out to 39 days, 38 days, maybe even 69, we'd have to start to look at the different contract, though, because that's F5 at this point. Yeah, Ilya, you know, this market is right now effectively in a great state of contango in the front months. And unless that means we see demand pick up dramatically, typically the futures are going to roll down to meet current spot prices, and spot prices are low. That's why we're seeing the front month continue to come in. It's not that there's a lack of demand. Demand is huge. Look at the utilities ETF this year. XLU has been a top performer. It's simply the fact that we are drowning in LNG supply right now in the United States. We can't export it fast enough, and the hurricanes that went through the southeast part of the United States did lead to some port closures temporarily, which in turn means that we can't get the supply out of our borders and across the world, which means we drown more in that LNG, at least.
And Europe is already stocked. So there's a lot of conversation about there's going to be a colder Europe this year, Russia-Ukraine war, blah, 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 blah. Yeah, they're completely supplied. And we have so much that if they needed more at the low price of NATO ally discount, that could happen.
Yes, the supply for Europe is non-issue, so to speak. When we look at what's going on here in the euro, yesterday, I want you to go there, we hit the 100% extension of the double top perfectly. Overshot a little bit, came right into the low that we had from August 1st.
Yep.
We're finding a little bit of a bounce. Maybe a close on the other side of the 1 week moving average. Again, we haven't closed above it since September 27th. It's been a straight one-way trip down. This is the first green candle green since the 11th, and it's only the second since the 26th of September. That would be a point where maybe it becomes efficacious to sell some put spreads below 108.50. But not yet.
No.
The vol's not high enough to just say, let's blindly do it before we see a turn of momentum. But we're at that point where if there were to be a turn, at least for a short-term bounce, I mean, this would be a decent technical area to make the case for it. Other than that, though, sure. I'm not changing anything in my FX positioning going into the weekend. I'm still going to hold on to those long out of the money yen puts, the iron condors, particularly in the euro, which actually a bounce in the euro would serve me well because it would recenter the puts a little bit more. So I'm going to hold on to that too. And otherwise, holding the books steady into the weekend, except for abandoning the Russell Iron Condor.
The only thing that I have done with the dollar this week other than buy it was close my short of the Canadian dollar because it ran into a little bit of trouble. And after an absolutely ridiculous run lower of just consecutive days of bleeding out, it just looked like it got exhausted. So I took profits on that. I am short Aussie. I am short Euro. I am short pounds. In the spot market, I am short the franc. I am short the Kiwi dollar. I am loaded up on dollar longs because if we're really going to heat up in this U.S. economy and we're really going to see the long end and yields break down and the curves steepen, this dollar move is only warming up here.
Ilya, on the calendar for Monday, we talk about next week being a quiet week. It starts with a quiet Monday. 2 things I'm watching. 2 speeches from Federal Reserve officials. That's it. Dallas Fed President Logan in the morning, Minneapolis Fed President Kashkari in the afternoon. Keep an eye on the NASDAQ and the longer end of the curve. There's a 20-year bond auction midweek, but not yet. As we wind down the show, keep an eye on the education segment here. Go to tastylive.com, top banner, learn beginner futures, or click the link here at the bottom of the screen to take you to the coursework put together by the fine folks on the research team. Today we're talking the CFTC COT report. Every Friday, 3:30 p.m. Eastern, 2:30 p.m. Central Time, the CFTC releases their Commitment of Traders report, which gives us insight into the latest positioning changes in the futures market. It's segmented out by type of participant, from hedgers to speculators to traders, large, small. You can net out the data. You can look at dealers. It's a fantastic tool to look for extremes in positioning and to line them up with your charts and say, well, the last time this happened, what were the forward returns of XYZ asset? It's one of the reasons why in September this year, when the oil market was coming apart, we were looking to sell puts when it was down in the 60s because the oil positioning was the lowest it had been over the past decade. That seemed like an extreme. Sure enough, we got a bounce and some geopolitical tailwind behind us, and those short put spreads worked out just nicely. The COP report helps inform you on those. There are some downsides, of course. It is a delayed report. The data period ends on Tuesdays, so it is a few days stale. But nevertheless, it's good for longer-term trends. So watch the COP report. Look for our discussion about it here on Futures Power Hour on Mondays, because we're here every Monday through Friday, 1 p.m. Eastern, 12 Central Time on Tasty Live. And that's when you're going to have to see us next, because we're done for this Friday, October 18th. For Ilya Spivak, I've been Chris Vecchio. Up next, Dr. Jim. He's back with From Theory to Practice. See you for Last Call later today.
Godspeed, folks.
Shake it up, stop when the clock hits 13. Sing 1, 2, 3, 4. Cause no one can do it like we do it, like we do it, like we do it. Cause no one can do it like we do it, like we do it, like we do it.
Well, he's more public in his mentality.
I'm a believer. I believe that the world is good.
And I know that the world is not good. That questioning yourself and questioning yourself in dialogue with someone you respect is both pleasant and sometimes extremely insightful and useful sometimes.
Are you on a quest for trading enlightenment? Driven by an unquenchable need to find the twin flame to your chosen strategy?
Our Where's Bat Live event is the search for trading's ultimate holy grail.
Do you have what it takes to find the elusive bat as we visit 3 cities?
Join 6 Tasty Live speakers
as they present 6 unique strategies
and 6 unique clues using games and probability
to lead to the ultimate prize. Sign up for this free event today at tastylive.com/events.
I'm Jim Schultzen. This is From Theory to Practice. Welcome to the show today. Welcome to the broadcast. Welcome to the Friday edition of what it is that we are trying to do. Welcome to the Netflix Butterfly edition of what it is that we are trying to do. We're going to talk about my two butterflies from yesterday. We cashed one of those guys in earlier this morning. If you follow me on the follow page, you saw that. If you follow me on Twitter, you saw that. We still have the big dog working here in the account. So we're going to talk about that for the next couple of minutes. But welcome to the show. I'm so glad that you are here. This is a very exciting moment in your day. This is a very exciting moment in my day. Everybody's excited, and we have lots and lots of things to do on the program today. So a couple of housekeeping things. Number one, I'm still sick, so express apologies for the 17 times that I'm going to sneeze and or cough and or blow my nose on the program today. But number two, we are going all the way to 2:15 Central or 3:15 Eastern. So we have a little bit over, man, we got like an hour 15 before this thing is going to be wrapped up. So if we got the Elaine Bennis super wide lanes, it's going to be awesome. And we're going to try to have a good time with it. And so if you have a question for me, drop it in the chat box and I will try to get to as many as I can, usually around, I'd say somewhere around the halfway mark of the show. We'll start doing the Q&A and we'll start trying to get to as many questions from you all as we possibly can. So let's go ahead. Let's pop into the market here today. Man, stock market's still here. It's a little bit surprising. EMI S&P's up 19. Risk-free instrument, also known as the NASDAQ Futures Extraordinarily High Risk product, up 110. Got the boomers down 4. You've got the Russell 2000 Futures Index unched on the day, down about 90 cents. And so you've got bonds up a little bit. You've got notes up a little bit. You've got oil down a little bit over $1. You got UB40 still trucking along, 45 years later. That's pretty impressive. You got gold up $24 today, man. Look at this thing. Man, Peter Schiff. I don't know why we ever doubted Peter Schiff. Right? He nailed it. He absolutely nailed it. It took him 29 tries, but man, he got there. And so he wasn't wrong. He was just a little bit early. And so gold up 24. Then you've got the British pound up. You got the euro up. You got volatility down today, which makes sense, of course, given the strength of the market. Volatility futures down 38 cents. And then you've got the VIX, the spot volatility is going to be down 99 cents. So spot volatility getting taken out to the woodshed. A little bit of gorilla smackage, as they might say, down to 18.12 on the day. And so, all right. So, of course, guys, I've got two butterflies on. We've got two winners in Netflix from earnings last night. We've got a super long show. This is going to be the longest, slowest victory lap that you've ever seen on the show before. And I've taken some lengthy ones. Like there have been some very, very slow trots around the basis in the past, but this is going to be the slowest of them all. And so let's go ahead and let's go to Netflix. Shout out to my Aaron Judge fans that might be watching the show. He almost did enough last night. But man, it just wasn't there for him. And so I would say I'm a little bit sad, but I'm really not sad at all. So Netflix up to $7.59. So if we take a look at the old, let's look at the old chart here of Netflix, man, look at that. Look at that gap. It's almost like they had earnings last night, right? Look at this thing. They closed them at 687 yesterday. And then today, this morning, they opened at 737. And they're pretty close to the highs on the day. At 763 was the high of the day. We're at 759 right now. So you've got, off the highs just a wee little bit. Well, this morning when the market opened, I was, in between, buys and tries, letting the buys rest, getting the tries ready for the workload that was about to happen. I was like, well, let me take a look at my butterflies here in Netflix and let's just kind of peek the landscape and see what we're up against. Well, the 12.5 point wide butterfly, I'm like, all right, both of these butterflies should be working based on, the opening price of, 730. It opened 737. I'm like, that's a great price for us, right? We should be profitable on both. I was like, how do I want to play this? Well, it opened up the 12.5 point wide butterfly, and I was basically up like maybe $200. We're going to go to the activity tab here in a second, and you're going to see exactly how it all kind of went down. But I was up like $200, and I was like, all right, I don't have as much margin for error on the more narrow butterfly because that's the nature of the beast with a narrow butterfly. You don't have as much margin for error. Like you really kind of need to get close to the short strike for the trade to be profitable. Now, we're not talking about a $5 wide butterfly. We're not talking about, a $3 wide butterfly. We're not trading, 50-cent wide butterflies. And so we certainly had some margin for error being 12.5 points on both sides. But I was like, all right, let's consider closing the 12.5 point wide butterfly, and then leaving on the big dog. Let's leave on the 20 point wide butterfly, because that way we could secure some profits. We could secure the bag, as the kids say these days, and then kind of go for a little bit more, kind of go for the gusto on the bigger butterfly. So that's essentially what we did. And the bigger butterfly is still on right now. So if you look at this right now, I'm going to come back to this here in a second, but just to kind of, just tickle your fancy just a wee little bit. Here's the big butterfly, 725, 745, 765. And you can see with Netflix at 759, that's not the best price for us. We got a little snowman working right here, which, this is winter in St. Pete now. I mean, it's like 64 degrees out this morning. I'm like, this is not what I signed up for. This is not at all what I signed up for. But anyway, if we look at, the $20 wide Netflix butterfly, for the stock being at 759, this is a pretty good scenario, right? I mean, we paid $1.63 for it. You can see that right here. It's currently marking at, $5.73. So, I mean, that's a $4 winner just on this butterfly. Well, we'll come back to that here in just a second, as, of course, we leg out that victory lap. Let's go to the activity page, though, so that you guys can see. We could do the chains and we could do, all those kinds of things, but let's just do the activity tab since it's right here for us and it's very simple. So if we go into Netflix, you can see these were the trades that we did. So these were the two butterflies we did yesterday. We paid 70 cents for, this was yesterday during the show, for the 12.5 point wide butterfly, which you see right there. We also, a couple minutes later, you see 244. We paid $1.63, right there, for the 20 point wide butterfly. That's the one that we just saw on the position tab. Well, this morning, you can see this happen at 9:35. And so at 9:35, I was kind of looking at the situation, and the markets were extremely wild. Which is what you would expect. It's a four-legged strategy. The market just opened. When you're dealing with a liquid stock like a Netflix, or, like an Apple, or like a Meta, or, Google, or whatever, these are really liquid products. You can get filled pretty easily most of the time. After an earnings announcement, trying to get filled, because I tried to get filled at like 9:30, 9:31, 9:32, and it just didn't happen. It was difficult for me to figure out where the market was at, because the mark price was bouncing all over the place. I mean, it was marking at $3, then it was marking at $1.20, then it was marking at $4.25 or whatever. I'm like, all right, none of these numbers are real. I was just looking at the situation with Netflix around 7:37, 7:38. I'm like, okay, I think I'm probably up a couple bucks on this trade. I think I'm probably profitable on the trade by a couple bucks, no more than that. And so as I started to try to do some price discovery, I was like, let me put this in. I think I went in at first at like 275. I didn't get filled for like 20, 30 seconds. I'm like, let me go down to 270. And I don't really know what the stock price was doing at this time. It may have been moving, quite wildly in either direction, probably higher. And so I don't really know what the stock price was doing, because I was focusing just on the order. I started at 275, went down to 270, went down to 265, and then I didn't do it in penny increments. I'm like, I'm just going to go in nickel increments. I'm going to get a good fill. Like, I'm not worried about getting picked off. I'm not worried about getting a really, really bad fill, because I'm in a highly liquid product. We're not trading some small biotech name out of Silicon Valley that nobody's ever heard of that's, got 80-cent wide markets, just on a normal day. I'm like, we're trading Netflix. This is not really going to be that big of a deal. So I moved it down about a nickel at a time, and then we finally got filled at 259. And so when the dust settled and we looked at the first butterfly, that's a pretty good little return. I was like, okay, what I've essentially done now is you can, if you just add this up, let's grab some Diet Strawberry, man. Let's just do it because we can. So if you look at the cost, if I add up my two costs here, this is going to be in Diet Strawberry color. This is $2. We're going to have to overwrite some of the numbers that are on the screen, but that's okay. $2.33. So we were all in for 233. So I'm like, okay, let me grab some Miami Dolphin teal, right? Go Dolphins this week. And they're playing the Colts with Snoop Huntley. Whew, Colts going to win by at least 17. But if you look at the closing price of Netflix at 259, I'm like, okay, that basically assures us, regardless of what happens with the big dog butterfly, the $20 wide butterfly, I'm like, I've got, what is that, a 26-cent profit? So I'm looking at 26 cents, worst case scenario. And this is at a time when Netflix was trading like 740, 745. I'm like, it's in the perfect possible spot. Like this, if I could cherry pick a price, this is the one that I would cherry pick. Right? Shout out to the morning cherry picks that go out to all the cherry pick subscribers. So definitely do that if you haven't done it already. But 26 cents was already, kind of, in the back pocket. So I'm like, all right, this is a pretty good scenario. Let's close the 12.5 point wide and let's let the 20 point wide, kind of continue to work. So that's where we are now. So plus, we made about $1.90 on the 12.5 point wide butterfly. Let's go back to the 20 point wide butterfly now. You see Netflix is basically in the same spot that it was in when we started the show, 7:59 or thereabouts. And yeah, so it looks like right now, I don't really think that I want to hold this any longer. There's not much of a reason to do that. I place an incredibly high value on being able to do these things on the show with you. I mean, I try to do all of my trading on the show. The only exception, the only caveat to that is essentially the expected move butterflies. Like if I nail an expected move butterfly, I started like months ago. I was like, I'm just going to do the expected move butterflies on the show. I want to still continue to give you guys all my trades so there's no broken links in the chain, blah, 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 blah. But then I was like, man, that's really hard to do because you've got to nail the price. You've got to do it at a certain time. Like you guys know, if you trade these, they're pretty slippery. Like it's pretty difficult to even get the price to cooperate. So if you're on the day of expiration or really any day of the week of expiration or really any day at all for that matter, and you get the price that you want on an expected move butterfly, you kind of have to seize the opportunity. You kind of have to strike while the iron is hot. So we did that this morning. I'll continue to do that, moving into the future, but you guys will never miss a beat. You guys will never be left in the dark, like where I'm trading, 10, 30, 50 times a minute, like a Bob Nosnoff, for example, and you have no idea what's going on. He doesn't even know what's going on, by the way. Don't let him fool you. He has no clue what's going on. No idea what he's doing. I don't want to do that. I want to show you guys what's going on, kind of lift up the hood and let's work it out. Plus, it allows me to leg out these victory laps even more, so everybody wins. So if we look at the Netflix 20 RY butterfly, yeah, it looks like I'm going to make about $4.10. It's actually improving the longer that I yammer, which usually the longer that I yammer, things get worse. And so this is now I'm up 425. Yes, nice. This is different. This is some mean reversion, I guess, kind of going the other direction. All right, so it's cooling off now. It's only 410. So let's try to get filled on this guy together. And then I want to make sure that we have to talk about GLD because that guy's going to expire today. And then what else do we have? We have anything else? Oh, yeah, we got a couple other things to do. And then I want to get to you all and y'all's questions here on the show. And we'll spend the rest of the time with you guys. And I see you guys in the chat box. I see RC's in the house. I see Rome's in the house. Boston Frank's in the house. Raul's in the house, man. Look at you guys. Argent Purse sneaking in there at the very end. And so if you guys have a question for me, drop it in the chat box, and I'll try to get to as many as I can. You guys coming up clutch, by the way, on the roofing context. Man, you guys are amazing. You guys really came up clutch, so thank you guys so much for the people that reached out. A few of you guys did, and it's been extremely helpful. So thank you guys so much. Let's go ahead and let's see here. If I right-click, close position, let's see. We're looking at excuse me. We're looking at about a $5.60 credit. Yeah, I mean, that's, what are you going to do? That looks pretty good. Looks like about a $4 winner based off of the entry price there. So let's go in at 561 and we'll just see what happens. All right, so no takers at 561. So let's go ahead and let's see. Oh, Phil Taker at 561, man. Look at Anton doing this. He's doing the Lord's work behind the scenes, getting us really good fills, working his contacts with the high frequency traders, just negotiating deals, in the back room, in the dark pool. He's doing all of it for us. And so that was amazing. So we got a nice fill there at 561. So now, as we round third base, which is a little bit sad, but I think it's time. If we look at the 12.5 point wide butterfly, let's get the total tally. If we look at the 12.5 point wide butterfly, we bought it for 70 cents. We sold it for $2.59. Let's grab we'll do Diet Strawberry as the official scorekeeper. That's what? Is that $1.89 profit? That looks like plus $1.89 from the first butterfly. So that's plus $1.89 from the first butterfly. Second butterfly, we bought it for $1.63. We sold it for $5.61. That looks like, and I'm no Julius Spino, but that's about $3.98. So now we've got to do some really difficult math. That looks like we made about, just under $6? It looks like we made, $5.87? I'm going to say. Again, you can never be sure, so I'll throw the squiggly line out there. But it looks like we made about $5.87 on this trade. So that's $5 in the options world, which of course is $500 in the actual world. And so that's pretty good. Like, this is not a bad Netflix trade. This is not a bad little earnings deal for us. And so I think this is it. I think we have discovered, the fountain of youth potentially. think we have potentially discovered, the elixirs that we need to reverse the aging process. You just need one butterfly going in one direction, then a second butterfly going in the same direction to hedge the first butterfly. That's how you do it. That's 100% how you do it. And if you're brand new to the show, that was humor. That was a very, very poor attempt at humor, but that was a wee little bit of sarcasm there. So, all right. So $5.87 is where the dust settles on the Netflix butterfly situation. Okay. So we're done with Netflix. Let's go to GLD. It's kind of sad. And so we just, especially coming off the high, right? It's kind of like my Yankees out there, my Yankee fans out there, man. You're like, we're just riding that high last night, right? You got Judge he hit 2 home runs, 1 home run, right? I think he hit 1 home run, like struck out 4 times or whatever it was. I mean, you're coming off that high. It's like Judge puts one in the seats. Like Giancarlo, Stanton puts one in the seats. Speaking of slow victory laps, when my man's running max speed, it's a super slow victory lap. But it's like, man, you guys were looking good. And then all of a sudden, your boy Clay Holmes, dude, just can't do it. He just can't do it, right? I think, didn't they have him pitch the 9th and the 10th? That's crazy. Like he let it up in the 9th, just send him back out there to let it up in the 10th. That's nuts, man. That's wild. Even the Red Sox wouldn't do that. And they're really, really bad. But anyway, I digress. If we go into GLD, it's kind of like the Yankees last night. Like, man, you were just riding a high, and the next thing you know, it just wasn't to be. Well, this GLD Iron Condor is kind of like that. So what I'm going to do is we need to close out. I'm not going to close out the put spread. There's no reason to. Gold's not going to drop 30 points in, the next 2 hours. I mean, I guess I could close it out just for completeness purposes, but there's really not much of a reason to. Now, of course, if like something really crazy happens in the next 30 minutes, 90 minutes, whatever, whether it be geopolitically, whether it be, whatever it might be, I suppose it could happen theoretically, but I'm just not going to worry so much about the put spread. Let's go ahead and just close the call spread. And yeah. So this is another good exercise in understanding, theoretical maxes and like practical maxes and things like that. When you have a vertical spread at expiration, which is exactly what this is, it's a $7. I know it's an Iron Condor in full, but again, I'm not going to worry about the put spread. Just leave it be and not worry about it. $7 wide call spread at expiration, fully in the money. You're going to have to buy it back for $7 theoretically. That's your theoretical max. But remember, when you step out of academia, when you leave the ivory tower and you're like, wow, there's actually real humans outside. Like, this is crazy. I had no idea. You start interacting with those humans, and 30% of them are bots and droids and things of that nature. But when you start interacting with at least some humans, you're like, wow, this doesn't quite work exactly like I thought it might in academia. Well, when you go to close a vertical spread at expiration, this is a great example. You may not be able to get out for theoretical max. You may have to offer a penny or two over the theoretical max to encourage someone else to take the other side of your trade. Because remember, you need a counterparty. So you need someone else to take the other side of that trade. And so the reality is you may just have to pay an extra penny or two. Now, you might say, I'm not doing it, right? I'm going to be super stubborn. My finance professors in college told me that I was not going to have to pay more than the width of the spread. Well, then you could just let it expire worthless. I'm sorry, not worthless, but you can just let it expire. It's actually worth quite a bit. It's worth the width of the spread. You can let it expire, and then you will only lose the full width of the spread. However, it's been said before, and I can't remember who said this, but man, it's a catchy little jingle. For every gimme, there's a gotcha. So if you want the gimme of assuring yourself theoretical max loss, the gotcha is now you got to pay some assignment fees. Right? The gotcha is now you've got to pay your broker, a couple of chippies off the top for the assignment fees, because both legs are going to be assigned. It's going to cancel out. You're not going to have a position come, Monday or whatever, but you have to pay some assignment fees. And of course, we know that through Tasty Trade, the assignment fees that we pay, they go to a good cause, right? They go right to Tom Sosnoff's second Range Rover payments. So you can feel good about the fact that you are doing right by the world and, of course, helping out the Tom Sosnoff Enterprises. And so, you could choose to do that. It doesn't really make a lot of sense. If you're paying, I don't even know what the assignment fees are at Tasty Trade. I want to say maybe $5 a leg or $10 a leg. Don't quote me on that, but it's not like an exorbitant amount. So it's not like a tremendous, cost to you. But still, I'd rather pay an extra penny or two on the spread and lose, $1 or two, as opposed to having to pay $5 on one leg or, $5 on each leg or whatever it might be. It's going to be significantly lower cost for you to pay that extra penny and pay that extra 2 pennies over theoretical max, and then hit your former professors up on LinkedIn and say, hey man, like, you were not right about that at all. And so let's go ahead and Yeah, I'm going to go watch. I'm even going to show you guys. I'm going to go in at $7. I'm going to go in with $7, and I don't think I'm going to get filled. It's possible that I get filled. Maybe I find somebody out there that's feeling pretty good, that's just, in a good mood, wants to take the other side of the trade. There's really no edge in it for them. There's really no compensation in it for them. It's possible. I'd be very surprised if we get filled at $7. I think we're going to have to pay $7.01 or $7.02. So let's try $7. And there you go. I'm not surprised, right? We didn't get filled. And if you're brand new, by the way, to the show, or you're new to options trading, and this is kind of like, you're like, wow, this is kind of crazy. This doesn't really make any sense. Go back and watch the last 5 to 7 minutes as I kind of explained, kind of the difference from theory to practice. But now you're actually seeing it happen. And that's why I'm excited about the way that we've set up the show for so many years now, where, we're kind of coming from academia. I mean, I used to work in academia, of course. And so coming from that world and then kind of showing you guys how things connect in the real world, I think it's cool. I think it's cool what we're doing. I think it's really, really, it's been a lot of fun. And I think it's been valuable for some traders out there to kind of see the connection and kind of see the leap that you have to make. And this is a good example. And if you're brand new to, trading options or trading in general, but especially derivatives, and you're doing vertical spreads and you're trying to think about theoretical max loss and theoretical max gain and things like that, it's like, this is what you need, honestly. You need to see somebody, whether it be me, whether it be Jamal, whether it be Chris Vecchio, whether it be, Tom and Tony, whether it be Liz and Jenny, showing you how it actually works in the real world. I think it's worth a lot. It's worth a lot. And so that's why it's awesome what the Tasty Network is doing. But so we can't get filled at $7. I've even given it a couple minutes to work, and man, it's been working hard. Like, again, Anton is behind the scenes right now, and he's like, man, I cannot get this $7 fill, but I'm going to try. I'm going to try really hard. All right, so let's go ahead. So right now it's telling me that the mid price is 702. I'm going to go up to 702. I think I'll get filled at 702, or maybe even improve to 701. I think that's possible. I would not be surprised if we have to go up to 703. I don't think that's going to happen, but it wouldn't be like, wow, I can't believe it. Like, I think we're filled at 701 or 702. I think that's probably a 75 or 80 delta. It's possible that we go to 703. It's unlikely because GLD is very liquid. Like, a lot of people trade in GLD. Like, Peter Schiff has quite a following, right? So when you just take that into account, on its own, it's like that's going to be a significant amount of trading activity. Then you've got all the peasants and plebes like myself that are also doing, the same thing here. And so let's go ahead and go in here. We'll go at 702. I think we'll get filled and possibly even improved. But, we just gotta see. Fill the 702. All right, so there you go. We paid 2 cents over, but again, it's better than the assignment fees that we would have to pay. So all right, so we did GLD. We've got the put spread on, but that's just going to disappear and go out to pasture. I don't have to worry about that. The other thing I wanted to focus on here is, guys, I don't really have any new trades to put on. We've got all the old same crusty trades. Look at TLT. Look at our long call. Man, up 27 cents. Look at this thing. This thing is just churning forward. I don't know if that's good or bad, but that's what it's doing. It's churning. And so TLT, we could use a bigger rally in bonds come next week, but we'll have to wait and see if that's what is going to be in the cards. But look at what's coming on down the chutes. Excuse me. Again, if we go to the watch list, let's go to Tom's watch list. Go to Tom's watch list. Let's sort by earnings. And I mean, this is it, guys. This is what you trained for. Right? I mean, all those long days in the gym, all those extra sets, during your squat sessions, all those, just all those moments when you just went after that nasty, nasty buy and try pump where you didn't really want to do it, but you knew you had to do it. You just knew, like, man, I just got to reach down. I got to dig deep, and I just got to grind this thing out, because there's going to come a time when I'm going to need the stamina. I'm going to need the strength and the endurance. Well, that time has come, my friend, because if you look at the earnings coming down the chutes for the next week, look at this, guys. This is not, I mean, this is some serious business. You've got Procter & Gamble, which was today, I guess. And in classic Procter & Gamble fashion, they're only up 27 cents. So, I mean, Procter & Gamble hasn't moved more than 24 cents, in a day for 18 years. And so the fact that it took an earnings call for them to go outside of that 24-cent range is that's about right. I mean, that's Procter & Gamble for you. But look at what else is coming on down the chutes. We've got 1023, which is going to be next. Let's think here. That's going to be, is that Wednesday? Yeah, that's going to be Wednesday, I think. Yeah, I think that's right. We've got IBM and Tesla coming on down the chutes, right? Just your classic pairs trade, IBM and Tesla. Look, they're almost like the exact same price. Wow. IBM at 231, Tesla at 221. And so you've got IBM and Tesla on 1023, and then the next week you've got some of the big dogs are going to start to eat. You've got 1029, you've got Google, right? McDonald's 1029. Like Chipotle, wow, they're still in business. That's incredible. CMG 1029. You got Visa. He's got a little Meta coming on down the chutes on 1030. Man, look at this week. This week is going to be something. Man, hold on a second. You got Meta at 1030. And we're going to trade all these stocks. By all, I mean, we may do like 2 or 3. But Meta, 1030. Got Microsoft at 1030. And I got Starbucks on 1030. Look at that. Yeah, Starbucks at 96. And so still slanging that same old day-old burnt coffee. But, man, they're just doing it. And they're doing it better than everybody else. Got Apple and Amazon are going to be on 1031. Little Halloween. Little trick or treat for you guys. And then, those are going to be the main ones. And then when's NVIDIA, by the way? Hold on a second. Is NVIDIA, they must be in November. So lots coming on, right? Lots happening. Where is NVIDIA? Let me see if I can. Okay, there you go. 11/19. 11/19. So this is going to be, wow, that's after. So that's before Thanksgiving. Excuse me. It's before Thanksgiving. It's after the election. And so that's going to be obviously, after the election, it's going to be crazy. It's going to be historic. It's going to be historic either way, right? Whether it's Kamala, whether it's Trump, I mean, it's going to be absolutely historic. And so we've got that on. I think that's November 5th. Well, I mean, you've got the election on November 5th. Then you got to allow, 3 to 6 weeks to count the ballots. And so, I mean, it's going to be, sometime between November and, probably Valentine's Day that we'll know who the actual winner is. And so we've got that. And then you've got NVIDIA on 11/19. And then, lots of earnings coming up. This is going to be a fun couple of weeks for us as Tasty Nation traders. I don't think I'm allowed to say Tasty traders in all one word, so it wasn't one word. I paused there for people that are listening. For the compliance department that might be listening, there's definitely a clear pause there. But in the Tasty Nation traders, that's what we're doing. So, all right, man, we're at 2:30. I don't know. Let's do some questions. Where are you guys at, man? I see Dan Sands in the house. I see Rob Banks in the house. Man, look at you guys, man. You guys are amazing. I see Rome's in the house, man. Let's do it. All right, let's get through as many questions as we can. And let's just kind of see where the wind blows us, man. We got 45 minutes for it to blow us somewhere. I didn't have any new trades today. I just wanted to do Netflix. I wanted to do GLD. And then just kind of, survey the landscape for earnings coming on down the chutes. But, man, let's do it. So let's go. RC's in the house. What up, Dr. Jim? What's going on there, RC? I appreciate you, my friend. Thank you for being here. You are a staple of the show. You watch most days, maybe all days, maybe some of the days, but you are here on a regular basis. So thank you, my friend. I appreciate that. Rome says Netflix killed it. Yes, we got really lucky. Obviously, all kidding aside, nobody knows what's going to happen. I certainly don't know what's going to happen. If you've watched the show for any length of time, do not let the Netflix trades from today lead you to believe something about my track record that is just simply not true. My track record, especially with earnings and especially with expecting with butterflies, it's not the best, let's just say. Like it's, we have flashes of brilliance. Like, there's little, rays of light that peek through the dark clouds from time to time, like today. And that's what gives us hope. Like that's what gives us the momentum to just keep going forward. And so obviously we're going to burn some cash next week when the real earnings season begins. But I appreciate you there, Rome. I appreciate you very much. And so Boston Frank's in the house. Says stocks, bond prices, metals, crypto up today. Yeah, man, everything is up today. So bonds are up. They're only up a little bit, 9 ticks. You've got, gold up 26. You've got stocks are obviously up. ES up 25 now. NASDAQ/RF up 127 on the day. Got the boomers up, and the Russell's pretty much unchanged on the day. Which that's interesting because, the Russell's more interest rate sensitive than the other indexes, given its smaller cap nature. Smaller cap companies are more interest rate sensitive, if for no other reason fundamentally than their goods and their services and their own track records are just not as proven as, kind of the large cap, bellwether, blue chips, your General Electric, your Procter and Gamble's, your Kellogg's, your Kroger's, like whatever. They're going to be a lot more proven. So they're not going to be as interest rate sensitive because there's not as much uncertainty around their future projects. When you have a smaller cap company, I mean, we're digging into like some, some senior level finance, maybe even like, or maybe junior level finance, maybe MBA finance, wherever you went. And so this is some like fundamental like theory of understanding, how companies are structured and kind of their projects and their cash flows and stuff I used to do in the classroom all the time when I taught, for the 6 years I was in academia before they kindly showed me the door. And then Tom Sosnoff scooped me up into his wings and took me into his, his 7-acre home. And so I appreciate that very, very much. But for a small cap stock, they're going to be a lot more sensitive to interest rates because the future projects are more uncertain. The future cash flows are more uncertain. So, when interest rate changes, it changes the projections of those future cash flows and then bringing them back to the present value through a very basic, or depending on the problem, could be somewhat intermediate time value of money type of application. And so when I look at the Russell being weak up against the rest of the indexes, it kind of leads me to believe, all right, maybe the market isn't so sure about the current trajectory of interest rates. Like, again, I'm just doing what every other good financial media pundit does, right? I don't give you the actual story before the move. I wait till the move happens, and then I attach the story on top of it after the fact, right? That's what every prognosticator does as they're doing their prognostication. So I'm going to do the exact same thing, right? I don't know that this was going to be the case this morning. Nobody knew. But now I can tell you it's the case, and I can, of course, revise my narrative if the market decides to revise itself. But the Russell here, not being as strong as the other indexes, is very interesting to me because it leads me to believe maybe the market is concerned about interest rates going up again. Whether that's, the Fed hiking maybe won't happen, but you've got, bonds could get hit. The long end of the curve could go up, and they could go up significantly. And if it does, then all of a sudden it's like, it doesn't matter what the Fed does at that point. You've got rates in the market-driven rates, not policy-driven rates, are actually increasing. And that could be a really significant headwind for the overall market, all the major indexes. Now, again, is that what's going to happen? I have no idea, but it sounds pretty good. Right, like it makes a little bit of sense here on the front end, and so there you go with the Russell being down today. But yeah, gold is up a ton, and so Boston Frank, and the crypto bros, man, look at these crypto bros, man. I haven't checked in on the crypto bros in quite some time. You got Bitcoin at 68,000. Wow, look at that, 69,000. Man, that's impressive. That is pretty impressive. Like if I bring up Bitcoin, and we bring up like a daily chart of Bitcoin. Let's look at like a daily chart. Let's go back like 3 years. Actually, let's do like a monthly chart. Going back like 3 years. Look at this, man. That's an incredible rally. Look at this rally. Bitcoin back to 68,000. Look at that. You made it all the way back to where you were 3.5 years ago, right? So you are even Steven over the last 3 years. So there you go, man. That's crypto bros for you. And so, Bitcoin at 68, almost 69,000. And boom, there you go. Looks like a little couple to handle, though. So you got the crypto bros meeting the technical bros in a tremendous team effort to try to send this thing higher. So we'll have to wait and see if that happens. I know almost nothing about the world of crypto. But anyway, I digress. So Raul, happy Friday, all. Dr. Jim, I'm so glad that you and the family are safe, and I appreciate you, my friend, so much. But I'm very sorry for the property damage. Yeah, it is what it is, right? Because it can't be what it's not. And so when you think about, the simple fact that, the major home was like the inside of the home was basically, I don't think we saw really any damage. Maybe a couple very minor things, but nothing like no water in the home, no windows broken. Like that would be major, right? The roof, the roof's pretty major, but from what I understand and just my initial conversations with people that know a lot more about this than I do, this is probably just going to be, hurricane deductible, which is not insignificant, but it's like, if it's a few $1,000s or whatever, you got the hurricane deductible and it comes with a new roof. It's like, that's not a bad trade. That's a decent trade. It's not as good as my Netflix trades, but it's decent. It's in the conversation, right? And so it's like, all right, that's okay. And then we've got the fence is all messed up, but it's all right, man. It's gonna be fine. And so, but I appreciate you there, Raul. Thank you so much for being a part of the show on a regular basis. You are a good man. So Rome is back, and Rome says, I am short a 77.5 UAL call. Excuse me. After closing out the cheap put side of my strangle post earnings, what would be the tasty approach and your approach to salvaging this loser with just the short call left? All right, so let's take a look at this. So if I go into, let's see here. If I go to UAL, Oh, wow. Wait, you've got UAL? 77.5. Okay. And the stock's only at 74.5. I was expecting it to be like 80 or 82 or 85. Excuse me. So you're in a really good spot here, Rome, because right now, so you closed out the put side. It was probably worthless. We don't typically leg out of strangles. We would normally, on as a package, off as a package. But I get it. Like, it intuitively makes sense. You're like, all right, there's not much more to gain here. I'll take it off, not worry about it. Like, I'm totally fine with that. Now, what do you do with the short call? Well, I mean, I can't tell what cycle you're in, but I'm assuming, well, you're obviously not in October, which is today. So you're probably in November with 28 days to go. I mean, right now, you're in a pretty good spot. You can do nothing, which is our favorite strategy here on the show. The main reason why you can do nothing here is it's still out of the money. You still have 3 points to work with before the short call gets tested. So you may be down on the strategy overall when you look at, what you were able to bring in from the short put and closing that and getting out of that side, and then what you're down right now on the short call because that side is getting tested. You're probably net negative on the position. But Rome, I would absolutely unequivocally do nothing here. There is no reason to do anything. Just sit tight. And as long as it's out of the money, one thing that's really helpful to remember is as long as this position remains out of the money, it is going to hit whatever profit objective you have for it. So whatever profit objective you have for this strategy, whether it's 50%, 30%, 70%, whatever it is, if the short call stays out of the money, you are going to hit that profit objective. Not maybe, not might, not I hope it happens. You will hit it. Because at a certain point, the option is going to be worth nothing at expiration if it's out of the money. That is the pathway through the forest that you are on right now. And so slowly but surely, it's going to move in that direction. All right. Well, what happens if UAL starts going up even more, or continues to go up, I should say? Then all of a sudden, that's going to push more value into that extrinsic value of the position, even though it's not in the money. And that's simply because, extrinsic value is effectively determined by 3 things. And I think I've done a couple shows on this, I know I have. Time, volatility, and the proximity effect. And so if you actually, and I'm not going to do this now because I don't have the resources available to me to do it, and I kind of don't really want to. But if you were to look at a Black-Scholes model and really break it apart, what you'll notice inside the model is when it comes to extrinsic value, the 3 factors that are driving extrinsic value are primarily the time factor, the volatility factor, and the proximity effect factor. Yes, there's dividends, and yes, there's interest rates, and those do factor in, but they're very insignificant relative to the 3 primary movers that I just mentioned. When the stock challenges your strike, so in this case, it would be UAL going up closer to the short call, the proximity effect gets stronger and stronger and stronger. And what that's essentially doing is it's pushing the extrinsic value on the position up, because now all of a sudden there's a greater likelihood that call goes in the money. And if a option seller was going to be compensated fairly for that, he or she needs to charge more, because that's where he or she would be taking all the risk. If the short call goes in the money, unlimited potential losses, which is the position that you have on right now. Now, you sold it, a day ago, a week ago, a month ago, whatever. But in terms of the mark-to-market current value of the strategy, it's helpful to think about, what would the marginal seller, be up against right now? What would the next seller be up against for this position? And if UAL goes to, 75, 76, 77, the extrinsic value on the trade has to go higher if this happens in the short term. Now, again, if enough time goes by, that's not even going to matter, because the time effect will overwhelm the proximity effect as you get closer and closer to expiration. Now, I don't know exactly when that's going, when that happens, when the time effect overshadows the proximity effect and things like that. That would be a very interesting study, though, to kind of think about or look at. Like, you have the time effect, you have the volatility effect, you have the proximity effect. Like, at different points in the expiration cycle, which is the strongest and which is the weakest? That's an interesting question that I don't know the answer to off the top of my head, but that would be an interesting thing to kind of look into. I have a feeling it's not simple at all. So hopefully that helps a little bit, Rome, but I would do nothing right now. And those are the reasons why I would do nothing. And hopefully that helps you, just a little bit there. So, all right. So that's Rome. I appreciate you very much. Grumpy Mike's in the house. Argent Purr's in the house. Says hi ho, silver away. Yes, I would imagine. So I haven't traded silver in a while. Excuse me. If I go into silver, so you've got the gold futures up 27. Silver is SI, I think, right? Wow, silver up $1.80 on the day. Now that is a move. Now that is a move. That's a 5% move. That's like a 6% move. I mean, gold being up, 26 is a huge move. That's a 1% move. You got silver up 5% on the day. Man, that's a big, big, big move. So, wow, maybe we should start trading some silver. I don't know. Start kind of slanging them with the Hunt brothers. And, yeah, I don't know. Wow, that's crazy. Yes, Sergeant Purr, that's crazy stuff, man. Wow, hi-ho, silver away, no doubt. Rob Banks in the house. Good day, Dr. J. What's going on there, Rob Banks? I appreciate you, my friend. Thank you so much for being here. Sergio's in the house. Says, hey, Dr. Jim, what's going on there? Excuse me, Sergio. I appreciate you guys, man. Appreciate you guys so much for being here. And, of course, if I can help in any way, just let me know. I'm happy to do it. Mr. 3X says, Dr. Jim is the realist. Man, I don't know about that, but we're trying to do something, I think. And, yeah, and so I appreciate you there, Mr. 3 EK. Or maybe, did you mean something else there? Mr. Threek? Mr. Threk? I don't know. That's a tough one. That doesn't necessarily read phonetically. And so I could use a little bit of help. But Finn Weston House, good morning, Dr. Jim. Happy expiration day. Yes, today's OPEX day. And it's been a pretty quiet day for OPEX day. Like, I expect OPEX to be totally crazy. Like, you're plus 100, you're minus 100, you're plus 200, you're minus 200. Like, that's what I kind of am expecting my OPEX days to be like, especially with the VIX at 19. I mean, now it's only 18, but starting the day it was 19. And so that is just that is not to be so far on this OPEX day, but we still have an hour left. So who knows? But I appreciate you, Finn West. Thank you for being here. Rob Banks is back. Says that is the best hedge ever. Buy a long call and hedge it with another long call. That's what I'm saying. Like, this is next level trading, guys. This is not for your beginner traders out there. So if you're a beginner trader, this is not for you. This is very, very advanced, right? Extremely advanced. It's so advanced, it doesn't even make sense. And so when you buy a call and you can hedge it, you have two options, actually. You can hedge it with another long call, or if you want to go like mega pint advanced, then you hedge it with a short put, right? You finance it with a short put. That's what makes it mega pint advanced, right? And we're not just buying again, we're financing it with a short put. We even have a name for that strategy. It's called the Super Bowl, right? Where you buy a call spread and finance it with a short put. So there you go. It's upside, it's upside. And so boom, done. Next question. But I appreciate you there, Rob Banks. And so Dan says Jim is the best. Man, I appreciate you guys, man. You guys are just going to take all my cash because I got to send you guys all the cash we talked about for you popping these comments in the stream at this very time. So thank you, my friend. Dave S. Oh, Dave S. I think I might owe you an email. In fact, I'm almost positive that I do. I appreciate your patience. Assignment cost is $5 per leg, and your commission is up to $10 per leg. So, yes, I knew that. And 13 cents per option in fees. And again, the fees go directly. They don't even go to Tom. They go straight to the dealership. So you can feel good about the fact that, I mean, it's just a direct payment, like just a straight Venmo into the dealership so that Range Rover gets covered. But that's 13 cents. So if you get assigned, you will be paying one option $6.13. Wouldn't it be $5.13? You don't have to pay the whatever it is. I mean, yes, the commissions are capped at $10 per leg. I knew that. Assignment cost is $5 per leg. Thank you so much there, Dave. So there you go. It's $5 per leg. So again, you saw on the gold vertical that we just did, I paid an extra 2 cents. So I paid an extra $2. That's significantly better than being assigned on both legs. That's $10 plus the fees, whatever they are, a couple cents, right? So, you're talking about $2 versus $10 essentially. And so it's better. It's better to pay a little extra and then not really have to worry about it. And so let's see. Anka's in the house. What's going on there, Anka? I appreciate you very much. And I'm glad to hear that your crab brought in a couple shekels for you. So that's good. And again, we're going to do crabs next week. And I told you that I would, and I will absolutely do that next week. We're going to learn about some crabs together. So that's going to be fun. Dan Stan says, Dr. Jim is greater than Peter Schiff. I don't know about that. He's got the, he's pulling rank on me from a seniority standpoint. I mean, Peter Schiff's I think he's like 110 or 115 years old. So he's got the seniority aspect of it. And so I got to hand it to him in that regard. But I appreciate him. I appreciate him very much. Anybody who puts their neck out there, we're all just kind of playfully jabbing at each other. Anybody who puts their neck out there and puts money in the arena immediately has my utmost respect. My utmost. Yes, of course, if you're wrong, I'm going to make fun of you. As you should make fun of me when I'm wrong. That's the way it works. That's what you sign up for. But, man, if you get in there and you're in the arena, then I have mad respect for anybody that's in the arena. And so Arjun Purse says, when I hedge, I always hedge with doubling down on a losing position. That's how you got to do it. That's how you got to do it, Arjun Per. But the key is you don't call it doubling down. You don't call it, averaging in. Don't call it's not any of that garbage. You're adding a tranche, right? You're adding a tranche. I mean, doesn't that just make you feel better? Doesn't that just make you feel like I'm doing something good? Like I'm doing something that has to be beneficial. But I'm just adding a tranche. Like this was planned the entire time. And by that, I mean, I just figured it out 5 seconds ago. I should probably add, the second tranche in here and let's see if we can't, double up the risk. And so boom, there you go. Done. So Dan Sand says, it is a strategy, Argent. You can't knock it. It's worked for me before. I mean, all kidding aside, so all jokes aside for a couple of minutes, I actually think it is a good strategy to go into positions with, not your full position size and leaving yourself the opportunity to add a tranche, of course, to that position later on down the road if prices deteriorate, if the market moves against you. That makes so much sense to me in my mind. And I mean this in all genuine sincerity. That makes so much sense to me because it's like, all right, think about it. There's only one of two things that's going to happen. These are the only two possibilities. Number one, the market moves in your favor. You get paid. You close it out. It's done. It's over with. That's good. The market moves against you, right? You add a tranche and now you get the full position size or half your position, whatever. You add a tranche and now your overall basis on the trade is better than it would have been had you gone in with the full position at the original entry price. That's also not a bad scenario for you. And so I actually like that strategy a lot, whether you're using it with options, whether you're using it with futures like scalps or whatever. Like I really like that strategy a lot. Now, again, it's been said before that for every gimme, there's a gotcha. All right, so I just laid out 2 gimmies. What's the gotcha? Well, the biggest gotcha there is, if you get paid on the first trade, you don't get paid on the full weight of your maximum position size. And that can be a significant gotcha, of course. Because it's like, you're looking at the whatever, you're looking at the fundamentals, you're looking at the technicals, you're reading the tea leaves, and you're just like, hey, I'm not going to get paid, the full weight of my strategy here. And, that's just the way it's got to be when you're in there, even though you felt really good about the position. And so from a roof falling apart? No, I think we're good. Hopefully we're good. Anyway, so the roof may come down in the next 20, 25 minutes. Maybe there's more property damage than I realized. But something just hit my monitor. I'm like, was that me? Like, I don't think so. Was that one of you guys? I don't think so. But anyway, I digress. And so I like the strategy. I really, really do. And so let's see. Arjun Per says, it's worked great to me. 1 lot and down to 0. 1 lot and down to a 0 lot trader. Yes, there you go. So Dan saying end of day rally for SPX. It's not even an end of day rally. It's a beginning of day, middle of day, dovetailing into end of day continuation. It's not even a rally. It's just a continuation at this point. And so 6,000, here we come in the old E-mini S&Ps. And so Paul's in the house, says good afternoon to all. What's going on there, Paul? I appreciate you, man. Paul, I appreciate you so much. RC's in the house, says, man, I watch. Excuse me. Says, I'm watching as much as I can. Man, I appreciate you so much. You guys are unbelievable. You have no idea how much it means to me that you guys, so many of you guys watch the show on a regular basis. I really can't believe it. I can't believe it in terms of, the people that are watching. I mean, 400 people watching right now. It's crazy. It's crazy. People that email me, people that I meet at the live events, people that, I see randomly on the streets, which does happen from time to time. It doesn't happen very often, but it has happened a couple times. And so that's super fun. It's amazing. It's really, really awesome. And so, man, I appreciate you guys so much. If I can ever help you guys, man, you got to let me know. You got to let me know how I can help you. Email, in the chat, whatever. I'll try to help as much as I can. And so let's see. Dan's saying hopefully it ends well there, Paul. Let's see. Arjun Per, speaking of theory, all right, I'm ready. Let's do it. Arjun Per says, let's go deep there, man. I'm ready. So academically, what happens to the DCF, the discounted cash flow, if bonds become not risk-free? I assume that just means that rates went real high. Okay, so this is really interesting. So when you're talking about bonds, you must not be I have to assume you're not talking about bonds. You're talking about T-bills because bonds are not risk-free, right? When you go out when you start going out beyond, Definitely beyond a year, but let's say 90 days. When you go out past 90 days, it's not risk free anymore because you have price risk. Like you have, the fluctuations when interest rates change, the price of the bond and the current value of the bond is going to change. That happens even in the very tiny, duration of a UST bill over like 30 days or a 4-week UST bill. It's going to happen slightly, but it's, it's not significant enough to kind of register on the radar. And so that's why if you really want to talk about a purely risk-free instrument, it's going to be a 90-day T-bill. That's going to be the one thing that is purely risk-free. Now, some traders might use a 10-year. They might use a 2-year. They may use other things as a proxy for risk-free. Okay, fine, whatever. I don't really have a big problem. There's not usually a huge spread between those rates to begin with, so it's not a major difference. But if we're in theory now, you want to go deep, so we're going deep. It's got to be a 90-day T-bill. Okay, so talking about a 90-day T-bill being the risk-free instrument, what happens if that's not risk-free? A lot of bad things would happen. There are so many things that are from a modeling standpoint, from a connectivity standpoint, that are all kind of connected to and kind of sourced back to the simple understanding that the U.S. government in the very short-term horizon is a risk-free borrower, is a risk-free lender. They would be the lender, actually. Yeah. We're the borrowers. There may be a whole lot of risk in us, but there's no risk in them. That's the theory. That's the thinking, right? If that changes, that changes a lot of things. Yes, rates would probably skyrocket as uncertainty would go through the roof. Volatility would go through the roof. If that ever gets kind of unpinned or, depegged, the risk-free category, the risk-free status of a 90-day UST bill, that would not be good. That would not be good at all. What's interesting about this, though, so now I have to step outside of theory because it's like, man, we can talk about theory all day long, but what we really care about is the practice. Back in, I think this was in 2011. This was during the, it may have been around the flash crash. It may have been like with like the fiscal wall and like all this Washington rigmarole. It's all just theater, man. It's all just garbage. Like they're all just going to keep spending. No one's going to cut the budget. Like they're all just going to keep spending. Right? Except for, DeSantis might cut the budget because he actually did in Florida. But I think he's the only one. He's the only one that's like ever run a surplus in the history of the world. Right? Obviously, I'm being facetious, but it seems to be that way. Anyway, I digress. Back in 2011 with the fiscal wall or whatever was going on, there was a lot of uncertainty going around about fiscal spending and all those kinds of things. So the credit rating agencies actually they dinged the U.S. government's credit rating from like whatever the primo rating is, AAA, AAA star, AAA plus, whatever. They took it down one peg to like AA plus or like whatever, right? And it was like a huge deal. It was a huge deal. Everybody's like, oh my gosh, they're not risk-free anymore. They're not this, they're not that, whatever. And so everybody just assumed, and myself included, at least on the front end, just assume that rates are going to skyrocket. This is not good. All the models are going to blow up. Like we're all going to be on the streets. Like what's going on? And you know what happened? Rates went down. Rates went down significantly because the funny part of the whole thing is when that happened and all this new uncertainty got injected into the market, what did investors and traders and constituents in the market do? They looked around and they said, man, everything is crazy. I've got to park my money somewhere where it's going to be safe. And where did they put it? With the U.S. government. Where did they put it? In the short-term U.S. government instruments. And so what happens when they did that? It sent the price up and the yield down, so rates actually cratered. And it was an incredible exercise for me because I was a professor at that time. I was in my second or third year, I guess, because I graduated in 2009. So I'd be second, third year, whatever. And it was amazing. It was an amazing exercise to go through with my class because they were all like, they couldn't believe it. They're like, this doesn't make any sense. And I'm like, well, let's work through why that doesn't make sense. And let's kind of work through what's going on here. And so it was a really, really cool little exercise in terms of theoretical application, practical application, interest rate dynamics, things like that. So anyway, I appreciate you there, Arjun Per. And so Diamond Dogs 99 says, hey, Dr. Jim, thoughts on selling puts in Celsius? Yeah, this is Errol's jam. CELH. I don't know. We might give it a little. A little something. So they just had earnings, I think, right? Oh, they have earnings on November 5th. Okay, so I'm going to pass for that reason alone. They're Diamond Dogs 99. Let's wait for earnings. Try to remind me when earnings come, and maybe we'll do something for earnings. But wow, talk about, man, look at this. Do companies get to choose their earnings date? So I think companies get to choose their earnings date, right? If that's the case, let's read between the lines here. So November 5th is the earnings date for Celsius. There is something else that's happening on November 5th. Again, it's gonna be the beginning of a 14-week process. But on November 5th, we have the election here in the United States, right? That's a pretty big deal. Like, that's probably going to overshadow any other events that might be taking place on that day. So you have Celsius on November 5th. You have U.S. Election on November 5th. If Celsius can choose their earnings date, which I don't really see any reason why they wouldn't be able to, they're the ones that are, calling the shots here. The fact that they selected November 5th, where they could have chosen November 4th, they could have chosen November 3rd, they could have chosen November 6th, whatever. They chose November 5th. That leads me to believe these are not going to be good earnings. There's no way. And by no way, I mean it's 50-50, right? It's basically a coin flip. But when I think about this, it's like, man, I don't think that they're feeling too good about this because they want the overshadow. It's kind of like the Friday effect where bad news always gets released. Like after the close today, there's going to be some bad news coming out from, another Boeing air, plane part in the sky or whatever. There's going to be something like that happens after the close today because people forget about it. Like it gets overshadowed by kind of the, the fun of the weekend and just not being in the regular kind of Monday through Friday type of deal. I don't know, man. I would have to say they're diamond dogs. I'm bearish on Celsius for the reasons I just mentioned. But remind me when it gets a little bit closer, and maybe we'll do a little something. And so let's see. Argent Purse says that was lucky for Tampa. Yes, it was. Winds going offshore if it goes just south keeps the bad storm surge south of you. That's correct. I learned about all of that. Excuse me. I learned about all of that during the leading up to Milton because it was heading right for us the whole time. It was heading right for us the whole time. And Dennis Phillips, shout out to Dennis Phillips. He's amazing. He's the meteorologist around here, specifically in the Tampa area. I know you've got like Jim Cantori, who I think is more Florida writ large, if I'm understanding my meteorologist well, which I'm not necessarily confident that I am. But Dennis Phillips is kind of the guy here, and he's really good at what he does. Like he's really good at what he does. I think he's a master at his craft. And one of the things that he said is, hey, worst case scenario is this thing hits a little bit north of us, and then the storm surge goes right into the bay, and then it could be really, really devastating. So, I mean, for us in Tampa, we kind of lucked out that it hit south of us, and then the surge was even further south of that. And so we got super lucky in Tampa. But, man, my heart goes out to, my Bradenton folks, my Sarasota folks. It's like, man, that was not good, especially coming around on the heels of Helene. And so hopefully, the cleanup has begun and, as many lives that could be saved were saved and, all those things. But, man, hopefully we get a little bit of a break from Mother Nature for the next little bit. But RC says doing nothing is always the best strategy, man. It's up there. It's 100% up there. It's in the top 3 for sure, and it ain't 2 or 3. And so, yes, I'm right there with you there, RC. RC says perhaps not always, but you know what I mean, man. I totally know what you mean. And so let's see. Jonky 5555 in the house. What's going on there, Jonky or Juanky? I kind of like Juanky. Juanky sounds a little bit better. Hello, Dr. Jim. I like selling short-dated premium with longer DT protection. Okay. But on days like today, the vol crush kills my long options. That's right. Because and plus with the long options, you have really high vega. So they're more sensitive to the volatility changes. And so you can really take it on the chin. I know it would be capital intensive, but what would you think about buying a deep in the money call and put, basically a long in the money strangle, almost no extrinsic, and selling shorter dated around it? So you're buying the strangle to protect yourself against big moves, right? To protect yourself against kind of outsized moves where, the two gotchas are the volatility exposure, which is what you're experiencing today, because you have the higher Vegas on the longer dated options. Like if I just show everybody really quick. But the two gimmies are the volatility sensitivity and then eventually the negative theta on the decay of the extrinsic value. Now, if you go really far out, like 90 days or whatever, that really slows down the decay. So that can really help to mitigate that problem. But at a certain point, like, you're going to have to pay the piper. At a certain point, it's going to catch up to you and you're going to have to absorb, some of the negative costs associated with that. But if we go into like, let me just do, let's see here. Hold on. Let's do like Chipotle. If I go into Chipotle and let's say I do like a 90-day, like a 91-day strangle, right? Like if you look at this, you've got Chipotle at 59, which is right up here. And if I do, I'm just going to go to the expected move, right? If I buy like a 52 put, you can see that has like an 8 Vega. And then if I buy like a 66 call, that has like a 10 Vega, right? So you can just see the Vega on the put side is 8, the Vega on the call side is 10. If I were to do the same strangle in a short-term cycle, you're going to see a much, much smaller Vega. So if I do, what is that, a 52.66? So if I do a 52.66, I'm just doing this just to kind of show people that might be brand new to trading and not familiar with kind of what you put in your comment, which was a really well put together comment, by the way. Thank you for all the context. This might be helpful for people that are kind of just starting out. But a 52.66, if I close up January, let's go into November. I can't do it because I don't have dollar-wide strikes. December. Whoa. Speaking of Juanky, man, look at these strikes in 63 in December. Look at that. I got a 55. Look at that. These Tony Batista markets. Look at this. I've never seen that before. Hold on a second. So I'm sorry about this, Juanky, but we gotta. Wow, this. Have you guys ever seen this before? I've never seen this before. I've never seen more than, man, 2. Like inter whole number strikes between 2 whole numbers. So like, for example, whole number strikes 54, 55, 56, right? Usually when there's a split, which is what happened with Chipotle, obviously, there's a split, there's an extraordinary dividend, like some special corporate event. It's not uncommon for you to see a really odd looking strike, a janky strike, as we like to call it, between the whole number strikes. So you see 54 and then 54, 40, and then 55. So it's common to see 1. Sometimes I've seen 2, but look at this. Between 54 and 50, wait a minute, there is no 55. Wow, this is crazy. So the plot thickens here. So hold on. So you have a 54 strike and you have a 56 strike. Those are your whole number strikes. Between those two, there's no 55. So forget about the 55. Right? Again, these are Tony Batista markets. I mean, it's the Wild Wild West out there. He just does what he wants. Between the 54 and the 56, there's no 55. But what I can do for you is a 55.40. That's 55.4 for people that might be listening to the show. I appreciate you guys, my audio only crowd. 55.40, 55.50, 55.60, 55.70, 55.80, and 55.90. These strikes are separated by 10 cents in stock price. That's crazy. And so anyway, wow, that really kind of surprised me. But anyway, we were what, 52 and 66, I think? So if I look at a 52, you can see the Vega is less. It's only 6. I think it was 8 in the January cycle. In the December cycle, you see it's less. And then if I go down to the 66, we'll just do it quickly. Wow, look at that. There's more of them. And there's a whole slew of these. Yeah, this has got to be the Tony Batista pits. Look at this. He's going to get you every which way, man. He's just nickel and diming you, literally. Dime wide strikes in the Chipotle pits. Man, look at this. So right now you could sell. Hold on, real quick. The 66, because I don't want to lose this point. The 66 call has a Vega of 8, and that I think it had a Vega of 10 in the January. So you have more volatility sensitivity with the longer term. Well, I'm going to come back to the rest of your question here in a second. But look at this. So if I wanted to, I can't even believe you can do this. You have Chipotle at 59.29. If I wanted to, I could step in and sell a 59.10, 59 even vertical spread. I could sell this. Look at this. This is crazy. We're not trading penny stocks. Like, I'm not trading crap coins. Like, this is Chipotle. This is like one of the S&P 100 stocks, I think. Or maybe one of the S&P 300 stocks. Definitely one of the S&P 500 stocks. Look at this. I can risk 5 cents to make 5 cents on a 10-cent wide vertical spread in Chipotle. This is the craziest thing I've ever seen. I mean, I've seen some wild stuff. I don't think I've ever seen anything as wild as this. I kind of want to do it before they disappear. Because, I mean, Tony Batista, he's gone for the weekend. This will be gone on Monday. Like, he's just going to shut it down. It's going to be like, it never even happened. I don't know. Maybe we'll come back on Monday and do that. I gotta think about this tomorrow. This is just the craziest thing ever. Anyway, let me go back to what you were asking me, Joanka. Sorry about the tangent there, but man, that was really wild. And so, all right, so you're wondering, you're buying a deep in the money call and put, basically a long in the money strangle. Well, that's an out of the money strangle. You could do it in the money if you want to. I set mine up out of the money. You could do it in the money, which is almost no extrinsic. Yes, that's correct. You could flip it and do it in the money with no extrinsic. And so that way it will decay potentially even more slowly than what you have with the out of the money. And then you would, selling shorter dated around it. Yes, you can do that. You can definitely do that. And it's going to achieve what you're trying to achieve. It's going to give you that protection against a huge move, either direction, because you have both sides covered. What's the gotcha? Well, there's two. There's the volatility sensitivity, and then there's obviously the time. But because you're doing in the money, and I didn't quite read this the first time, there's not as much of a time element because you don't have as much extrinsic value because they're in the money. So there won't be a whole lot of decay there. The trade-off there is they are extremely expensive because you got to buy all that intrinsic value, on the front end, which is not necessarily, you're not going to necessarily lose that money because you got the long call and the long put, I should say. They're going to cancel out. And so it's not that you're necessarily risking that capital, but you have to set it aside. It's capital intensive. It's not buying power efficient, those kinds of things. The thing that I really, really don't like about it, though, is a better way and a simpler way, in my opinion, would be to just be smaller with the things you want to do with the, kind of trading around it with the shorter dated options. Like I would just shrink your size down there. And so that way you don't necessarily have to have all these kind of, I wouldn't necessarily call this exotic, but I'm going to call it exotic because I can't think of any other good word to use right here. You wouldn't necessarily have to do these kind of exotic hedges or these exotic, complementary positions to kind of augment what it is you're trying to do. I would try just getting rid of that and shrinking your size down and really simplify the process. I mean, I don't hate what you're doing. I think it can definitely do what you want it to do, but you just have to understand the gotchas. You're setting aside a lot of capital. You have the volatility sensitivity, which you've already talked about. And, so those are some significant drops in my opinion. And so, let's see here. JN is saying do it. Oh, that's funny. I glanced at that really at the bottom. Maybe we'll do it next week. I'll take a look at it. Yeah, it was from the Anka saying it's stock split. Yes, but still, I've never seen that. Have you seen that before, Anka? Have you seen 10-cent increments in the strikes between and we see a bunch of them. They're everywhere, and so that's crazy. And so Dan Sands in the house says my silver butterfly went from worthless, to crazy green. I'm loving it. Well, there you go. 100% there, Dan Sands. That's awesome. And then Dan Sands says that's true at RC. Peter Leger's in the house. Peter Leger says the long call hedge with a long call is called a Texas hedge because everything is bigger in Texas. Yes, there it is. I think that's what we should call it. A Texas hedge. That's awesome. Yes. That's the first time we've double dipped into the butterflies like that for earnings, George Costanza style. So we may be doing that again in the future, which I mean, we're going to lose money real quick. And so definitely you're going to want to not miss the show. But Flower Power 2222 says, gotta love the word tranche, Dr. J. The word even sounds French. Yes, it even sounds French because it might even be French. And so that's correct. And so, when you're using words like tranche, you're using words like exotic, right? You've got usernames like Joanky. It's like you're just in a different category of people, man. You're just, you've kind of separated yourself. Like you are the differentiator at that point. And so, yeah, 100%, man. I'm right there with you. So Dave S. says we got a new level for support and resistance around 585 on SPY. Would you consider a 0 DTE iron condor or butterfly? So I don't love the short iron condors. I know that the research team has done a lot of research on short iron condors and they could work. I think some people put them on like right after the open. Some people put them on like right before the close. Like they're usually pretty wide. Like there's a number of ways to do that. I don't personally love the idea. And this is why you guys don't see it on the show. I don't love the idea of selling really short dated premium. 0 DTE, 1 DTE, whatever. So a butterfly, like what we did where you're buying expected moves, whatever, playing a directional move, I don't have a problem with that at all. I think you can get some nice wins like we did today with Netflix. But, just be aware that it's harder than it looks on paper. The selling of the premium, though, I don't love it because, and I think the research really backs this up, when you look at all of the, the great results that the research team has shown with like, just a standard strangle, just a run of the mill short put, whatever. And you look at all the results and it's like, man, it's the first half of the cycle that's oftentimes driving those results. That's why managing at 21 days to go is so effective. That's why we oftentimes see less volatility in the first half of the cycle. That's why, the first, 50, 60% of the expiration cycle from 45 days to 21 days is just so effective at moving us forward towards our objectives. Now, I'm okay with, maybe testing out some different things like, getting in at 35, getting in at 25, whatever, experiment with some different things. I mean, we did a 1-1-1 the other day, like a week ago or 2 weeks ago, or like a month ago, whatever it was. We did a 1-1-1 where we got in at 21 days to go. Like, man, I had to sign all kinds of waivers. I had to sign all kinds of like liability clauses. Like I went outside of my contract in so many different ways, but we signed it all. And we did it all for you. We did it all for you guys. So we did the 1-1-1 in at 21, not out of 21, but in at 21, just kind of feeling it out, just kind of seeing if that makes a little bit of sense for what we're trying to accomplish. So I don't have a problem with any of that. But when you start to sell the premium at 1 or 0 DTE, I don't really love it. And so, I may stand alone in that regard. And, I may get some, some emails from the Salznoff Enterprises this weekend, or maybe even some text messages. But yeah, that's just the way it is. What are you going to do? But I think I've said tranche enough on the show today to kind of nullify those emails and those text messages. Wow, I'm going to get done with all the questions. That's unbelievable. And so Boston Frank says QQQ is almost unchanged from the open today. It's 494. The 52-week high is 503. There is resistance there. There you go. And Dave S says, yeah, I will look and I'll be right back. Dan saying, I think Celsius has the same energy as Red Bull had in terms of popularity. Yes, it might. A lot of people really like it. I've had a couple. It's not bad. I mean, they're basically all the same at the end of the day. And then JN says, no way like your theory. Not sure how to take that, but I appreciate you, JN. But JN wants me to do the 10-cent wide spread. I can't do it right now because I'm out of time. But Anka's in the house. Jeff Haas in the house. And then Anka's in the house. And you guys are in. We're done. I can't believe it. We did it. We did our victory laps. We did Netflix trades. I got through every single comment, every single question. It's never happened before. This is the first time in From Theory to Practice history, and we did it. The extra long show, the super wide lanes, Elaine Bennett style. Now I got new comments coming in, but they don't count, right? We closed the curtain, right? We shut the door. It's over. It's all done. And so we made it through. I appreciate you guys so much. Thank you guys for being a part of what it is that we're trying to do on the network. It's only because of you guys that we can do what we do. So thank you guys so much. If I can help you guys in any way, please shoot me an email. I'm jschultz@tastylive.com, or we can connect on Twitter. I'm at jschultzf3. I would love to hear from you guys on there as well. But stay tuned. We do have Tim Knight coming up next with trading the charts. In the meantime, guys, trade them small, trade them heavy, and stay generous. We'll see you guys on Monday.
The beauty of Thinkorswim was that we were different. From the name to the front end technology was clearly what we wanted as traders. Second time around, I think we did a better job. Yes, we are known for our ability to support complex derivatives traders, but we also have the tools for somebody who's brand new who wants to come in on the first floor and work their way up to the top of the building.
Are you on a quest for trading enlightenment? Driven by an unquenchable need to find the twin flame to your chosen strategy?
Our Where's Bat live event is the search for trading's ultimate holy grail.
Do you have what it takes to find the elusive bat as we visit 3 cities?
Join 6 Tasty Live speakers
as they present 6 unique strategies
and 6 unique clues using games and probability
to lead to the ultimate prize. Sign up for this free event today at tastylive.com/events.
Golf putt, normal distribution, reduce speed, increase standard deviation for a wider angular strike. If you think like a trader, we've got your back. Tasty Trade. Join the club, genius.
Hello, everybody. Tim Knight here. Well, there's a theme today. It's this. This was a precious metals week, and I have some more things to say about it. But it's been a terrific week, and it's ending with a bang. And, I've had this show for ever since Tasty came about. 12 years ago, 15 years ago, I've lost track. And we've changed the name of the show from time to time, but I mean, they could honestly rename it Short Stocks Buy Silver, and I'd be fine with it. I mean, that's going to be a theme for the foreseeable future. It's something I've hit upon many times with those ratio charts. And of course, I think it was on Monday, we did a show completely dedicated to precious metals. And the timing was good because it's a fantastic day, especially for silver. I've got a bunch of charts ready to go. Let me put this is such a beautiful thing because this is I think it's a half kilogram of silver, but it's got a big old bear on it. So that's very fitting, very beautiful. All right, let's jump into the charts. Here's the spider right near lifetime highs. Looks like another lifetime high close. Same old. Diamond is the same deal. Here's the DIA. Zipping higher, and it looks like an intraday lifetime high and almost certainly a lifetime high close. But I'm still so short I could jump off a nickel, except for silver. And my shorts are holding their own, which is pretty cool. If the market ever falls, whew. One thing I'm glad I avoided was Netflix. I bought Netflix puts back on this day. And it was good because it fell and it fell and it fell. And I sold the puts here. And because to my eyes, it was down in the lower part of the range. I figured good enough profit, I'll get out. Yesterday, I kind of started kicking myself because it fell more dramatically. And I wondered just how mad I would be after earnings came out. I'm not mad. Earnings, we blasted higher on this. So dodged a bullet there, took profits and avoided a nasty loss. But Netflix is up to its own lifetime high. I would note that it is all just about to kiss this midline right here. This channel goes back a couple of years. We're getting quite close to that midline again. So if I had the good fortune of owning a lot of Netflix, I would definitely consider taking some profits here because that's a pretty interesting sell point. But anyway, no position, no harm done. By and large, earnings have been about financial institutions this week. And by and large, they've all been going up. Blackstone BX is something I've pointed out as a good long-term bullish position, and it's at another lifetime high. It's up over 2%, having come off this very pretty cup with handle pattern here. Rather similar to what it did here, the difference being that unlike the last time when it fell for a few months before getting it right, it did no such thing this time. It just zipped right higher. Also, and I've said before, I never thought I would point to PayPal as something good to buy, but PayPal is also doing well, up about 1%. Unlike BX, nowhere near its lifetime high, but it's hammered out a nice little base there, and it's pushing off of that. So yeah, being in the anything financial has been a good move for a long time, but of late it's just padding those gains. Power, energy, especially nuclear energy, is very much in vogue right now. One item that I'd never really heard of, but is having a very good day, is Net Power, NPWR. It's been a terrible stock for a very long time, but it's bouncing strongly right now. But probably not the best of long-term holds because this seems to be more of a dead cat bounce than anything else. One extraordinary stock has been Sam Altman's Oklo, which a month ago looked like just hot garbage. This is one of those, looks like a SPAC issue to me, I suppose. And in typical SPAC fashion, went up for a while, then collapsed. So this is just junk, but it's not junk anymore. It's gone up about 300% over the past month. And this is nuclear. I think Net Power we were just looking at, or New Power was is natural gas, but this one is nuclear focused, and obviously the AI shtick is what's fueling this beast. because I think the basic idea is that America turned its back on nuclear power like half a century ago, and now it's starting to get cool again. So yeah, uranium and nuclear in general doing very, very well. Another reason I'm feeling in a good mood, even though this is a very, very green day, generally speaking, is the charts have been pretty well behaved with respect to China. The Hang Seng Index, which I never looked at until about a week ago, I've talked again and again about this gap. And my view was that if we're going to have a target for the drop, this gap is a good choice. That worked out nicely. Let's zoom in. Here's the gap, 19954.06. And then the low yesterday, I haven't done the math, but it's like 99.99% right. The low almost exactly touched the gap, and then whoop, it's going up. So pretty spiffy. Yesterday, based on just this graph, I trimmed my one remaining China position PDD to something small, just sentimental, and also because I thought it had more downside eventually. And I've added that back today. Yeah, it's bouncing. China stocks are bouncing, but I think it'll be quite short-lived. Here's FXI, for example. We bottomed yesterday on this, went blasting higher today. Another gap. I think that gap's going to be resistance. I would not be at all surprised to see China resume weakness after this brief dalliance with green. Although in China, red is up. Is that bizarre? A lot of people don't know that. You look at the quotes, and red is good to the bulls there. Do not know why, nor do I know what down looks like. Maybe they completely reverse and make that green. Who knows? But yeah, the only China position I've got is PDD, which blasted higher today, but has been softening all day long. We pushed right up here, and then we got this big old red bar. So I'll get out of it if we get down to this gap. I think that's a sensible place to say thank you very much and exit stage left. Sometimes I call the stocks back in 2020 that blasted higher thanks to COVID, ABC stocks, accidental beneficiaries of COVID, basically right place, right time, things like Zoom, things like Peloton, and things like Moderna. And Moderna was the hottest thing in pants back in 2020, as you can see. It went from being in the teens up to almost $500. Well, the pants are gone now, and it's been just getting demolished ever since. I guess we can conclude this is a one-hit wonder, kind of like Zoom. It was in the right place at the right time, and the time has passed. So mRNA down about 90% from the peak, which was in the summer of 2021. So yeah, COVID-19 is like, it's like 8-track tapes and leisure suits. It's just very out of fashion. In sharp contrast to this, Toast, which I've mentioned as a bullish play based on its breakouts, having a good day. It's up over 2.5%. And I've also mentioned Woof, which I might have just talked about this yesterday, but it's up almost 10%. So yeah, you're seeing more bullish stuff than you're accustomed to. But I remain bearish on energy because I don't, energy and precious metals, I do not conflate those two. I think gold and silver have gone up and will continue to go up for very dark reasons. And I think crude oil will go down for very dark reasons. And crude oil has been doing that. Now, I specifically said during this bounce that I see this as just a sawtooth, lower highs, lower lows, and wanted to take advantage of the next drop. So remain in APA, long puts on that. Halliburton, HAL, Occidental, OXY. You've seen these a bunch of times, I know. And Schlumberger, SLB, which had earnings this morning. And the stock shot up and then fell. So it's down over 4% now. And look at this. You know me in gaps. There's the gap right there. We got rather close to it today. down we go. So that's looking better than ever. So yeah, my portfolio is very simple: short, and then silver, long. That's it. Now let's turn our attention to precious metals. After EWZ, one more thing. I'm still hung up on energy. Brazil, EWZ, very much at the mercy of crude oil, continues to hammer out a beautiful head and shoulders top. So we'll see if that finishes or not. But that's also, even on this very green day, this is down 0.7% on EWZ. Now precious metals. All right, record highs, which is a phrase that usually makes me nauseous, but when it comes to precious metals, and I'm very happy to say that. So gold, by way of GLD, lifetime high, up over 1%. But silver is up about almost 7 times that much percentage-wise. And I've talked about catching up with gold. And it's finally happening because SLV's history recently is really cool. We had this blue trend line here. And we were below it. It was resistance. Finally here, we had what I call a phase change. And it changed, or a roll change. It changed from resistance to support. So it did so here, blasted higher, and then stumbled for weeks, and then started to fall. But what happened? It found support at that blue line again. And so here on the 9th, it bottomed out, and then up, and then up. Nothing dramatic, just kind of mulling around in the same zone it had been in the weeks prior, and then today came, where it put on its sneakers and just jumped right over, made a new gap, which is what this dashed blue line is all about, and essentially opened at the low and is looking to close near the high. So very good day for silver. I hope it doesn't turn out like this one. That'd be kind of a drag. But I think the difference is that we have completed the whole pattern, and we're above even these levels here. So this is an honest goodness breakout. At some point, I have every belief that it'll stumble its way back down, even as low as the gap, perhaps. But that's okay. The big pattern is what counts. GDX, the miners, no surprise, having a good day. And early this week, we did a special on Monday in which I featured 5 specific mining stocks. Every single one is up nicely this week. DBD up just today alone, almost 6%. Ego up over 4%. EQX up over 5%. These are all looking good. SKE up today alone, almost 5%. And Wheaton, WPM, also up about almost 5%. And I made a little pretend portfolio on Monday of these 5 stocks, of these 5 mine stocks, and annualized the gain so far is over 200%, which I know is a silly exercise, but it's real. It's just simple arithmetic, and so that's pretty impressive. And this is a especially good-looking chart. Let's wrap it up. Just a few odds and ends. Continue to be quite bearish on Dell, which even on this, the NQ is up triple digits. Dell down almost 2%. So that gap looking real good. NVO, Novo Nordisk, beautiful head and shoulders top on this one. And SMTC, even with every gaga over semiconductors, this one's reversing away from resistance. So that looks really good. But at this point, our hero is silver. There's the long-term continuous contract on SI. And as I said, this enormous cup with handle pattern and this pattern within a pattern right here, both are completed with great fanfare. And that's a great way to end the week. So I'll see you Monday. Thanks, as always, for swinging by. Bye-bye now.
Rock, paper, scissors? He just played paper. He'll do it again. No, rock, Men statistically play rock, but he played paper and lost, and the mind works in patterns. He's going scissors. He knows I know he'll go scissors, but knowing I know he knows.
Scissors, shoot. I thought we were doing rock, paper, scissors, shoot.
It's always rock, paper, scissors. If you think like a trader, we've got your back. Tasty Trade. Join the club, genius.
Regulation time may have expired, but the conversation is just getting started. This is Overtime, the post-market scrimmage for market junkies. Join Chris Vecchio, Ilya Spivak, and me, Dylan Radigan, as we analyze the X's and O's for everything from earnings to politics to macro events and more. Nothing's out of bounds on Overtime. We break down the news to provide you a playbook for your trades. Watch Overtime Monday through Thursday only on tastylive.
The amount of time I spend interacting with our customers via email or anything else is pretty much my entire life.
To be so powerful and so valuable, and then to be that approachable, just amazing.
Where else are you going to be able to email a CEO, get response back?
But you know what? Before he even knew who I was just some idiot trying to learn how to trade. And he still would email and help me learn and everything like that.
Some people say it's nuts, some people say it's insane. You know, that's what I do.
Oh, yeah. Tasty Nation, good morning.
You can get up to $4,000 when you open and fund a new account with Tasty Trade. That's 4,000 buckaroos, 4,000 bills, or clams, 4,000 in dough or cheddar, not the cheesy kind. 4 large, 4K, 4 grand, which is no small thing. Open and fund a new Tasty Trade account and get on the platform for traders who just want to trade. And did we mention a bonus of up to 4,000 smackaroos? Tasty Trade. Make your move.
Ring the alarm, hey, ring the alarm, boys. Turn up the charm. Listen up, y'all. Get out the damn stall. It's the last call. Hey, the last call. The last call. The last call.
We are here. It's not Tom and Tony. It's Victor Jones. It's Chris Vecchio. We're here for last call to take you through the final 30 minutes of the trading day. My friend ChatGPT over here. Great with the data on the housing market, Victor. How are you on this blessed Friday?
Not ChatGPT. I'm Black GPT. I'm doing terrific. My friend. Hi-ho Silver. Silver's out on a breakout. I know I'm probably punching ahead a little bit. I'm feeling good. How about you, man?
It is a good day. Got a moderately clean bill of health. These random lumps popped up on my back last week, and they were moving all around like little hockey pucks under the skin. One was the size of a ping pong ball. Ultrasound, MRI, X-rays the past few days. It's nothing. It's like a bad muscle tear. It's a hernia. So I got to get some surgery. But it's not cancer,
Not
right?
nothing.
I'm not like looking at the birds and saying, I'll miss you, trees. It's so it's a pretty good Friday. Now, we're not going to talk Mets, of course, because that's a funeral unto its own right. But it's a good day for stocks, somewhat to speak, Victor. It's a modest gain of about 0.3% for the S&P, a little more than 0.5% for the NASDAQ as we look to the charts here. But you mentioned the big move on this session is what's going on in those metals, not just gold extending to a fresh all-time high up by 1.01%. Good for the good guys. Better news for those silver longs here today. An astounding 6.5% gain on the session thus far. Vic, I know that you've been dabbling in that side of the pond for a little while now. How does this Friday feel for those mining positions you own?
It's a good day. I'd been, anyone that watches the Price of Truth knows we've been wanting to participate on a potential breakout. I know it seems crazy because the silver's been knocking up around 32 or 33, probably 3, 4, 5 times, and it hasn't broken sort of upside resistance. And a lot of people that tend to be range-bound traders would say sell upside calls against this side of the range. But I think we had sort of the opposite thought, that the possibility we could be in a reflation or reinflating sort of dynamic was high. So, we did the thing that tasty traders are not supposed to do, which is buy upside call spreads in silver. A nice little breakout today. Who knows if we close and then we got to hold Monday session. But PAAS, Pan American Silver, something we've been messing around with, which was up big today, a little bit over 10%. CDE, just all the miners really. It doesn't matter if it's copper, gold, or silver. Anything that's linked to a hard metal asset, had a pretty decent day and outperformed the market today, Chris.
Outperforming the market handily. GDXJ is the top performing sector ETF that I track. I keep a list of 25 on hand. It's up 5.3% right now. That's not too bad, or 5.26% actually now. Gold miners are the second best performing ETF on my watch list, up by 4.34%. The more traditional metals and miners, XME, that's up by 1.61, breaking out to, if we were to just take a quick look at that weekly chart, a new all-time high. Just about there, Vic. Not too bad. Have you been watching the sector rotation recently here across this past week or 2 weeks as the S&P's pushed to new all-time highs?
Yeah, of course. I think I just think there's an opportunity here for small and mid caps. And that's what you've seen this week. I don't know if it necessarily expressed itself very well in the majors. So in things like Russell versus the NASDAQ, you may not have seen it. But if you were to look at some of the miners I just talked about are not necessarily majors. If you were to look at some of the nuclear stocks, which are basically, SMR is a small cap, CCJ I think is a mid cap. I could give you a handful of names that have had double-digit returns this week, and they're all in the small to mid-cap category. So while the Russell and the NASDAQ didn't tell the rotational story at the top level, that wasn't necessarily the case if you looked under the surface. And I just think we're seeing just explode. Some of these underlyings are exploding on a day-over-day basis or week-over-week basis, man.
The advanced decline ratio, one of the hallmarks of the market in late 2021 going into 2022 was that as the market was setting new highs, the NYSE advanced decline ratio was beginning to fall. And that was one of those technical divergences that was a red flag for traders who were long the index going into the first week of 2022. You get those Fed minutes and then the Russia war in Ukraine, and eventually inflation fears begin to spike up there. Sure enough, it was a bad year for stocks. So as stocks have climbed to new all-time highs recently, at least in the S&P 500, the NYSE advanced decline line has been following right along. Breadth has been great. You look to stocks above their 20-day or 50-day or 200-day moving average, that continues to float up. And even some of the equal weighted indexes here, we go to a ticker like RSP, for example, for the S&P 500, it's just been grinding and grinding and grinding higher here to the upside as well. So yes, names like NVIDIA have seen some back and forth after the ASML earnings and the TSM earnings this week. But broadly speaking, you've had great signs within the internals of this market. Home builders up near highs, industrials, XLI up near highs. It's a thinly traded ETF, but consumer cyclicals here, PEZ, up near all-time highs. It's tough for me to paint a bearish picture for this market when you look at the internals right now, confirming, I think, a mutual reflation thesis post-Fed.
Yeah, I think on a nominal basis, I'd probably agree with you, Chris. I don't know that it really matters, and tasty traders probably don't care if numbers going up because of a rising liquidity condition or if numbers going up because of a quote unquote strong economy. The point is, number goes up. But I mean, I could point to several smart people out there, whether it's like Hugh Henry or just a handful of other people who have called out that the market is running on fumes here. That be very careful about trusting these nominal price highs. I look at the yield curve right now, man, and the fact that we're like 10 basis points between the 210. If you still believe that bonds and interest rates even matter in this Frankenstein world of monetary repression, if you believe it matters, well, the yield curve is not necessarily telling you we're in a super strong economy. I don't think the 10-year would be at four and change if this was a super strong economy. The long-term average and the distance between the 2 and 10 is about 100 basis points. So if we were in a strong economy, to me, if the 2 years at 4%, the 10-year should be somewhere near 5%, and that's not necessarily where we are. And some part of me wonders if we got to 5%, Chris, in the 10-year, what would what would that mean for the economy? Would that be a super strong headwind? I could make the case it probably is. So I don't know. I think there's some signals that while nominal price does go up, that perhaps there's always some risk in the marketplace, right? And not all signals are going to point to green all the time.
It's interesting that bond yields this year, they bottom right around the Fed meeting back in September. We got to go there real quick, though. A working thesis of mine for so many months, we talked about this all the way back to June after the Trump-Biden debate, that the bond market was going to be more sensitive to, Trump's odds of winning. If bond yields are going up, look to see if Trump odds are going up as well. And they've soared this week. Mm-hmm. What do you make of this huge bump here? Is the bond market, you say tasty traders don't care about whether asset prices are moving for reasons X, Y, Z. If the vol's on the screen and you get the right price, you're going to want to get filled on a trade to take advantage of the situation. But if there is an exogenous influence like shifting election odds, do you think that's something we should be concerned about? Or do you think that's perhaps an opportunity here on either side of bonds, given the move we've seen over the past, say, 3 or 4 weeks?
I don't know. To your point, I think on or around September 25th, you and I talked about this offline. You saw basically a stop and reversal of Trump's odds in a lot of the prediction markets. You saw a stop and reversal in stuff like DJT. I don't know that I would directly attribute the rise in the long end of the curve to Trump's odds. I'm sure I just feel at some level these are the same candidates from the bond market perspective. While the CBO says that Kamala Harris's budget is only, its impact to the market is like, or to the debt is $3.5 trillion or something like that, and his is $7 trillion. Well, that's because she threw in a bunch of pay-fors like the unrealized capital gain tax and a few others that are likely not going to move through Congress unless they get the trifecta. So really, if you throw out the stuff, the pay-fors that they're probably not going to get, these are probably the two same candidates from the bond market's perspective. So I don't know that I believe that the move in the long end was entirely due to Trump or repricing his odds. I sort of just see it as, a couple of different things. I think the market rejected the 50 basis point cut. The bond market did. I think everybody sees once we get through this election, we got more spending coming. It just depends on where it goes. And so I think the bond market's reflecting that.
The odds of a Fed rate cut in November are more or less crystallizing here, despite the data that we've seen this week where the Atlanta Fed GDP growth tracker for the third quarter was bumped up to 3.4%. Odds of a 25 basis point rate cut have gone up from 89.5% last week this time to 92.9% here as we look to close the market. So I don't know if the market really cares about the Fed cutting in November and December. I think it's more concerned with the longer tail of those rate cuts. Mm-hmm. And I'm with you. Like, you look at both candidates. One says let's spend, the other says let's spend more. Net, they're both spending a ton of money. That's in the deficit. So do we really care if there's a big difference? At least from the market's perspective, where the money gets spent, perhaps the different outcomes. But bonds, though, either way, it's been a really rough few weeks for bonds. There perhaps are opportunities still, Vic. This to me is really interesting. Heading into next week, you got like a 53.5 IVR here in ZBZ4, and you're right pinned near the midpoint of the 6-month high-low range. So I've been trying to operate in and out of the iron condor here. It's not been fun trying to sell some put spreads, which I also have doing in ZN against this week's lows. The volatility, obviously, the P&L is swinging a bit, but we haven't broken through the lows on Monday. I think the condor is the better bet. Just a lot of directionally neutral chop in bonds for the foreseeable future because the economy is doing better than I think a lot of people feared where we were in August and September at points after that slightly weaker than expected non-farm payrolls report on August 2nd.
I would probably agree with you. I kind of like the directionally neutral trade in bonds right now, and it's probably for a different reason. It's for the reason that I was looking at some positioning and some surveys, and it seems like most of the market is in the position of betting on the steepener, which makes sense if we're somewhere between in single digits and the difference between the 210, that you would see the longer end, whether it's the 10 or the 30, start to lift. The problem is everybody's on that trade. Mm-hmm. And, I think it's possible we see a little bit of sideways action. I'd rather bet the iron condor than sort of bet bonds directionally in the short term. In the long term, I still think I want to be positioned for the 10-year headed towards 5%, which means bonds probably do the same thing.
So if bonds are going to 10%, I mean, or if 10s are going to 5%, right? Got that backwards. Then we are, if the 5s are going to 10%, we got a real problem on our hands, right? I'm not nearly short enough ZF right now. But if we're going to 5% on the 10s right now, how does that impact your positioning for other assets? Is that an asset inflationary environment, reflation, or is that outright commodity inflation more akin to 2022? Does that impact your view on equities right now where, I'm looking through the high options volume here today. It's the usual suspects, the NVIDIA, the Apples, the Teslas of the world. There's some Amazon in there. When TLT is higher on the list than a name like GDX, it's a pretty quiet day. So in that consideration, when you look at some of these individual equity names, if you're that bearish on rates, do you see any lulls and vol in the short term on a day like today, perhaps as an opportunity to get some downside exposure in a name like Apple that's up 1.22%?
So the answer is yes, but carefully. So I like being overweight stuff where there was value. Unfortunately, a lot of the value has been extracted from the market over the last couple of weeks. So most people know, like, my positioning was long China, long materials, which includes a lot of the miners on both the gold and copper side of things, and just added silver, and then long nuclear energy, and maybe a handful of other things, and very, very cautious in technology. I don't have a ton of exposure in the whole AI trade. To me, the second derivative of the AI trade is how do you power it? And so if the AI trade's real, then you got to go find some energy. And I think over the last couple of weeks, you've actually seen the market wake up to the idea that, holy shit, all these data centers that we think we're spending all this CapEx money on, and we need to power these things. And I think that narrative finally fed into prices. So that's where I've been hanging out. But I think you got to be careful, because if everybody's going to keep spending, man, you got to be careful against trying to bet the rollover. So I'm just trying to find areas that are valuable or have value relative to the high flying AI stocks. What about you, man?
Right now, I'm still just maintaining a lot of bullish high beta exposure in equities. A lot of my core position in stocks, in both the Tasty Follow account and then incidentally in my PA, would be in upside call exposure in the S&P and the NASDAQ, which were established immediately after the Fed meeting, looking for ESH5 contract to trade up towards 6K. So I still have like 70 something days to expiration on that trade. And the fact that we're within a stone's throw of 6K and ESH5 and the time that they're still left in the potential position, given the sector rotation, I'm pretty comfortable holding onto this bag heading into the weekend, even though the last several weeks, you've had the real consideration where there's geopolitical risk in the market, but it feels like that's slowly dissipating. And I say that because of what we're seeing in terms of oil here today. Vic, oil is down 1.61%, but perhaps the more important signal we're getting is that there's been this market decline in volatility. It's actually the lowest volatility has been on an intraday basis as measured by IVR since right before Iran attacked Israel on October 1st. So that to me is a tell that perhaps the market has decided this particular episode of Middle Eastern kabuki theater is over. I call it kabuki theater not to diminish the humanitarian impact this has obviously had across the region, but because this is very well choreographed. Israel saying publicly, we've identified the targets. The U.S. saying publicly, they're not going to hit anything oil or nuclear. Iran saying, please don't hit anything oil or nuclear. That's our red line. Israel confirming, we have a plan. It's not oil or nuclear. So something's going to happen. It doesn't seem like it's the type of thing that could be escalatory. At least oil traders are telling us we don't need to really consider it, though, as part of the calculus in the way that we were just a few days ago. When you look at oil and you look at commodities broadly here, I know silver is doing a lot of heavy lifting today, but some of these commodity ETFs have really eroded in terms of their price levels from where they were just 2 weeks ago. Is that giving you pause on your bond outlook, or is this just a temporary setback for something like oil as we wash away the geopolitical risk premia and then get re-anchored? Which is, I guess, supposed to say, would you be looking at an oil decline as an opportunity to sell puts down here eventually if we fall back below 70 in a considerable manner?
No, I think if we get to like low 60s, maybe even the 50s. But I think Tom's had a really good sense of the oil market here.
Hold on. You just said 50s?
If we get in the upper, I'm saying if the bottom falls out here, I would not be selling puts here. Maybe if we get into the low 60s and even upper 50s, we get to 59, something like that, I would be. And it's not because I feel like the demand picture will change or that's an interesting area to sell from a price perspective. I just think the odds of us refilling the SPR increase the closer we get to 60 or even below it. So I think those are good levels to probably start. There would be a fundamental catalyst, I think, to put a bid in the marketplace there. I think if we go too low, what'll happen is we're gonna start to see the rig count go down, and I don't think anyone wants to see the U.S. rig counts go down. So I think there's a fundamental reason for us to want to have a little bit of a bid in the oil market. Maybe I'm crazy.
Well, this is also a good opportunity perhaps to refill the SPR, which it's not really supporting price like it had been. But 68.69 here on CLZ4, 74.8 IVR Vic. We're heading into the last 8 minutes of the trading day here, a little bit less than that. The S&P giving up some of its gains now. Go out to that 5-minute chart here on the screen, 59.03 or so. Vic, just to circle back to this Israel-Iran conflict and put a bow on it before we head out for the day, are any of your positions whatsoever informed by or placed based on geopolitical risk right now? Do you even have a small hedge in your pocket, like in case things go sideways or get resolved?
No, I'm sure I was short. I mean, I had some put spreads on crude oil. I think it was long 70, 67.5, a real tiny little put spread on crude oil, but that's only because I'm long energy stocks and I like to hedge that energy exposure with crude oil. So it wasn't like I was calling, lower crude. I would just put something on to hedge energy. No, I'm not. I don't love the idea of trying to fade the geopolitical risk premium. I don't think I'm smart enough. And I think there's a risk of just something going wrong. I know this is highly choreographed and there's a bit of kabuki theater, but there's always the risk that just you get collateral damage, and it takes us on a course that harvesting the geopolitical premium is not going to be worth it for me. So I've decided to stay out of that game, and I'm playing energy stocks, but I don't want to try to play the fade the war game.
You playing energy stocks individually or through the ETFs? Well, don't give me that credit here. But ETFs or the individual like CVX, Oxy, et cetera?
Individual. And so the reason is XLE is like 50% two companies, and they're the big diversified energy names, the Exxon Mobils and the Chevrons. I think that those two make up 45% of XLE. So to me personally, if I wanted exposure in XLE, I might as well just go out and buy those two companies directly and have a little bit more beta, because you automatically have the idiosyncratic risk. The whole point of an ETF is to get rid of or diversify away from idiosyncratic risk. But if 50% of an ETF is two names, you haven't diversified against that. So why do the ETF? Why not take on more beta exposure if that's your game? And I also don't think those are very interesting names either. So to me, I wanted something with more beta in energy. So I'm in stuff like MRO, Marathon, which has a higher beta, lower market cap, Valero Energy, Oxy, Devon Energy, Apache, Halliburton, a few of those things. So my exposure is sort of high beta energy and nuclear.
Vic, I know we're going to talk about this next week, inevitably. We're going to be getting back together for first call on Sunday night. You're leading the ship there. Also, the Price of Truth on Tuesday. You do that every Monday through Thursday, but I'll be with you on Tuesday, as I usually am. Chinese stocks. This was something that was in your bag before the breakout, so you caught a nice little tailwind there. I saw a bunch of your tweets earlier on a few weeks ago where you were commenting overnight that you thought this may have been the end of the run. And sure enough, it's been a struggle since then. Today was a good day, up 4.4%. But it feels like we haven't received everything that the market wanted to receive here. Are you seeing this as an opportunity to buy on dips? Are you looking at a 49.2 IVR here as appealing? How are you approaching the Chinese story now after what's been a really topsy-turvy month of trading?
So my point of view has been, I want to buy this market on dips, but I don't want to necessarily fade it. When this stuff started running, Chinese stocks collectively, like the FXI, I think they had like a forward PE of like 7, something so stupidly cheap. And so while I don't think that the Politburo and I don't think the PBOC has necessarily given the liquidity that the market wants, it seems to be this steady drumbeat, and there seems to be this commitment to additional liquidity. Maybe not some bazooka liquidity function, but one of the reasons you're seeing a little bit of bid in the marketplace today is there was an additional announcement of liquidity functions last night. So my bet is that we don't see a 100% retracement of that move. I think the excess has been taken out of a lot of these Chinese stocks. Alibaba and Baidu are trading right around 100, if not sub 100. I think that's probably the right level. I think vol's still high. Could you see a couple of sessions of price down, vol down? Yeah, I think that's still possible here. I think with any additional disappointments in liquidity functions from China, you get a little downward pressure in the market, but they still have elevated IVs. So I still think there's opportunity to harvest volatility in a lot of these names, and you could see slight price down, vol down for the next couple of weeks out. And normally you don't get the Politburo talking about the economy until December. So the fact that they even talked about this stuff in the middle of the summer, early fall, it was sort of an indication that this is of heightened importance. And so I think we continue to hear more about it, and there's probably a little bit of a floor here. And if not, I'm going to have to come back and wear some pie on my face.
I might be wearing the pie with you. I didn't have any exposure to China directly, except for the long copper position heading into their big stimulus announcements. And I didn't want to chase it to the upside either. That's just not my style. I'm a garbage scalper. So there's no reason for me to even try my hand at it. But when we look at the charts here, one has to think that if this isn't the whatever it takes moment from China, they are probably putting this out here in September so that there's enough runtime before those winter meetings that they can determine whether or not more is necessary. Because now at this meeting, if it's not enough, they can use the plenum, if you will, right? They can use the gathering to do the whatever it takes moment. And that means I think you have to be looking at China as a buy on dips. I don't have any exposure still, but this is a really nice performance today. And perhaps it's reminding everyone that they're not just going to walk away here. There's some vested interest in making sure those asset prices stay higher. And as you know, Vic, they favor political stability above everything else. Vic, we're going to be heading off here soon. But before we do so, it's been another good week for crypto. We're closing up at the weekly highs here. BTC and the X4 contract for the commodity, at least the listed futures rather, 69,410 right now. Is this a liquidity cycle? Does it not matter? Is the volatility high enough right now for you to look to sell any vol, or should we be stepping away from the typical tasty methodology? Don't tell Tom or Tony. We hijack their show and we're going to tell people to go outside the bounds of what's normal. But this looks like it's an upside breakout. Why wouldn't we want long delta exposure here?
So I guess the first question is, would I be harvesting vol on Bitcoin? And I would say no, but mostly because the options are not liquid enough to try to execute that strategy yet. I think when they list the options on the spot ETF, who knows, maybe those will be tighter markets and you can try that. I do think what was interesting, we got long on our show, I think at the end of last week, and the reasoning for that was, I think, around 61,000. The reasoning was there was a massive upside breakout in MSTR, MicroStrategy. And I couldn't understand why there was such a massive premium in MicroStrategy relative to the Bitcoin they held. It was like something like 3 or 4 times premium. And I don't know, we got undisciplined because I think it would have been smarter to wait for it at 57.5. We got a little bit long. And now it just broke up above its range that it was trading in. I wouldn't buy it. I don't know that I'd buy it here on a short-term scalp, but I don't know that we're finished yet. I don't know that we're finished with this rally.
MSTR, MicroStrategy up 11.7% today. Crypto in for about a 2.5% gain, depending upon if you're looking at BTC or ETH. Either way, though, Vic, that's the closing bell. Futures are going to trade for a little while longer here, but we close out the week with a 0.31% gain here in the S&P, about 0.5% higher in the NASDAQ. The Russell's a little bit lower. Bond yields, they are down, but heck, if you're trading silver today, hopefully it was on the long side. Vic, hope you have some good, fun weekend plans. I'm going to a town-sponsored bonfire tomorrow, chili cookout, craft beer festival, all behind the firehouse. It's going to be a great time here in Westchester. I hope you're having a good time still in Chicago. Until then, I will see you on First Call, my friend. Sunday, 6 p.m. Eastern, 5 Central. Be sure to join us. For Victor Jones, I've been Chris Vecchio. Have a nice weekend, folks.
Peace.